conversation. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open. with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it's going to be another rough day. Really, when ships start getting kidnapped on the high seas, you feel like you're in one of those big franchises, Pirates of the Straits of Hormuz. I'm not calling anyone's side a pirate, but it's astonishing and it's a little worrisome because you have a ceasefire, but then you've gone into this absolutely new mode.
Yeah, you have, and it's also very worrying from a whole emerging market pack perspective, because look at what's happening in contrast. US is not getting too impacted because they got Venezuelan oil, even if it's happening at a higher price, and their earnings are galloping. Data compiled by Bloomberg suggests that 80% of the S&P 500 numbers that have come out are beaten estimates. So US is doing just fine, and therefore capital flows out there are moving at a breakneck speed, which is the casualty for the emerging market.
And particularly India, because we're going to have to definitely shore up our inflows of oil, and whether that is from Russia or otherwise in this time.
Yeah, but I believe this is hurting South Korea and some of the others as well, which are as oil dependent as India.
No,
agreed. I'm not discounting that.
One of the ships that was seized and taken to the coast of Iran was a Libyan flag carrying vessel headed to India. So one way or the other, it's almost as if lifeblood is being cut off slowly at one point at a time, which is why if you look at the GIFT Nifty, you're going to see a 200-point downtick, 200-plus point downtick right now. Brent prices are way above the $100 mark, about 102, 103 odd, and that's going to be a pain point through the morning, 103 now on the Brent. What's happened in US markets? Well, they're marching to another beat altogether. And plus, remember, they're responding with a lag to all the news flow. So they rose in trade after an extension of ceasefire in Iran, US war. And you had the S&P 500 and the NASDAQ actually close at new record levels. Futures also didn't change too much after the news has come out. So thereabouts in the same range. The Dow about 0.5% down. Bond yields also stayed steady after the ceasefire extension. The 10-year was at 4.3. Oil prices have spiked after Iran captures 2 ships in the Strait of Hormuz, including a Libyan-flagged vessel headed for India. Brent was at $103 a barrel at last count. Asian markets started off strong, but then have been meandering since. Hang Seng down about 0.5%. Kospi is doing fine. It's India which is possibly going to see a bit of a knock this morning as well, and that's going to be a pain point continuing.
Most certainly. And just before we dwell full tilt there, just a pocket that might be interestingly standing out. We've been speaking about energy and transmission, etc. And speaking of US earnings, look at GE Vernova global numbers. That stock ended up 13% higher on very strong numbers across key segments of turbine and power transmission. In fact, it revised its guidance upwards on margins and free cash flow as well, which indicates that global demand for these products continue to remain strong because of AI, data center, so on and so forth. I guess, guys, that this is one theme that is here to stay globally and arguably locally.
Well, let's hope we have more pockets of positive news, because overall it's looking a little tough this morning. Matt Horton joining in. He's Head of Advisory Solutions and Market Strategy, Chief Market Strategist at Raymond James Investment Management. Matt, very good morning to you. Karan Datta joining in. He's a geopolitical expert. We want to add all perspectives to our conversation this morning. Matt, I'm going to start with you. It's as if there are 2 different worlds if you look at what's happening with US markets and emerging markets, including India. And it depends on which side of the strait you're on.
Yeah, good morning, Tamanna. It's very true. I think the bifurcation that you're seeing take place with respect to global markets really comes down to one theme, and that's artificial intelligence. It's really a continuation of what we've seen last year. And while the earnings growth in the US has certainly been very, very strong, and we've really had financial companies largely be the reporters up until this week, where we have the likes of GE Vernova, Vertiv, some other AI-type names. A lot of the strength that we're seeing, not just in the US, but globally, take a look at Korea, SK Hynix numbers coming out this morning, incredibly strong. That is the tale of 2 cities of the world right now, because a lot of this AI build out and the CapEx is insulated from the geopolitical conflict that we have going around the world. And if anything, the need for behind the meter power, for additional power supply sources, that's accelerated because of what's happening in the Middle East. So you're seeing beneficiaries on one hand, and then a number of other countries that are less energy independent. That's where the bigger challenges are going to be. And that's that's where I think there's hesitancy with respect to investors to see how that might feed into inflation, how that might impact the consumer. And those are some of the bigger questions I have with respect to India right now, is really how does inflation feed into consumption, which is a huge part of the overall economy.
In the near term, though, everything hinges on what happens in those talks that haven't yet happened, and nobody knows when they're going to happen. Karan, that's the big question, isn't it? Because it seems like the US has gone back from a military action to a siege kind of a scenario where they're controlling this entire conflict through the economic route once again. So what is the end goal, and when do those talks happen? Where do we see progress?
Yeah, I don't think we know.
Sorry, Matt, that question was for Karan Datta, our geopolitical expert this morning.
Thanks for having me over, Alex. So you're right. The word for this is siege, and it's very well thought through. The siege is not something which is random, because we must realize that Iranians now have oil that is in oversupply, which basically means that storage tanks are filling up in Iran. And perhaps in about 2 weeks, they have to take a decision whether they want to listen to the American negotiations or reach a stage where they have to shut down their oil fields, because beyond a point, the storage tanks will be running full. The implication is that if you shut down the oil rigs, you cannot start them back again. And I just want to put this out for the audience out there that the Iranians depend on oil. At about 25% of the GDP depends on oil. 60% of government revenues depend on oil. And 90% of their trade is in oil. So it's a very, very tough situation for the Iranians. And time is in the, I would say, in the advantage of the Americans, because their negotiations are on the premise that at some stage the Iranians will have to take the negotiations ahead.
Karan, good morning. And interestingly, we had a guest yesterday who mentioned that he thought, he's a global APAC head of UBS, who said that he thought that it's about 2 weeks from now where he believes the conflict could see some material end, because both sides wouldn't want this to continue. Are you in that camp too, based on your studies, that the conflict is closer to the end than to an indefinite stay?
Totally, Neeraj. I'm absolutely in the camp. In fact, 15 days, about 18, 20 days ahead of time, I've been saying that ceasefire is on the cards. I do think all objectives of the war have been met. Palantir, which is a listed organization in the US, has been identifying targets of what to hit, and they've run out of targets. They've kind of hit 9,000 targets. Just to give the audience a flavor, manual targeting used to be about 50 targets a day. Palantir has taken it to about 9,000. So you can see that there's also nothing much left to hit for the Americans or the Israelis. For all practical purposes, we are nearing the end of the war. There is no doubt about it. But the economic ramifications may take a little bit more time for it to play out, because you can see that clearly there are ramifications for Asia and especially for India. But I am certainly in the camp that we are definitely de-escalating. The war's coming to an end as we understand kinetic war to be.
That's a great point, Karan, but I'm going to ask you this and then take this view across to Matt as well. The war coming to an end, targets being hit or not in Iran is one part of it. That's what's happening on ground. From an Indian perspective, or from the rest of the world perspective, all that matters is whether the strait is open or closed, whether ships are going through or are they not. And the fact is that whatever level of de-escalation or end of the war we are at, it's worse than it was even 10 days ago. Before the ceasefire, at least Iran was guiding ships through. Right now, it's jammed at all ends. Isn't that a worst case scenario playing out? And is there any way that we can see a normalization of traffic in the Strait of Hormuz, which frankly is the key indicator for the rest of the world who's not involved in this war?
Yeah. So Tamanna, I'll just kind of explain what the blockades are all about so that it's a little clearer. The American blockade is very, very specific. They are not allowing Iranian ships to leave Iranian ports. It's not as if they've blocked the entire Hormuz for any passenger or container ship to pass through. That's not their objective. As far as the Iranians are concerned, they are not allowing any American or Israeli ships to pass through. So let there be a very clear distinction. The reason
In that case, how many ships are passing through? You look at
No,
the
so
latest data. People may claim anything, but you look at the late data, nothing is moving through.
there's a reason for that, Tamanna. What
Yeah,
is happening-
yeah, that's simply the point. That's what matters at the end of the day, isn't it?
Sure. And I'm coming to that. What has happened is that a majority of the ships, over 200 ships, have been rerouted. They're now using the Cape of Good Hope and they're reaching American ports. And a lot of the American ports are now supplying oil and gas to the rest of the world. So there is a rerouting. So you have to make the distinction between oil and commodities in general. So commodities in general are still stuck at Hormuz, but oil and gas, the rerouting is already taking place. About 210 ships are now passing through Gulf of Mexico or Gulf of America, as you would like to call it. And the rerouting is real.
Real, but it is, frankly, it is the worst case scenario from India, right? You don't want to pay more to reroute. It's working great if, this was an American news channel and we're like, wow, okay, American ports are getting ships, but it's not. So, okay, I want to get Matt into this debate that we're having this morning, because frankly, we're seeing it from our perspective. And it's great if 200, I want to get Matt in. I want to get Matt in on this. We're seeing, there may be ships being rerouted from Cape of Good Hope, but when we're speaking to exporters there, they're saying that's 2-3x our freight.
Sorry, let Matt finish and then I'll explain the other part.
Yeah, so there's a number of things that are happening. Obviously, the rerouting of ships, number one, can only solve so much of a bottleneck because you have a number of ships that are still stuck in the Persian Gulf that cannot actually get out of the strait. And obviously, the biggest challenge that a lot of shippers are facing is just no one wants to lose life or take the risk of moving a ship through. And so while the strait might technically be open, it's really effectively closed for all intents and purposes just because no one wants to actually move through. That being said, when you look from an investment perspective, which is how I take this, because I rely on Karan and others from a geopolitical perspective to help understand what's happening. But as I look from an investing side, while a number of emerging markets are negatively impacted, anyone who is more dependent upon energy is going to be more negatively impacted. There's still opportunities within the overall market. So the US market is clearly the strongest because it has the largest read-through to other areas like artificial intelligence. That's also why Taiwan and South Korea have been able to stave off some issues. But even when you look in India, for example, while there's challenges in the IT sector, still earnings haven't been fantastic. You've seen strength and resiliency on the part of financial companies. The earnings from ICICI, HDFC, Yes Bank, those are definitely encouraging and I think signal an overreaction to negative news. You've seen stocks like L&T rebound because they can be involved in the rebuilding of infrastructure in the Gulf, as well as potentially rebuilding new energy infrastructure in India. You look at like an Adani Ports, for example, which has been a name I've added to on a lot of weakness. A lot of their ports are moving kind of from India out to Asia, and it's not just associated with energy. So there's lots of things investors can do beneath the surface to try and hide out a little bit until we have more clarity with respect to where we go.
Matt, just one quick question. US is not bothered by the oil unavailability because they have Venezuelan oil and their earnings are red hot smoking right now. Would capital, until the clarity emerges, continue to move westwards? And is that advantage US therefore?
It is. It's advantage US, and I think that's going to continue until there's clarity with respect to geopolitics. Investors still want to diversify, though. So I think once you get a sense that this conflict is ending and you know how much damage that the higher prices of energy are going to have on some of these emerging markets and what the duration is going to be, I think you'll start to see capital move relatively quickly back into some of those markets. So you don't want to be completely out. You just want to bide your time and lean into markets like the US, where you can feel much more confident about preservation of capital and making money.
Okay. Karan, we're actually out of time, but you wanted to make your point, so I'm going to throw it back to you, but please do make it quick.
No, very quickly, Alex, the point I was trying to make is that clearly there is a negative impact for India. There's no doubt about it. But we're also finding solutions. I think that's the point I was trying to make. We've gone back to Russian supplies. We've also, like I said, rerouting of ships has already started, and we are importing from America. Angola has now become a supplier to us for LNG. That was never something that was part of our strategic reserves. So there is a diversification happening. The point I'm just trying to end with is that I do think we're the closure of the war is nearer. It will take 2 to 3 months for this to settle down. This is a rough period, but I would think that we're entering a peaceful, prosperous era, and I would think Indian capital markets would kind of reflect the same. I'm reasonably positive on that.
All right. On that note, gentlemen, thanks so much for taking the time. Karan, Matt, pleasure speaking with you. Well, whether that prediction on 2 to 3 months pans out or not, you have to look at trade this morning and try and figure out what you're going to do. And to that end, let's set the context by talking about what happened yesterday. IT's plunge pushed the benchmark Nifty 50 lower by as much as 0.8%. HCL Tech's disappointing results led to a 3.9% drop at the index level. Of course, at the individual stock level, it was heavier for HCL Tech and a couple of others. Heavy selling was concentrated, though, in the large cap pack. You had the benchmark Nifty 50 that broke a 3-day gaining streak, and both foreign institutions as well as domestic institutions on a net basis were sellers in Indian equities. The top losers, and pull up those stocks: HCL Tech, Infosys, Mahindra & Mahindra, Tata Consultancy Services, and Tech Mahindra. So apart from one, it was a bevy of IT stocks that were losing ground, but there were still 20 gainers on the Nifty 50, and a couple of those were from the consumption pack. That's been doing particularly well. The broader markets outperformed, ended in the green, the mid-cap index gaining 0.2%, small-cap index ending higher by as much as 1%, and the breadth was positive at the end. Even the Nifty Next 50 gained 0.7%, which, as you know, is a large-cap gauge. FMCG stocks led from the front, and they were accompanied by realty stocks. Private banks, on the other end of the spectrum, underperformed on account of profit-taking in all probability. HDFC Bank and ICICI Bank both dropping by as much as 1.5%. And key gainers, I'll just leave you with a few names. Amara Raja Batteries, Exide were in focus on account of a capacity that is expected to be created based on reports. Irida was one that stood out. Data Patterns, Elecon Engineering among the winners. On the losers, you had the accident of the day, or at least one of them, Tarrell, which we spoke about at the start, Tata Elxsi, 361 and Persistent Systems, all reacting for good reason.
Most certainly for good reason. I mean, today we know that the markets are going to start off lower. I mean, the Asian scene, Kospi notwithstanding, but more importantly, oil prices, the way they have risen, will mean that we'll have a bit of a shock on open. So that's no surprise. I wonder if tech weakness could get punctuated today as well. There are both positives and negatives there, but in general, the commentary from IT majors isn't sounding necessarily very comforting, if you will. So let's wait and watch there, but focus on individual pockets. So while Mumbai and maybe 19 out of the 20 cities are amongst the hottest cities around, and therefore it will naturally make you believe that cooling solution products will do well. I think Havells saying that cooling products summer demand was weak through Q4 and early April channel inventories are elevated leads you to believe that maybe, just maybe, the primary sales may not be very, very good for cooling solutions products as well. So that's the negative. On the positive side, from a sector perspective, watch out for chemicals. And some of the end product prices moving up are actually doing well. Now, we made this point 2 days ago. I just want to reiterate the kind of price action that we started to see already. In 2 days, Deepak Nitrite, which was at 1529, is at 1739. That's about a 13.73% return. Aarti Industries was at 446 at 475.5. Alkylamines 1407 to 1481, 5.25%. These are just 3 of the sample size, but the point I'm trying to make is this was a bucket or a cohort of stocks that was just not moving for the right reasons. They are starting to move. Is there something out there which could be looking positive? Keep these stocks on your radar as well, but be very selective, because here the bottom-up story is very, very alive. What is true for one chemical company may not be true for the other, so do your own research properly.
All right. In terms of factors, I'm going to start with this BOFA note, and it's a little more negative than what Karan Datta, for example, was sounding, they've reiterated cautiousness on a valuation-led rally, because that's what we've been seeing, right? Money managers looking at various companies and saying, okay, valuations are looking decent. But here's what BofA says. Capital goods stocks are now trading close to an upcycle valuation despite mid-cycle earnings growth. Believe these stocks could correct meaningfully on any potential sell-off in the broader market. Reiterate non-consensus cautious view on capital goods sector. They estimate a 10% capex CAGR over FY26 to 28 versus the consensus estimate of 15% CAGR. Believe the street is underestimating the indirect fallout from the Iran conflict across private sector, central government and state government capex. I thought this was important, that even if things cool off very quickly from here on, and that's a best case optimistic scenario, the damage that has been done will still play out. So this is the case that BofA makes. A slowing capex cycle will see multiple downside risks ahead. Given stretched valuations and risks to earnings growth, they remain cautious with 5 of 6 industrial stocks rated underperform. They continue to see select opportunities in pockets like power, that's transformers, wires and cables, data centers, that's gensets, shipbuilding and defense. So the setup for today, a cautious consolidation is how I would describe it for the Nifty. The index is now navigating a complex grid of domestic earnings and global energy risks. Analysts see the current dip as profit booking, not a reversal. The Nifty is caught between its 50-day EMA, that's 24,220, as support, and the 200-day EMA, 24,820, as the ultimate resistance. The zone between 24,100 and 24,200 is the demand zone. If the index slips here, it may attract fresh buyers. Conversely, do not chase longs unless the Nifty sustains above 24,500. Now, while IT dragged the Nifty, the Bank Nifty showed resilience by staying above its 100 and 200-day EMAs, resistance at 57,500 to 57,600. A breakout here targets 58,000 to 58,400, supports at 56,600 and 56,500. Now, let me go across to Puneet for the derivative setup this morning.
Well, thanks so much for that. It's going to be a very important and interesting day yet again today, because as you rightly said, banking did hold up the Nifty yesterday, but largely IT a big drag, around a 240-point downtick. Currently, we will break the 24,200 support level, and then 24,000 continues to be an important mark. But it's a make or break day for IT in that sense. While Tech Mahindra did have a strong order book, profits were down, and the target for FY27 is more on individual belief now at this point of time. In terms of the EBIT margin target is what I'm talking about. So it's a crucial day for tech. Infi results coming today as well. So I think that cohort will be volatile in today's trading session, while not so much in terms of buying at the bottom end could be visible as something to watch for. In terms of the Bank Nifty as well, continuing to monitor Bank Nifty, and in terms of 57,200 as a key level, not too many supports below that as well. So going into the weekend with Axis Bank earnings, this index will continue to be in focus. Selling yet again in the cash market, but move on to the index long, which has been very stable for foreign investors between that 20 to 22% mark. And the put call ratio also very stable compared to yesterday as well, where it was trading at a similar level. Open interest distribution also is positive, has been holding 24,800 as a mark, with the highest open interest for the calls, while 24,000 for the puts continues to be a key level, with the big green candlestick there visible on your screen right now. And in terms of stocks also, not so much action visible, at least in terms of open interest change. So Tata Elxsi was one where you saw build-up of shorts on the back of weak results as well as impact from HCL Tech. Havells will be in focus yet again today on the back of results, not so strong results again. But in terms of the losers also, you've seen a couple of names only and not too much making way. But IT continues to be one of the major indexes today. It's a make or break essentially at this point of time with what Infosys says in commentary and in numbers as well.
Okay, let's look at specific stocks, because that's where the story is, isn't it? While we try and figure out what's happening geopolitically. I'm going to start off with SBI Life Insurance. And overall, it's a good set of numbers. Thumbs up. compared to its peers as well. So net premium income is up 16% at 27,684 crores. Net profit is down 1.1% at 805 crores. NBP saw better growth than expectations, grew 20% year on year. APE growth witnessed degrowth on the quarter, that's Q on Q, but performed better year on year. VNB has moderated by 2% on both a quarterly and a yearly basis, while VNB margins has seen quite a bit of improvement at 27.5% for FY26. The persistency ratio improves, whereas solvency sees a decline year on year. Par and retail protection segments recorded strong premium growth year on year. Now, what are all these terms actually meaning? NBP is new business premium. That's an important indicator, and that's been positive for the company. Annualized premium equivalent is what APE is. That's also important. It's a way to gauge whether premiums are coming in at the right pace, and VNB's value of new business. That also has been fairly decent, so though there has been a small downtick on the overall figure. Here's what Macquarie is saying on SBI Life. They've maintained an outperform with a target price of 2,360. They say it's a steady performance with core fundamentals intact. VNB, that's value of new business, in line. APE growth moderates but outpaces peers, large peers. VNB margins hit has been minimized by a favorable product mix, and the APE guidance is intact. So all in all, a decent set of numbers. Tata Communications, also a good set of numbers. Revenue was up 9.4% at 6,550 crores. EBITDA up 14.4% at 1,284 crores. Margins were up about 85 basis points at 19.58%. There was a hit on net profit, though, down 74% at 263 crores versus 1,040 crores. But look at what Macquarie says. They've maintained an outperform with a target price of 2,210. They say better growth, margins are mixed. Q4 earnings were below, driven by lower data service profitability and higher tax expense. But they do say that Tata Communications is a marquee buy idea. They see a path for the shares to double over 3 years in a bull case. So if you're looking for ideas from a slightly longer perspective, then maybe this is one that you could look at after doing your own due diligence, of course. The third one I've picked is Unimec Aerospace. I just found this development very interesting and noteworthy. So this company and their subsidiary has announced an acquisition. What's the acquisition? They've signed a definitive agreement to acquire a company called Hobel Bellows. They will acquire 100% of it with 450 crores as cost. Unimec Aerospace and Manufacturing will acquire 24% stake, and its wholly owned arm, Inomec, will acquire the remaining. What are the benefits? Now, this company, Hobel Bellows, is a specialized Indian manufacturer of metallic bellows, flexible tubing components, and precision engineered assemblies. 90% of its business is export-oriented. It serves UK, USA, Singapore, and China companies in these regions. It expands beyond precision components into higher valued engineered assemblies and subsystems. It, of course, increases wallet share with existing OEMs as well. So that's why this one could be an interesting one to look at, and maybe you'll see some impact today.
It was in focus yesterday as well, up over 5%. Trent is on top of my list, and we're going to talk about what brokerages have made of it in just a bit, so I won't get into that, but I will take you through what the numbers look like, and they were strong across the board, especially when you compare it to what was being penciled in by the street. It's a beat on revenue, EBITDA, margins, and PAT, so it's an across the board beat. It saw strong revenue growth along with margin expansion. Emerging categories like beauty and footwear now contribute over 21% of the revenue, and you had Westside's online sales that saw 25% year-on-year growth. A couple of flies in the ointment, though. And one potential fly that will get into the ointment down the line, which is something that might be a problem. Like-for-like sales growth reported in low single digits. The other aspect is that the stock is up over 30% in April. So how much is already in the price? There was corporate action that was also announced along expected lines, declared a bonus issue for 1:2 for existing shareholders, also approved raising of 2,500 crore rupees through a rights issue. and recommended a dividend of 6 rupees per share. Just a snapshot of the numbers: 20% increase in revenue, EBITDA a growth of 40%, looking very, very strong. Margins at 18.6%, much better than expected, and a significant expansion on a year-on-year basis, all led to a 30% improvement in the PAT. We'll talk about some of the finer details and what came through from the management commentary, which was critical on the path ahead. We'll have that in just a short while. But let's talk about earnings beyond that, and Oracle Financial Services stood out. At a time when several IT companies are looking at a question with regard to their performance, the metrics on the bottom line side were actually very good for Oracle Financial Services. So you had sharp margin improvement that aided the bottom line growth. Revenue uptick of 5% was possibly aided by the currency. The remaining performance obligations, which is essentially what is carried forward, the pending revenue, which has not been booked in a quarter, has increased as much as 9.2% in the fourth quarter, which bodes well for the path ahead as well. So therefore, take a look at the EBIT margin number, which comes in at 50.4% compared with 40.9%, and that has led to a net profit uptick of as much as 38%. Remember, this is essentially what we're talking about is a quarter-on-quarter change. Shadowfax is the third stock. It's just a quick update. It's essentially a 3-month lock-in ending, so 35 million shares or 6% of the outstanding shares will exit lock-in. That supply could lead to a little pressure on the downside.
Okay, very quickly, 3 sets of stocks from my end. The first one is LTTS, and the numbers you could argue were maybe a miss or maybe largely in line. Revenue declined about 1.1% constant currency, which for a lot of brokerages was in line with their estimates. The adjusted EBIT margin expanded about 40 basis points quarter on quarter to 15.2%. I think most people believe that improving outlook in North American mobility could actually support near-term growth. The problem is that because they've divested one of the acquisitions that they had done, their EPS estimates come off. Of course, the rupee depreciating helps the EPS. This impacts the EPS. So most brokerages have cut the EPS by about 4 to 5%. For FY27. The company said that calendar year 26 macro improvement is supporting the pipeline conversion. They have had 6 consecutive quarters averaging $200 million TCV, which is actually quite stunning. And they are aspiring to have a $300 million run rate soon. And they have pulled the margin target higher to mid 16% by quarter 427 or earlier. My guess is that quite unlike OFSS, this may not have as strong a reaction, but could be interesting. The management joins in at 11:05 a.m. You might want to tune in for that. So that's LTTS. Gujarat Gas is in focus. More than 7 MMSCMD of gas contracts have been signed by Morbi factories for the month of May with Gujarat Gas as per sources. Now, why is this important? Because remember, in Jan 2026, Morbi gas volumes stood at just about 2.2 MMSCMD. So clearly some bit of upticks there, so keep in mind. For the third set of stocks, let's not put out the graphics. There's a small error there. But keep in mind, stocks like IOC, Praj Industries or the sugar stocks will be in focus because of the SAF blending in ATF or aviation turbine fuel is allowed now. We're going to have a detailed conversation on that, so I won't get into too much detail. But remember, effectively what this move could do is promote more higher manufacture of ethanol, which may be beneficial for everybody in this ecosystem. Separately, Balrampur Chini has a board meet today for a preferential placement, if I'm not wrong. And apparently the promoters are going to participate in that, reinstating confidence. So that stock, which has had a really good run, by the way, I think not just yesterday, look at the last few days, Balrampur Chini has been on a bit of a roll. So watch out for some of these sugar names. Could be very interesting to see how they do today. Watch out for Praj as well, right out there on the technology when it comes to any kind of sustainable fuel. So some of the names to keep on your mind.
Absolutely. Let's talk about Trent in a little more detail. We promised you that we would talk about the details, and brokerages have weighed in based on what the management has also said in its commentary. We've got Mahima joining in to tell you about what these brokerages are talking about. Mahima?
Right, so Alex, so most of these brokerages, have gone ahead and hiked the target price for Trent a tad bit, but have largely maintained their ratings as a whole. I'll start with Morgan Stanley. They've maintained overweight with a target price of 4835. What they're saying is that strategy remains intact to drive share of revenue in proximate markets. Citi has maintained sell but hiked the target price to 4100. They're saying that overall strong execution has taken place, but margin sustainability is at risk. This is because of the management commentary coming in with regards to raw material cost inflation because of the West Asia conflict. They believe that gross margin largely benefited from inventory provisioning, and they continue to like Trent's business model. Jefferies has also maintained hold but hiked the target price to 4675. They're saying that overall Q4 was a strong beat. Reported strong growth of Q4 helped by store expansion as well as expansion in terms of like-for-like growth. Operating leverage benefits along with self-help measures drove 40% EBITDA growth, and commentary seemed cautious on near-term demand due to geopolitical uncertainty. What they've said is that Trent continues to stay focused on densifying key markets and expanding further into small cities, and that is something that they're liking. So this is the overall view of what brokerages are making of Trent earnings.
Thanks so much, Mahima, for that. Mayuresh Joshi, Head of Research at MarketSmith India, joining us now to talk about Trent. Mayuresh, as always, thanks so much for taking the time. Good morning to you. The stock is up 30% in April so far, possibly on account of excitement of that corporate action that it announced and a stellar set of numbers. The only question is that in the price? And is there going to be a question mark about the path ahead in FY27, as the management has highlighted themselves?
Morning, Alex. I think two things. One, I think purely from a Q4 perspective, I think it was a solid operational performance, no two ways about it. The expectations in terms of EBITDA margins much better that the company has probably delivered than a large part of the analyst pool that believed that margins would be relatively lower. The second element obviously is in terms of the online presence as far as West Side revenues are concerned. And beauty, footwear, innerwear contributing 21% of the overall margins. Obviously, I think the store expansions, which have happened on a fast-track basis, they're now having in excess of 1,200 odd stores, 300 West Side stores, in excess of 900 Zudio stores. And a large part of these expansions are probably happening in Tier 2, Tier 3 cities. And therefore, from a results perspective, I think it's purely a solid operation performance. However, as Mahima just pointed out, I think 2-3 risk factors for Trent at play. One, in terms of input cost inflation for raw materials actually going higher because of the West Asian crisis, crude derivative prices, packaging prices going higher will definitely mean that margins will come under some sort of pressure as we head into Q1. The second element is the expansion that is probably happening for Zudio, as I mentioned, in Tier 2, Tier 3, and they're also looking at micro markets. I think if demand falls off, you've already received the first estimates of monsoons expected to be below par. I hope that does not happen, but in case it does happen, I think incremental demand might just start coming off, and micro markets, Tier 2, Tier 3 cities are the ones that get impacted the most, and therefore what kind of a demand dynamic situation will play out is to be seen. The third, in terms rights issue and the expansion plans thereof, as far as the Star Bazaar format is concerned. You all know that the Star Bazaar format is a far lesser margin business compared to West Side and Zudio. And if there is an aggressive rollout in terms of the Star Bazaar format, the store maturity takes time and the margin profile takes a hit. And therefore, I think a few of these risk factors which will come into play as far as Trent is concerned in the next few quarters.
It's a call, Mayuresh, and you've summed it up beautifully. I think anybody who's looking for a view on Trent has gotten the holistic picture. But ultimately, if you don't have it, do you venture out and try to get it? Because it's at 90 times trailing right now.
It is still expensive, Alex, and that's the whole point, right? I think if the earnings don't come, I think the management alluded to the fact to grow at 25% in FY26 over 25, they've actually grown 18%. So I think if you make a base case scenario of 2021, I mean, if they grow at 21% over the next 2 to 3 years, they're still trading at 60 times FY27, FY28 exit, and it's not cheap. And therefore, our own sense is that anybody holding can hold on to Trent at this juncture. But better entry point would obviously be declines on this stuff.
All right, on that note, Mayuresh, thanks so much for taking the time. Pleasure having you as always.
Thank you.
We'll just slip into a very quick break. On the other side, we'll get you trading strategies and a view on the IT pack. Of course, there's more incremental information that has come through in the form of new results. We'll unpack that for you on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means. Welcome back. You're watching India Market Open. The Gift Nifty will still show you a downtake. Crude is still at 103 or 102 thereabout. So not a great picture this morning, this Thursday morning. But is this more profit booking than a reaction to what has been happening geopolitically? I suppose that's the key question. Kush Bohra and Parag Thakkar in our studios this morning, as always. Parag Thakkar, I'm going to come to you first on this. That what we're seeing from the last couple of days, and I'm including today, you'll also see a downtake and yesterday. Is it a bit of cooling off rather than fears of this whole situation escalating once again?
So basically, when market sees crude above 100, definitely there is a reason to worry, right? And plus the Strait of Hormuz not getting solved, and so availability of LPG and oil also becoming so we'll have some stock of say 40-45 days. But if this blockade continues for long, and if ships are not allowed to pass through Strait of Hormuz for long, then it can be a bad situation, right? So that's why I think seeing oil at a higher price and seeing that Strait of Hormuz is not getting resolved, I think that is worrying the markets.
So what is the fundamental factor that investors should look at right now? Should they start looking at results, how companies are performing, and base their investment decisions on those parameters, or look at what's happening globally?
No. So the point is that, see, one has to take a call that at some point this will get resolved. Some point it will get resolved, and so you have to keep buying good quality companies who are reporting good numbers, giving good commentary, available at reasonable valuations. When they fall like today's day, right? So, for example, we have seen good results from many companies, like
Trent. You like Trent?
Yeah, but Trent, it is little bit far-stretched expensive in my view. For 20% growth to pay 60p or 38 times EBITDA is slightly expensive, especially in a scenario where management has also said that this gross margin expansion which has happened in this quarter might get affected because of this West Asia conflict.
That's the point. All your Q4 results that we're seeing doesn't still price in what's happening right now.
Correct. So that's what I said, that it has to be bought at a reasonable valuation also.
Also, you've just seen the first half of the earnings season. Typically in India, the first half turns out to be very good. The second half is when the demons come out of the closet. So
there are a few demons here in the first half also.
There were. HCL Tech, unfortunately. But actually, that leads me to that. And Kush, we'll just come to you. But Parag bhai, just on IT as well, right? The telltale signs of the commentary is not necessarily the most constructive, right?
Yeah.
So there has been a large gash in IT names. HCL Tech, for example. Do you use these dips to buy them, or do you stay away for the time being?
No, so I'm clearly awaiting for Infosys results today. What Infosys says is very important. See, TechM margin expansion was it's excellent job done by Mohit. What he promised, he has delivered on margin side in spite of tough macro environment.
It was easy. I mean, there are such low margins that the trajectory was
but the business is not growing at that strength. So in spite of not having that operating leverage to deliver on margins was a good thing. But Tech Mahindra, again, the problem is that if you compare it with Infosys, Tech Mahindra is expensive. So your 15% margin, which is guided for next year, is already priced in the stock.
Yeah. That's true. That is so true. Okay, so you will wait for Infosys, then decide if you want to buy IT. Okay, Kush Bohra. मार्केट्स पे कुछ बताइए, आईटी पे कुछ बताइए।
नहीं, आईटी तो छोड़ दो फिलहाल के लिए। मतलब जो अच्छे लग रहे थे वो भी इतना ज्यादा गिरे हैं कि अब क्या ही अच्छे लगेंगे। So we spoke about Mphasis, Tech Mahindra yesterday, right? I mean, even they took a knock. So even the strongholds per se are taking a knock. So I don't think it's a sector that you want to trade in at least. जहाँ पे आपको value लगे, of course, as Parag bhai is suggesting, आप कर सकते हो अपने रिसर्च पे बाय, बट ट्रेडिंग के हिसाब से फिलहाल नहीं बनता है. बट आई थिंक व्हाट्स हैपनिंग इन द मार्केट इज एक्चुअली वेरी हेल्दी. समथिंग व्हाट तमन्ना रेफर्ड टू, दिस इज अ हेल्दी रिट्रेसमेंट, दिस इज प्रॉफिट बुकिंग. अगर 2-3 हफ्ते में मार्केट 10% चल गया तो कपल ऑफ परसेंटेज पॉइंट्स ऑफ पुल बैक इज नॉट अ बैड साइन. Also, if IT is seeing a sell-off and banking is seeing a profit booking, there is no chance that the index is going to end higher, right? This is also corroborated by the fact that the FIs and DIIs both were sellers in the cash segment. So yes, some money being taken off the table, but I see this as a slight positive, which is the excessives that were built in over the last 2.5 weeks are being cooled off a little. PCR for Nifty at one point was 1.3. Now it's at a neutral zone of 1. Also the stochastics. I'm sorry, the stochastics were overheated. Abhi bhi hain, but thoda sa cool off ho rahe hain.
What was overheated?
Stochastics.
Can you explain what is stochastics?
It is a reading which gives you a very near-term texture of the market. So RSI, for example, is at 60. अब वो build होते होते होगा. Stochastics are something more near term. So that is still overheated जहाँ RSI neutral territory में है. So again, just to get the texture of the medium term perspective and a very near term perspective. So,
stochastics बोलते बोलते आपका गला ही खराब हो गया. So I was like, what is stochastics?
So yeah, no, so those are still overheated, but cooling off just a bit. So I take this as a positive. Nifty is now approaching the 24,000, 24,200 support zone. This is typically a buying zone, and the buy on dips texture is still intact. But as I always suggest, a smarter entry point, a smarter way to approach this is to buy the rebound and not the dip itself, because you don't know how long this will extend, right? So 24,000, 24,200, that's the support zone you could consider buying. Bank Nifty, interestingly placed, that 57,000, 57,300 resistance zone. A lot of technical resistance parameters come there. You're seeing profit booking from there. If it does come close to the 55,500 mark, then it becomes an interesting buy.
Individual stocks?
All three of them on the long side, and then I have a few updates today as well. Phoenix Mills, Granules, and RK Forging. So I've spoken about how within the realty space, Phoenix Mills is a standout that continues to outperform. Yesterday there was some consolidation, but in a market like this, you take that. So targets of 1855, 1900, 1775 is your stop loss. Granules, very healthy up move even through the war. It's been doing well. Even now the volumes are fairly healthy. 690, 707 are your targets. 656 is where you keep that stop loss. And RK Forging, slight consolidation, but with a positive bias and a healthy uptick in volumes. So RK Forgings for targets of 565 and 580 with a stop loss at the 580 mark. Now a quick
stop loss 540.
Sorry, my bad, 540. And now just a couple of quick updates. ABB, the weekly pick that we discussed just on Monday, has done phenomenally well. Target 1, target 2 both achieved. If you are holding it, I would suggest partial profit booking, but continue to hold, say, about 50% of your position with trailing stop losses. Deepak Nitrite, I think Neeraj mentioned that, as one of the top performers in that chemical space, was a call, has done phenomenally well. Same view. The reason I'm suggesting a partial profit book and holding, because these stocks that have momentum will continue to do well, because the stocks aren't seeing that big a knockoff. And lastly, Data Patterns is a stock that we discussed yesterday. It moved up about 10%. So here too, if you have a position, book partial profits, continue to hold the rest.
I want to actually run through the list of stocks that have gained 30% in April and ask Kush whether he should take money off the table. We'll do that in a bit. But it's now time to talk about the IT companies that have posted numbers, right? L&T Tech as well as Tech Mahindra. We are going to be speaking to Manav Medewala of Mirae Asset Sharekhan to get a sense of how these stack up with regard to the IT pack as a whole. But before we do, let's set the context with Puneet. Puneet, what are brokerages saying broadly about these two results?
Well, thank you for that. Well, the focus continues to be on three key parameters, at least for Tech Mahindra, where the focus is largely being on the strong order book in this particular quarter, but the profits have missed the estimates as well, and the larger 15% EBIT margin target for FY27. Now, someone like Citi continues to maintain a sell on Tech Mahindra with a target price of 1,275 rupees per share. They've highlighted that the company has been executed well in a tough industry environment, but the valuations currently price in all of those positives. Jefferies also maintains an underperformed rating with a target price of 1,225, slightly increased from 1,180. And two key points that are made, that they've raised their the EPS estimates largely on the back of the rupee depreciation rather than any change in operational parameters, and specific deal wins called out as well. But a 16% premium to what Tech Mahindra trades to Infosys limits the upside is what they highlighted. And Nuvama also had a very interesting take that the 15% EBIT margin target, while already priced in, something that Parag Bhai also highlighted, their own estimate is only 14.5% margins, because they ended FY26 with at 12.8. So there's still some way to go from that target of 15%, and hence limited upside. For L&T Tech as well, it's been a decent quarter for the company at this point of time. Brokerages have also largely maintained their existing view as well. So Nomura and amongst JP Morgan and ICICI Securities don't see too much upside from here, but the view remains neutral to hold at this point of time for L&T Tech as well. But a lot more to talk about amongst these, but with only Tech Mahindra being the margin expansion story being priced in, upside could be limited for both of those counters.
And the valuation discomfort maybe for Tech Mahindra relative to some of the others. Thanks, Puneet, for that. Manav Medewala, who's the research analyst at Mirae Asset Sharekhan, with us on the show. Manav, good having you. Thanks for joining in. Let's start with maybe LTTS. And the delivery, even though it was minus 1% in constant currency, was likely in line with estimates. But they've discontinued guidance for a particular year. They've given that 5-year guidance. They've maintained the run rate on the TCV as well. Is all of that positive, or at 25 times, 26 times, you want to take money off the table?
See, the results were pretty much in line with what we estimated, and given the valuation run that has happened in the last 1 month, so there is not much of a lever in terms of valuation post the AI disruption, right? So the whole PE cycle has kind of changed now. So giving a multiple of more than 25, 26 doesn't make any sense, right? So for the LTTS counter, it's more or less going to be a hold with not much of an upside on the stock left.
Manav, hi, good morning. What did you make of TechM from light of the commentary that has come from the management? Because this whole IT result season so far, commentary has become as important, if not more important, than the actual numbers as well. Are they sounding more confident in terms of outlook to you in relative terms?
When compared with Wipro and HCL Tech, yes, Tech Mahindra sounded much more confident with its operations and margins and deal wins being the key metric. But given everything, margins are already baked in. So now what's going to be left is how are they able to, monetize the how are they going to monetize the deal wins into tangible revenue, given the $500 million deal that they acquired, that they got in Q3, and the Orange business deal, right? So it all boils down to how they are able to convert it into revenue.
Okay, what would be your top IT pick right now with the information we have so far, and what are you assessing for Infosys, which will be out later today?
So when it comes to Infosys, so again, the main thing would be again the deal win. The second would be the guidance, and the third would be the commentary around AI and anything AI deflation, right? So we are expecting 1.5 to 4% in terms of constant currency for FY27. Anything below that would be a major trigger point for the entire IT sector, given how we saw it for HCL Tech. So these three things are utmost important.
Manav Medewala there for his assessment on the IT pack. But I want to talk a bit about Havells. Now, Havells, the first look at Havells numbers looked very promising yesterday. You saw that big bounce up in the stock and then pared down very quickly. A few notes out this morning, and one pretty negative one, the others are fairly neutral. So Citi says more misses than hits. They've cut the target to 1,500 from 1,600 rupees. They say revenue growth disappointed across all segments. Rising competition intensifies from new entrants in cables and wires is likely to keep margins under pressure. Growth and margin improvement is key for re-rating. Jefferies, meanwhile, has maintained a hold and a target price of 1290, saying cables is the bright spot. Of course, there was higher other income. Sales traction in cables has offset a consumer products decline, but Lloyds has posted an EBIT loss for the fourth quarter. The estimated FY26 to 28 EPS at 20% CAGR, valuations 5% above the 10-year average. Macquarie, meanwhile, has maintained an outperform. They're saying it's a good quarter. Margin has surprised. Macro uncertainty poses growth headwind. Cables continue to lead growth. They like the diversified product mix, strong brand and premium positioning. In the near term, we see growth and margin risks led by macro-driven uncertainty due to the Middle East conflict. So, if you keep the Middle East conflict aside, at least one player or one brokerage Macquarie is positive on Havells. I mean, what do you make of Havells, Parag Bhai?
So the stock has not done anything from last 4-5 years, and this is something which I like. That the stock has not.
You like it's not done anything.
Yeah. I'm a new buyer, na? So how does it matter whether it has not done well or well for 4-5 years?
No, but then,
I am buying after 4-5 years of underperformance. But
how do you know there's not going to be another 4-5 years?
So that leads to analysis. That is our job.
So what is the analysis?
No, so my point is that there is nothing big excitement, because the cable and wire segment is attracting a lot of competition. So there is nothing exciting. Plus Lloyd's, as you highlighted, fourth quarter of EBIT loss. So there is nothing exciting there are many other stocks which has not done well from last 4-5 years, which I feel that can do well over the next 4-5 years. So I would skip it.
Don't you think there would be a reason you haven't touched a particular stock? I'm not talking about XYZ, but a particular stock in 4-5 years. There is a reason. When you see something on a shelf and you keep passing it by, there is a reason.
So because there is no traction. There is no traction in this particular...
Havells is a buy today?
No, I'm not going to buy it.
So. Havells on charts, Kush?
Precisely for that reason, which he considers stocks as a buy, I don't. ठीक है, मतलब 4-5 साल से कुछ नहीं किया तो पहले कुछ कर लेने तो फिर मेरा थियरी वो है. I believe in buying strength. एक बार performance आ गया फिर. So there is a slight positive, I would say, slight positive in the last about 18 to 20 months or so. There was a massive long-term falling trend line resistance which it is trying to break, but it's a conditional buy. 1360, 1380, that's the zone. उसके ऊपर जाता है, sustain करता है और closing देता है. तो कल आपको एक बार के लिए ऊपर का tick दिखा, but didn't sustain there. So if it does close above that, then perhaps you consider, not right now.
Just the question, Kush, though, follow up, because Havells' commentary was so weak on cooling solution products, right? So Blue Star, Voltas, Havells, etc. Are all of them looking under a cloud?
I'm glad that you asked this. The reason is, see, markets are always ahead of us, a lot of steps, right? Just to put in context, railway stocks हमने buy करे थे budget के आसपास, but markets had already reacted a month before the budget announcement. The railway stocks jumped up and then cooled off, correct? अभी हम सोच रहे हैं summer आ रहा है, cooling solutions होगा, buy कर लेते हैं. While there is traction, there isn't enough follow through. So for me, Voltas, Blue Star are not a buy right now. They've done their bit, but they might see some cooling off. just
no pun intended.
No pun. It wasn't intended initially. Now it is. But yeah, they might see some cooling off. I wouldn't buy them now at these levels.
Okay. All right. Soumit Sarkar joining in this morning with all the chatter from the dealing room. Soumit, what do you have for us this morning?
Few stocks that dealers have highlighted. Firstly, it's delivery. Now, there are some sell flows coming in on the large HNI desk in this counter, and this is largely because dealers are indicating that the margins could come in quite weaker for delivery in the fourth quarter. Strong buying action in multiple FMCG names. In fact, the entire FMCG index was up in trade, but few counters that dealers have highlighted is HUL, Varun Beverages and Patanjali. Now, strong buying interest is seen in these names, specifically in the FI desk is what dealers have highlighted. For Eternal, a big renowned PMS has been accumulating this counter in trade. Dealers believe that they are quite bullish on the Blinkit performance in the fourth quarter, and that could be one of the reasons why there has been accumulation in the PMS desk for Eternal. And lastly, when it comes to Jio Finance, there are buy flows on the HNI desk. Dealers believe that the valuations are quite attractive for Jio Finance at this moment. They say that Reliance Industries shares, which are actually owned by Jio Finance, those shares are valued at around 210 rupees. Post that, the street is currently not factoring in the upside that could come in from Jio Finance's own business, and hence there are some buy flows that they're seeing in this counter.
Thanks so much, Soumit, for that. And one of the counters that you highlighted, delivery. I wonder, sell flows on the FII desk, if you have it, does that mean that this is an opportunity to get out?
Yeah, I'm glad that, by discussing this, because हम हर बार उन्हीं स्टॉक्स की बात कर रहे हैं जहां पे अच्छा मूव आया है, 10% हिट हुआ है, टारगेटेड मार्केट है. stop losses bhi hit honge, and delivery is one such candidate. Yesterday it was a call, it went down, hit the stop loss. So my suggestion, and one of the reasons why we don't typically highlight this, is because agar niche chala gaya hai, the assumption is that you will exit at stop loss. So delivery right now, there is some selling pressure as confirmed by Somit as well. So I would suggest if you are holding it, stop loss trigger hoga. In fact, 462 was the stop loss, very close to that level. At open, it's a good idea to exit at the stop loss level if you haven't already.
Okay. Well, about time. 2 minutes left for the markets to kickstart trade. We spoke about a clutch of names. There is some very interesting developments that are happening on the ethanol side as well, which we spoke about. So keep that at the back of your mind. But amongst other things, Parag bhai, fundamentally, when one looks at some of the other newsmakers in the session today on results or otherwise, you've been bullish on steel. I think the notes that are coming out this morning is that for some of the stocks, the cycle may peak in Q1 and you want to take some money off the table right now when the bad news is not out. Is that a fair thing to do, or would you stay bullish on steel names?
So basically, I hold JSW Steel in the portfolio and I continue to like it because of the structural things also, apart from this typical cyclical move.
So that's not a tactical trade?
It's not a tactical trade. It's because they are continuously expanding capacities. Now they have got very good money, so the net debt to EBITDA is reduced, which has given them more space to expand. So
what about the others, Parag bhai? Let's say Jindal Steel, I'm seeing a note today which says that they are downgrading it to a reduce because
the stock has rallied. The stock has rallied a lot, and they might be thinking that profitability might be at the peak, which can be the. But I think right now there is no such case. But right now there can be a pressure in the economy due to this high energy prices and all, which might lead to some sort of price reductions in steels also going ahead. Right now that is not happening.
Got it.
On the technicals, the metal pack off and on has spurts, right? Would you buy into that? You've been cautious on that space because of the kind of volatility it's described, right?
Yeah, metals is not for the faint-hearted. I mean, you have very, very volatile moves on some of these names. So I have been constructive on Jindal Steel, by the way, in the past, Tata Steel, JSW Steel also. But just if I look at the last couple of days movement, very interesting setup here in the sense that JSW and Jindal on the downside have had an uptick in volumes. Tata Steel, even though positive, the volumes are cooling off. So maybe there is some money being taken off the table. If that's the case, right, I would continue to hold Jindal Steel with a stop loss around the 1250 mark. But the aluminium space, the Nalcos and the Hindalcos of the world, still pretty healthy, still in an uptrend. I would, again, put a hold on it because the breakthrough is in there. So if you do have Hindalco, I think a stop loss around the 1010 mark is fair, and you can continue to hold that back.
Yeah, I mean, there's no reason why you should go after metal names. There are several other opportunities in the market. By the way, the market opening up. At least the first few ticks are in. Nifty 50 down about 0.4% at the start, just about 100 points or so in the red. And we'll get you more details, of course, as things open up. The Sensex currently trading in the positive. So let's give it a little bit while to settle down. We've got Varsha joining in to tell you about the other stocks that are in focus today. And some of them you will see as live ticks on your screen as well. Varsha, what's on your list?
Well, good morning. Let me start with Bharat Electronics, wherein they've secured multiple orders of rupees 569 crore for FY27, which includes communication equipment, test equipment, upgrades, spares and services. Then you have Infosys, wherein they've entered into strategic pact with OpenAI to drive enterprise transformation by combining OpenAI's technology with Infosys Topaz Fabric. Then Everready Industries will be in focus as they have commissioned a new alkaline battery manufacturing facility in Jammu, which will have a capacity of 360 million batteries, which follows an investment of around 200 odd crores. Innovation will be in focus on the back of order win of rupees 31 crore from NHAI. Then GNG Electronics, wherein the credit rating has been upgraded to a BBB by CARE Ratings, and promoter group's KKOC operation has, it runs entirely separate from company's core business as per clarification given by company. Lastly, you have Lemon Tree Hotels, wherein they've signed agreement for 2 new properties in Raipur and Jalandhar, which will be managed by his arm Carnation Hotel. So these are all the stocks which will be in focus on the back of news flows.
Ask about that last one, Lemon Tree Hotels, right? Because it's had a stellar up move in the recent past. Would you take money off the table? It's one of those instances where you might just want to book profits, right?
Yeah, and while I have heard constructive views on the street, on the channel about this pack as a whole, somehow the conviction's just not building. I mean, because you've got multiple resistances, and I don't mean just lemon tree. I mean across the board. In this sector there are headwinds, at least from a technical standpoint. When you look at some of these names like Chalet or lemon tree for that matter. Even yesterday, if you see, there was a sharp retracement from that highs of 128. So my suggestion, yes, if you have a position here, is where I would actually book complete profits. If I do get at declines, maybe I'll consider buying. But for now, this is where I would book profits in Lemon Tree, Chalet, or some of these pairs.
Hotels, they seem to be striking a good chord. In fact, we spoke to, I think, Brigade Hotel Ventures yesterday, who was fairly constructive on in their piece as well. And so, as the rates are settling down, I wonder if there are accidents, if you will, today. So maybe, I don't know if LTTS will qualify as an accident on the back of the numbers and the commentary that they've given, but let's see what the stock is doing. Flattish. Tech Mahindra, in fact, decent, but because the valuations are a bit stretched, don't know the extent of the move. 1.19%. Havells certainly should start off lower, so maybe bring that one up. 2.5% lower maybe at now, and Gujarat Gas is the other one, which actually has a good news to itself. Fairly large signings that have come in. I wonder if the stock is reacting now. And just let's pull up the sugar names, Praj Industries, etc. It's an interesting move on ATFs. I wonder if some of these stocks react. We'll of course remember have a very detailed discussion on that at 9:30 a.m. But it's almost 9:05, which is when we get you the big brokerage call of the day today. I think the note that we're talking about today is the Motilal Oswal note on Fujiyama Power Systems. Sharad Johnson with more details on the rationale. Sharad, interesting choice. Why have you chosen this one today?
Well, after a long time, we are seeing brokerages turning bullish on this solar power theme, and now we are seeing for Fujiyama Power Systems, Motilal Oswal has initiated a buy rating, and the target price is at 340 rupees per share. That means from the current prices, it's roughly 30 to 31% of upside potential coming in. Now they are bullish on the integrated play which the company has on the B2C place. Of course, both of these are better margin drivers in this industry. There is a structural rooftop solar opportunity, something which they are talking about. Roughly 70 lakh households are giving an untapped opportunity going ahead, and an integrated product system which they have will increase the wallet share and the profitability front also for the company. And the lithium ion transition is also a key growth lever, and that is why Motilal Oswal is bullish on this counter. And interestingly, they have a big distribution in the B2C segment, and that augurs well for the company as well.
Fujiyama showing a slight pop this morning as well in the pre-open session. You're halfway through. Oracle Fin doing fine on its numbers, 3.5% up. Just take a look at Trent. I want to take a look at Trent as well, about 1.5%. EID Parry, second day in a row, sugar stocks in focus. Let's see if Balrampur Chini and Co. and some of the others are also seeing that kind of action. They may be. There is quite a bit of fog around what exactly it means to have blended fuel in aircraft. So ATF, blended fuel, what is in that SAF? Will there be an ethanol component? To what extent? How much does it cost? We're actually going to be answering all of those questions at 9:30 this morning, so stay tuned for that conversation. We're going to deep dive into it. But these are some of the action points that you're seeing. OFSS, something you track on the charts, Kush?
I do, and yes, this is the stronger of the pack, for now. But the 200-day moving average resistance, it's been hovering around that for 3 days. Maybe you get a break above that. Already overheated, so the risk-reward ratio doesn't favor a fresh buy. But if I did have it, I would hold it, and the stop loss on this one would be close to the 8050 mark.
What about the Nifty? A Nifty looking at maybe a weak opening again, because you're already seeing about 182 points down take. So if you're at a below 24,200 open, which is likely, is that now time to take a position on the Nifty, keeping in mind what Parag Bhai was also saying? If you have the belief that the war will eventually end and things will reverse, then is this an opportunity?
Yeah, so I'm not worried about, I know, with this kind of an opening, we'll be down about 400 points or probably a little more in the last couple of days. But I'm not worried about it because the texture of the market is not bad. Advanced decline ratio abhi bhi positive hai. SMID mein agar aap dekhoge to the small and the mid cap indices are still closing in the positive. So I don't think the market's really too worried. This is more of the profit booking, and also whatever happened in the IT pack that reflecting largely, right, and profit booking in the banking names, as we said. So yes, I will remain constructive. I will look to buy around the 24,000, 24,200 zone. But importantly, let me reiterate, don't buy the dip, buy the rebound. So once the fall settles, once you've got some sort of a rebound, that's when you go out and buy with whatever the lows been made as your stop loss.
Got it. Okay, just a few stocks on the earnings side that we should talk about, right? So pull up Tata Communications, see what's going on there. Bharat Coking Coal, another one that we've been tracking. Tata Com is up about 0.7%, not doing too badly. Bharat Coking is actually reacting negatively. It wasn't the best set of numbers, so it's losing ground. LTTS Havells, just look at an update because the pre-open session has now shut. LTTS now trading with cuts of 1.5%. This was anticipated. Havells really taking a bit of a beating, down about 4%. And Delta Corp was the other one that posted numbers, not the best set of numbers either. So this is a stock again that is losing about 2.2%, 90% drop in the PAT number. And this is, I think, par for the course, Parag Bhai, if you've, I'm pretty sure you've not looked in the absolute details of it, but then
which one?
Delta Corp.
No,
but
Delta
in the run-up to this, obviously it was bound to happen. Any of these stocks that I've just mentioned stand out to you on the charts?
Not really. Most of these have seen a rebound. LTTS obviously opening lower could actually slide further. Delta Corp was anyway hitting resistance, so here too you could see a slide up until about 62, 62.5 levels. So nothing constructive, especially the stock that had run up. Any kind of negative news will be a trigger to perhaps see a sharper round of sell-off, in some of these names. So Delta Corp around 60, 62.5, perhaps in days to come, that's a level that it could slide to.
A stock that is under a tad bit of pressure, I think it was, at least pull it up, Mahindra & Mahindra. Was one of the top losers on the benchmark Nifty 50, dropping, well, it's covered a little bit of that ground, come back up. But I'm wondering, Parag Bhai, we've not seen obviously the results and they'll come through. But if there are question marks about rural with monsoon, then the tractor business comes into play. For their UV business as well, a considerable amount of exposure to that market. So would you say that you should be a little cautious with Mahindra?
So as we have discussed earlier, I have already booked out profits in all auto OEMs actually. I am not holding any auto OEM except for a couple of percentage of Bajaj Auto. And nothing else is there because I took that call that if this conflict lasts long, then at some point we might to increase petrol diesel prices also. On one hand, steel is going up every day, so you have a margin pressure. You cannot increase prices suddenly so fast. And so there are a lot of headwinds right now. And plus, as you rightly said, the chances of good monsoon is less, so that way tractor sales also will be muted.
By the way, Interglobe Aviation also losing about 2% in the pre-open session. Kotak Mahindra Bank down 1.8%. Third biggest loser is Mahindra & Mahindra. You want to make a point?
I was looking for some short calls, just given how the index has reacted. And in my first cut filter, some of the names on the short side were actually the auto pack.
Okay.
Mahindra, not Mahindra by the way, Maruti, Hyundai, and from the two-wheeler space, Hero MotoCorp. Because there wasn't enough traction and volume action, I did not come out as a short call for some of these. But the point is that the texture on these is getting a little negative. So yes, some caution is warranted on these names.
We spoke about ICICI Bank and HDFC Bank, and the point that you made, Kush, yesterday or day before yesterday was that it was a delayed reaction to the earnings. Yesterday we saw this pair lose 1.5% each. The initial indication is that there's more ground being lost today, at least for ICICI Bank, right? What would your reaction to that be?
So if we take the commentary from the day after the results were announced and sort of look at it just yesterday, one day after, it'll seem bang on when we said that ICICI could retrace from 1380, 1400 odd levels. That's where it came from. HDFC could retrace from 1810 levels. That's 800, 810 levels. That's when it retraced from. So this is more of profit booking. Not too worried. Volumes thin. I would look for buying opportunities in both of these names. And again, to reiterate, ICICI is your momentum play, HDFC is your positional bet. So let the fall settle. When you see that rebound, ICICI is something that you can still play for momentum. So on the downside, it has support around the 1325 mark. So if that is respected and if you do enter, that should act as your stop loss. And on the way up, about 1365 and again 1380, 1385, those levels become your targets.
Yesterday for the Adani Group stocks had a very good move to Adani Energy Solutions, Adani Enterprises, some very sharp up moves. Today, a bit of a pause, but just look at the Adani Energy Solutions, just look at the 1 week chart, for example, and you would see the kind of real strong strength that this stock has exhibited as well. So big moves there. Today, in a lot of stocks which have made a move, maybe you see a bit of a profit booking as well, but just shows GE Vernova T&D, the movement in Adani Energy Solutions, all of the other green energy names moving up, just shows that the move is alive and kicking here. Parag Thakkar, you've spoken about Adani in the past, but yes, green energy or energy transition, you had told me the last time you are doing some work on that. You're still probably doing some work, but you are prima facie constructive on that bucket?
So basically I'd like to, this is my favorite topic right now, I'll tell you. GE Vernova was up by 11-12% yesterday, 13% there, right? I saw this quarter's EPS was $17.5 and stock price is 1120 somewhere. So GE Vernova there is trading at 17 times. GE Vernova here is trading at 85 times. Okay, so there is a momentum, no doubt. The business is great for GE Vernova, ABB, Hitachi. The business is superb. The companies are excellent. They have a technological moat which no others have, right? They are in right space. But you cannot buy stocks at 80-90p. If you have already bought, you are enjoying the ride, it's good for you.
No, even then it is wrong, na Parag, because whatever is there on the stock is money or currency for me. So I can sell that and use that money somewhere else.
So 80-90p means you are getting 1% earning yield. And just to finish on the banks, my favorite topic again. So ICICI, HDFC, Nexus also I would like to add, which should be bought on dips in my view. That is my view, and that is what I have been doing.
Okay. With just about 20 seconds left, individual stocks that we have not spoken about yet. Opportunities.
Yeah, so today I came ready for that. Something we've not spoken about. ESAB India, very good momentum, very good volume action. Yesterday closed at the high point of the day. I think this has good momentum going for it. Don't be surprised if it goes to about 6,100 and just rounding it off to about 6,200 odd levels on the upside, and 100 point stop loss at 5,900. ESAB India.
Okay, watch out for that. But the markets will likely start off weak. Oil, the principal culprit. Let's see what's the extent of the weakness during the course of the day. 24,225, so below 24,200 effectively, 1% lower. Banks contributing naturally so. Mid cap starting off lower as well. I wonder if IT's small caps well behaved. Let's see what happens during the course of the day. IT is not falling as badly, which is actually a good sign here. Let's get the heat map up on the screen and see what is moving and what is not. Okay, so not too many winners. Let's start with the winners. Therefore, ONGC naturally so will do well on a day when oil prices have gone up. HCL Tech, I just saw it, yes, but moved into the red very quickly. Dr. Reddy's about 1%, 1.2% to be precise. Geo Financial, BEL, Cipla, very few, right? Not enough there. Look at the losers. Interglobe Aviation, no surprise. Oil prices flaring up. Indigo will go down. Ultratech down about a couple of percentage points. M&M taking a bit of a hit. Asian Paints taking a bit of a hit. Some other NBFCs. So essentially, autos are looking weak today, with Maruti, Mahindra and Mahindra, or mobility, if I can squeeze in that and put in Indigo out there too. ICICI Bank is looking weak. So that financials and autos, effectively, the rate sensitives are looking slightly pressurized in the session today. Alex, though, Dr. Reddy seems to be really taking it off, up about 2%, giving it companies ONGC. But very quickly, we've slipped to 24,150. Not a good start.
Not a good start, certainly. And the only question is, does it get worse from this point? Let's talk about the sectoral indices as well and pull those up, because you'll see a similar picture pan out, more red on the screen than not. This was not the case yesterday, remember, because quite a bit of selling was concentrated in the large cap pocket, but you saw that the breadth was good. That isn't the case today. The media index, you can pretty much discount that. Pharma is up about 1/3%. Healthcare is up about 1/4%. Not too much in the way of big gainers on the sectoral front. Auto losing a tremendous amount of ground, and a large part of this could well be Mahindra and Mahindra. You have the financial services, you have the bank nifty that's down about 1% or thereabouts. So it's not the best morning. Let's look at individual counters, because there are few that stand out. On the earnings front, Oracle Financial Services. Now, bear in mind that this is not a company that shares a lot of fine print or detail. There certainly isn't an outlook going forward, but the results looked good. Up about 2.5% or thereabouts and holding there. On the other end of the spectrum, there are quite a few stocks that are not doing well or likely not doing well on the back of a bad set of numbers. Tata.com is up in the green despite not the best set of numbers. But you have L&T Tech, you have Bharat Coking Coal losing ground, likely Havells also losing ground. Pull that up while we're talking about it, down 4.2%, and Delta Corp posting a 90% decline in profit, down about 2.7%. On the other updates, in this ATF blending story, we'll have to see how that pans out, but there's a second day of gains for these companies. Praj Industries, that provides the facility or the infrastructure for ethanol blending, up and about nearly 4%. TrueAlt Bioenergy, that is involved in multi-feed creation of ethanol, is up and about 2.5% or thereabouts. You also have other updates. Unimec Aerospace set to acquire 24% stake in a company called Hobel Bellows. Lemon Tree Hotels is adding to its capacity. But remember that it's gained quite considerably, and Kush Bora on the technicals had said you might want to look at booking out right now. It's down about 1% or so right now. Bharat Electronics, another order win that is coming through for this one. Not too much of an action here. You have Dynamatic Tech that has signed an MOU. Let's pull that up. It's not doing too much. And finally, Shadowfax. It might be under a tad bit of pressure because lock-in ends. There you go. 6% of supply that comes through into the market, and it's down about 5.7. And by the way, Eveready has announced capacity expansion. It's a new battery plant. It's up about 1%. So a few of the stocks that we had expected to move are doing so in the way that we had anticipated, Neeraj. Are you spotting anything else?
Well, I wonder if you must have marked OFSS, but I'm inclined to bring it up yet again and just show what that stock is doing in the session, if at all. 2.45% higher. Is Intellect Design Arena also moving? I wonder. No, not really. That one hasn't. But OFSS certainly has. Actually, we didn't get a chance to talk about it in great detail. Maybe just a quick word there, Parag Bhai. Oracle Financial Services, any thoughts there?
Yeah, results were absolutely brilliant, I would say. But generally, I have seen in this company that March quarter and June quarter, these are good quarters for this company. And a lot of the income comes from license fees. So we need to check, and generally the disclosures are not that great. But it's a great company doing well. But I would not jump and buy because of lack of information about the upcoming year.
Okay, what about Intellect Design Arena? That business, the promoter is saying they'll grow at 20-25% in the BFSI space.
I have not yet bought, not bought into it, but yeah, something to work upon.
Something to work upon.
Yeah.
Okay. So remember, viewers, just keep that in mind. And Kush Bora, I wonder if either of these are showing any promise as a trade.
Afraid not. OFSS is perhaps a profit booking candidate because already run up quite a bit. You're already seeing it come off the highs of the day, even if it's been just 5 minutes. And Intellect Design Arena, after that massive fall over the last few months, has just gone into consolidation mode for the last 2.5 months. 710, 720, those being resistance levels. So until it really meaningfully breaks those, I wouldn't really buy into it just yet.
Okay, some of those brokerage names which had done well the last few days, Kush Bora, you were amongst the ones who had recommended some of those as well. But what do you do? So, for example, with a Grow, IFL Caps, Angel One, etc. What's the call there?
Yeah, so Grow is an outlier in terms of how it's doing, even from a stock price perspective. But here too, I would suggest you could continue to hold, no fresh positions advised. And on the rest of the names, I would suggest if you have positions at lower levels, book profit, take some money off the table of these as well.
Okay, book some money and take some money off the table. What is it that looks good? So let's say, for example, you gave a call on ESUB India, if I'm not wrong. Yes. Would you still buy it this morning? What else would you be comfortable looking at?
So glad that you mentioned. Quick word on ESUB India. Relatively low volume and high ticket shares. So just be mindful of these spreads that you punch in before you buy. Momentum here is absolutely positive. So yes, you can still enter into it. Like I said, just be mindful of the spreads and the volumes. Granules opened well, going strong. has good traction and momentum for it. So this is something still, which is a very active trade. 697.07 targets, to reiterate, 656 was the stop loss. Maybe now you can bump it up to about 665.
Now, viewers, remember a few days back, the government came out with a note or a move that Chinese-linked security cameras, they would be done away with from April, or there was some permissions required, etc., and stuff like that. One clear beneficiary of that was supposed to be Aditya Infotech. It's a small name, but it has done 37% in the last 1 month. A lot of stocks have, but this one too has made a serious move. So bear that in mind. Maybe Parag Bhai may not be tracking it, so I wouldn't want to therefore put him in a spot. But Kush Bohra, you can look up the charts of this one. I'm sure they look impressive because they've done 37%. What are the targets, stop losses, etc. for somebody?
Very interesting moves, and the fact that they've been, solid through the war and through all of the things that have happened in the market since the start of the year. Right now, overheated, so wouldn't suggest a buy here, but definitely a buy on dips candidate. And the supports for this one come in at 2,000, 2,050. So if you do see a pullback, and it does kind of give you those moves, every now and then. So if you do see this closer to 2,000, 2,050 odd levels, you can consider buying. Good momentum. The delivery markup on this one over the last months has been phenomenal. So yes, this is something that I would consider as a buy on dips. On the downside, supports near the 1850, 1875 mark. So if I do enter, that's where I would keep my stop loss.
We haven't spoken about trend on the charts, right? Let's do that, because it's cooled off from the high point of the day, and it's gained, like I mentioned before the start today, over 30% in April so far. So the question is, do you hold off or do you take money off the table?
Just to quickly answer a question that you posed before market opened, how many stocks have risen over 30% in the last month? I'll take NSE 500 as the universe.
Yeah.
Out of the 500, 333 stocks have risen over 30%. Over 30% in just the last month from the lows.
Wow.
So yeah, that is something, right? And hence you are seeing कि 20 DA में बहुत stocks का बहुत नीचे है, तो supports भी बहुत नीचे आ रहा है. So you have to be a little nuanced when you consider that. But yes, I mean, good moves on some of these. Profit booking, at least partial profit booking is par for the course on a lot of these names. Specifically about trend, it's a very interesting setup. Yes, fundamentally, I think it is still overvalued, as Parag Bhai mentioned, overpriced. But from a medium to a long-term perspective, there are falling trend lines which the stock is now starting to break. So I remain constructive. My only hitch right now is a 200 average, which is at the 4500 mark. 3 दिन से कोशिश कर रहा है, नहीं ब्रेक हो रहा है. अगर नहीं ब्रेक होता है तो साइडवेज कंसोलिडेशन आ जाएगा. But the structure is now starting to look positive. Resistance of the trend lines broken. 200-day moving average at 4500. That remains to be seen. If that is broken, I think the momentum could take the stock higher to about 4750 odd levels.
Wow. Okay. Well, those are some names to keep an eye out for. Parag Bhai has, of course, said that he's waiting for the Infosys commentary to come out before deciding on whether he wants to go long IT or not. So that is one clear mention and disclaimer. What I was trying to ask Parag Bhai, and I couldn't get that answer out because Parag Bhai spoke about Hitachi, GE Vernova, T&D and the others, and then he spoke about his favorite topic, which is banks. I'm trying to ask about something in between, Parag Bhai, which is the energy plays. So the green energy plays, wind energy plays, etc. have had a bit of a rally already, but it seems to be the right space from a policy perspective.
Yeah.
Are the stocks giving you an opportunity?
No, not necessarily after such a big run. After such a big run, I would not go into it.
Okay.
Yeah, but yeah, of course, from a policy perspective, I completely agree with you. Because we'll move toward more and more towards renewable, we'll move more and more towards EV in auto. That is given now.
Okay. Interestingly, Alex, yesterday in a chat with one of the CEOs of an ER&D firm, and that person told me that more and more European car makers, and in fact, he said global car makers are actually moving towards hybrid. By the way, I must say, even in China, once China took off those benefits that they gave to EV buyers, in the month of April, it was a post that I saw, in the month of April, the car maker with the highest sales and registrations was, guess which one? Volkswagen.
Okay.
It was not the Chinese giants. any of them, MG or whichever else, BYD or anything. It was Volkswagen because, and I'm guessing Toyota would have a high run there too. It was number 2.
I was going to say Toyota.
Because of hybrid.
I was going to say, and purely because of that.
Yeah.
And you drive a hybrid as well. By the way, I'm not. There's no connection. I'm just
no
pointing that
connection.
out.
Yeah, exactly.
But I'm saying I'm not surprised. Having looked at the space just from a policy standpoint, I think that given what it takes to get lithium.
Alex tracks autos really closely.
He's
a fan of it.
I used to report on it. But I'm saying, even before, this is now, you're talking about 2016-17, right? When you were initially talking about the move towards EV and the change took place in the taxation treatment on hybrids. It was actually not always treated the way that it was over the last few years. It was the natural thing to do to push hybrids first before going whole hog into EV, because it's your natural bridge before you have technology that is more sustainable. Ultimately, lithium-ion batteries are not easy to source. Lithium is something that is not easy to get. You have to plunder the ground to get it. And so if you're arguing that emissions get significantly lower, sure, but you're actually destroying one part of the world to solve a problem in another part of the world. But having said that, we've already gotten an answer on the automotive space. By the way, Reckitt India has reported double-digit sales growth in the March quarter, reinforcing signs of resilience in urban demand. Mahima joining in to tell you what the details of that are and what it means for the space as a whole. Mahima?
Right, so Alex, Reckitt, which is basically a British company, also owns business in India. So Reckitt India has gone ahead and posted double-digit sales. They mentioned this in their press release. And what they've said is that overall there is double-digit growth led by strong growth in germ protection, intimate wellness as well as household care. So both home and personal care have done very well for them. And that is a positive read-through for both HUL as well as GCPL. Management reiterated that India business is one of the fastest growing markets globally, and demand commentary suggests that urban consumption remains strong. This is very interesting coming in, and rural trends are gradually improving as well. And this, because of this, the read-through for HUL would be that the strong print, that Reckitt has given in terms of India business increases confidence of overall top line growth for HUL. Analysts are penciling a 5 to 6% growth for HUL in terms of top line. Plus, it will do very well for their home care and personal care business. Analysts are also believing that they deliver better growth as compared to what the street is estimating, and volumes likely, will be held on healthy levels in line with the broader industry trends as well. For GCPL also, overall analysts are expecting domestic business to deliver revenue growth at 10% and volume growth at 9%. Growth is likely to be home care at around 11% and personal care around 8%, and EBITDA margins are expected to improve around 230 basis points. That's a very strong comment coming in from analysts. 230 basis points of an improvement on margins for GCPL is something that we are expecting. So this is the overall view of how the read-through from Reckitt India business stands positive for HUL as well as GCPL.
All right, some trends out there. Keep an eye out for them. By the way, the markets, Kushbura just pointed out, have seen a bit of a recovery from the lows of the day. So 0.62% lower, which is good. I think sugar stocks, if I'm not wrong, I saw at least Bajaj Hindustan doing well. I wonder if some of the others too, Balrampur and the likes, are showing any kind of traction, should pull them up. Bajaj Hindustan is up 4.2%, 4.42%. Balrampur, 1%. Triveni, Dhampur and Renuka, EID Paris 3.5% too. So the conversation that we are supposed to have at 9:30, well, I think the markets are giving a thumbs up to that conversation, and I trust it's a really nice one. Kushbora, quick 20 seconds. Any of the sugar names on the charts?
I think EID Perry, because the other ones that you've mentioned are already overheated. So EID Perry is something that you can still consider as momentum. On the downside, 895 is where you keep that stop loss. 930 and about 955 are your targets. So EID Perry still looks good.
Got it. Gentlemen, on that note, thanks so much for joining us this morning. Pleasure having you as always. The conversation that we were promising, and this is something that you would have wanted to make sense of. So let's get that started. The government has cleared a key policy shift, allowing blending of synthetic hydrocarbons in aviation turbine fuels. There is a distinction here. It's not blending of ethanol into ATF. let's try to understand what this means before we speak to the experts, Parvez Damania, who's former ED Kingfisher Airlines, as well as aviation expert, and Sanjay Lazar, Chief Executive Officer of Aviala's Consultants. Somit Sarkar joining us to talk about the key difference between what I just mentioned. Somit?
Well, what is the policy update that has come in? Now, the policy update says that government is now allowing blending of synthetic hydrocarbons in ATF. Now, what does this mean? Earlier, ATF could be used by using just crude oil. But right now, what they can do is they can also include fuel blended with synthesized hydrocarbons. In simple language, what this means is they can use alternative fuels like sustainable aviation fuel, which is much more cleaner, and they can use this to blend with ATF, and this can be used in by airline companies as well. So what is this sustainable aviation fuel? It is a clear and non-conventional jet fuel produced from sustainable feedstock like waste oil, agri residues, and synthetic sources, as well as ethanol. Now, also remember that SAF, that is sustainable aviation fuel, is also more expensive when compared to ATF. They're at least 2 to 3 times more expensive compared to what ATF prices are. Now, how does this help? Now, SAF reduces carbon emission, and generally commercial aviation industry accounts for nearly 2.5% of the global carbon emissions. So this goes down what are the targets that have been set for this by the government of India? Now, they aim to use SAF by around 1% by 2027, 2% blending by 2028, and 5% blending by 2030. Now, why is India doing this? India is a member of ICAOA, which is International Civil Aviation Organization, and being a member of this, they have to comply with this CORSIA, which means that carbon offsetting and reduction scheme of international aviation. So they have to comply with this, and hence they are looking to make it mandatory from 2027. So this year it's not mandatory. From 2027 it might become mandatory. Now, which are the countries that have already made this mandatory or are looking to make it mandatory? EU, that is the European Union, United Kingdom, Singapore, South Korea. Apart from that, there are countries like Japan, Indonesia, Thailand, which are also considering to make this blending of SAF with ATF mandatory. Now, how does this help the sugar company? And this is the most important part for the listed companies in India. Ethanol can be used as a raw material for SAF production, and only 2 companies right now have are either setting up a plant or have set up a plant, and that's True Alt Bioenergy and Praj Industries. The Indian listed oil marketing companies also have this plant, but it's not in big process. It's not in big the production facility is not big enough for the oil marketing companies, but these 2 companies are setting up big production facilities which will convert ethanol into sustainable aviation fuel. Now, how much sustainable aviation fuel will be required by India? Now, India's ATF demand is expected to be around 11.5 million metric tons in 2027. Of this, nearly 1/3 is for international purpose, that is close to 4 million metric tons, and 4 million metric tons would require around just 500 million liters of SAF. To give some context, ethanol, which is used at 20% blending for petrol, there the requirement is around 12,500 million liters. So the requirement of SAF for blending with ATF is quite low at this moment, given that we are just blending around 1% by 2027.
Okay, thank you for that, Samit. So SAF is the current buzzword. You add another A and it becomes SAF fuel, and that really is the plan, isn't it? It should be cleaner, it should be greener, and more importantly for India that has to import at very high costs, should be energy efficient. But can we really do it? Is it sustainable? Parvez Damania joining in. He's former ED of Kingfisher Airlines and aviation expert. Sanjay Lazar is joining in as well. Both these gentlemen understand aviation like the back of their hand. Mr. Damania, this sounds like such a great idea on paper. Why isn't the world already doing it then?
See, my only concern is how this is going to affect the aircraft engines. And is there any chance that the performance of the aircrafts will be affected? That is my concern, because I don't think it's ever been done before. But first and foremost, we're just going to start with 1% in 2027, go to 2% in 2028. And by 2030, we expect it to go to 5%. I'm sure if the Indian government is approved, they must have done all the tests and all the experiments and studied that this is aviation ethanol mixing is working. But right now, it's not being used at all. See, how it's going to help is we import 85% of our fuel requirement, and the aviation turbine fuel requirement is going up all the time. So it will help in cutting down cost, hopefully. Plus, the carbon emission will also go down, which will help internationally. So let us hope this project works well.
Just on that first point, I want to get Sanjay Lazar's view in, because I believe in Europe it's already being implemented in part. So if there was any problem with how the aircraft functions, we would know by now.
Morning, Tamanna. Great to be here, and morning to Mr. Damania as well. You're right, Tamanna. Sustainable aviation fuel is currently being used by about 40 countries, 50 airlines, 125 airports serve it globally. Until January this year, more than 360,000 flights performed. India is number 6 or 7 in the world production for ATF, and we are very, very low down in SAF. SAF, Brazil is probably, and the US are probably the leaders. Yes, it is used very widely. It is a little more expensive, but it's cleaner, greener, lower carbon emissions. We also have to remember there's a lot of ethanol blending in most of these countries. It will take some time to probably come in to here. It will bring down cost when ethanol comes into the picture. Right now, we're using synthetic hydrocarbons as per what the government's notification says. But it's going to make a huge difference in the longer term towards a cleaner environment. I don't see it bringing down costs as such right away, but the government seems to believe that it will improve what we call national security and energy security. We'll have to wait and watch for that.
Good morning, and you make a good point. I'm just wondering, ultimately, supply chains and scale make a difference in costing, right? If you're talking about the fact that 2025 was when, and this is what I'm reading, was when this began, and it's a very small percentage. You're talking about 2% SAF being blended into ATF, right? So if this is progressively going to increase, one would assume that the production capacities will rise, scale will rise, and that will reduce the cost. We're setting up significant capacity here in India. That would lead, one would assume, to an improvement in the economics of scale.
Certainly it would, Alex. It's going to grow as it starts growing. And when I say this, please understand, we look at a country like Brazil, which almost 40 to 50% of their aviation uses SAF, right? We look at the US, which has a very large percentage. When you're talking in terms of 2 and 3 and 4, 5%, it will only scratch the surface. But let's look 5 years or 10 years down the line, when India has 3,000 aircraft, 300 airports, and double from 11 million MMT, we go up to say 20 million or 25 million MMT. Then a 10%, 20% difference would make a huge dent in the cash flows of airlines and also oil OMCs.
Okay. Okay, fair point. Now, Mr. Damania, I know your view is slightly different, because I thought you started off saying that it is not as widely used as maybe you would like it to be, but certainly in a lot of countries it is. The question really is that if this is a policy intent that has come out, how long could it take for it to become mainstream, especially in a scenario where it could help the country in reduce the quantum of oil imports that it has to do?
See, right now the amount allowed in 2027 is going to be 1%, which is really negligible, and 2% by 2028, and 5% by 2030. So I think to really make an effect on our amount of imported ATF is going to take a long time. It's not going to become an overnight, make an overnight difference. Right now, we have to understand that because of this war, fuel ATF prices are going up, and it's affecting the aviation industry very, very badly. So hopefully my worry is that this blending should decrease the cost. I understand that it will help in the carbon emission, but ultimately to make the economics work, the cost of the final fuel has to go down. Hopefully, because today airlines are not making any real great money, it'll be difficult for them to sustain the way the dollar is going up and the fuel prices are going up. So any kind of help which comes, any kind of support from the government, any kind of initiative would be of great help. So to really make a dent in our oil imports is going to take a very, very long time.
Okay, Sanjay, the upsides to this. Let's talk about the upsides to this. I mean, I believe the targeted numbers are also done with a view to try out the fuel, also the ability to be able to do this successfully. So therefore, maybe small targets, but at least it's a start, right? That's part one. Part two, do you, in some sense, if you talk to the sugar companies or any of the ethanol making companies, they believe that they can make enough ethanol out there for commercial usage, even if the blending targets are taken higher. Could supply be an issue at all? Do you have any thoughts here?
I do not believe that in a country like India, supply would be an issue. Production may be an issue with, as your reporter rightly pointed out, you just have Praj and Trualt. We need somebody the size of a Reliance or an OMC to start producing this. Because let's be frank, when you look at the quantum, and Mr. Damania is right, look at the imports that we are doing of oil and how it's hurting our country. I mean, and you've mentioned on your channel, when you look at the current subsidy is almost 1 lakh rupees per kiloliter on ATF at this current day. The OMCs are losing almost 60,000 crores in that 1.5 months till, of course, the fuel price will go up. So I do believe that production needs to be ramped up for it to make a difference. For it to scratch the surface, we need to see more than 10%. But what's very interesting is in the plethora of nations that are producing ATF, India is still in the top 10, after your US, your China, your Korea, a whole lot of these countries. So we are very high up in the conversion of raw fuel to ATF. Now, if we could get the mix correct for, getting a SAF type of fuel, then it would be great. We also must remember the testing for this, preliminary testing has already been done by the Indian Air Force and SpiceJet on a couple of flights last year and year before last. The regulation had not yet come in. It's going to be interesting to see what happens to the big Air Indias and the Indigos, whether they're going to adopt this and how quickly. It'll be very, very interesting for aviation in India as this goes forward, and of course for the environment.
Is there any tweak the current fleet will have to undergo? I'm just trying to understand the cost benefit for airlines. So suppose your Interglobe, your Indigo, Air India have to adopt this, because then it starts making sense, right, at scale. Does their current fleet have to undergo tweaks? What is the cost benefit they have? What is the transition pain that they may face?
Well, very interesting question.
Sorry.
Right now, we do not know what is the final costing of this product going to be.
Right.
Because the first batch with 1% will come out in 2027. And now with 1%, how much will it affect the final cost of the product? We do not know. I'm not technically qualified to say, maybe Sanjay will be able to say, if any kind of tweaking or change in the aircraft or the engine would be required.
Okay, let me get Sanjay in on that.
Yes, Tamanna. It's an excellent point that you raise. There were fear-mongering, in the world a couple of years ago that engines would need to be tweaked and stuff. But modern jet engines are very capable of dealing with the current ethanol blends. In fact, even very much higher levels of ethanol blends, we will have no problem as far as the engines are concerned. It will be the quality of fuel that we'll have to test. And that's the key here. Because when we look at, like I've already said, 50 airlines, 40 countries, 360,000, 370,000 hours until, January. So obviously all the Airbuses and the Boeings, the modern aircraft, the modern engines are already using this, have used this, and it produces a greener footprint. Whereas we don't know what quality of fuel, like Mr. Damania said, once our Indian SAF is ready, whether that will be compatible, I'm sure, these airlines will test it out. The DGCA and the Oil Petroleum Ministry will check it out and make it a success. I think the adoption of environmentally friendly fuels in India has been really slow. Even if you look at, regular petrol and diesel and stuff like that we're using for our automotive cars, we are way behind, the curve as far as most other developed and developing countries go. So I think it's high time that we start looking at the environmental aspects as well. I don't believe there's, safety is a concern, because when you've got so many airlines and aircraft already using it, it's quite tried and tested.
Okay. Okay, thank you so much, Mr. Damania and Sanjay Lazar, for speaking with us today and explaining this. This is going to be interesting. And if it is so feasible, if it's doable, then okay, yes, I know we have that 1%, 2%, requirement, but then let's get on it.
I think that it's going to be interesting to see from a global standpoint, because ultimately when more capacity is added, there will be economies of scale that come through, and this cost aspect will go away, particularly from India's standpoint.
Yeah, it's a good attempt for sure. I remember when the ethanol blending mandate for even motor fuel started, the debates were right this, will it happen, will the engines, and the outcome may be different here. We do not know that. I'm not an expert, I don't think any of us are, but we've seen the arrival of 15% and 20%, so might as well worth the effort.
20% is everywhere.
We are an all-importing nation. It's worth the effort.
It's worth the effort. All right, the next story is an important one. A social media post has flagged an earlier CARE ratings report that had evaluated G&G Electronics and its promoter entity together, citing operational and financial interlinkages under the KK Group. The company, however, has rejected those allegations. We're going to be speaking to the company. Before we speak to the management, let me get in Mahima to contextualize that entire case. Mahima, what was the key concern there?
Right, so there was a social media post that talked about both G&G Electronics and KK Group as a whole. The CARE ratings report looked at both and said that they are interconnected, management, operations as well as money flow. They said that we should evaluate them together, that is both of them as KK Group. The post also mentioned that the company uses same brand name Electronic Bazaar for both their businesses. Now what happens is that both of these businesses are strategically kind of linked. So what the listed entity, that is G&G Electronics, basically sells refurbished electronics, and the unlisted promoter firm KK Overseas Corporation sells brand new products on Amazon. So it basically is a Dell distributor. Now in terms of key revenue breakup as well, the total group revenue stood at around 3,087 odd crores, of which G&G Electronics share was 1,138 crore and unlisted share was 1,950 crore. So unlisted part, that is the KK Group, had a higher share in terms of revenue to the overall group company. Now company's response to this was also an interesting one. The company said that they unequivocally deny the allegation. They've said that the social media post refers to an earlier CARE rating report. The CARE ratings latest report has now independently evaluated G&G Electronics and upgraded it to BBB rating. New report confirms that the listed entity is assessed independently. What they've said is that KKOC credit profile is independently assessed under a separate report. No material related party transactions have taken place between the entities, and KKOC only uses Electronic Bazaar as its seller account name on Amazon due to old legacy reasons, and not as a product brand. Actually, Electronic Bazaar brand and
I think Mahima, we'll take it from here. Sharath Khandelwal, Managing Director of G&G, joining in on the conversation. Mr. Khandelwal, thank you so much for coming on NDTV Profit and taking our questions, because there was some extent of concern on it. I just want to pull up the G&G stock as well, and just give you a sense of what was happening with this company yesterday. So after a bit of paring down, saw some recovery. Let's just clarify. I think the confusion is because both the listed and the unlisted entity function in the same brand, Electronics Bazaar, which I can see behind you right now in the frame as well.
Good morning. As we mentioned yesterday, that both the companies do not use Electronic Bazaar brand name. It is used by G&G Electronics and its subsidiaries only. It is just used as a seller name or a nickname on Amazon, where the products sold are personal care appliances, toys, and video games, not laptops. And these are sold in their original brands like Philips, Dyson, or Sony, all the reputed brands. So Electronic Bazaar brand is not used in any product. It is due to old legacy reason used as a nickname, which doesn't mean that any advantage is accruing to KK Overseas.
I'm sorry to say, for the consumer, there's no difference between a nickname and a brand name. They associate with what they see. Is it?
This is not on the product. This is only just as a seller name identification. Seller is KK Overseas Corporation only. Even on the invoice, the name comes as KK Overseas Corporation.
Let me go back to the rationale. What is the rationale of this kind of a company structure where you have a large unlisted entity in a similar kind of business and then a listed entity? Why the separation?
No, it is not a similar kind of business as I just mentioned. They sell in different product line, personal care appliances, toys and video games. Only a small portion, which is not even 10% of the business, is on the brand new laptop side, which is our old legacy business, which allows us to stay connected with the market and keep checking on the price trends and all. So the refurbished business, which is the main business of GNG Electronics, is totally in GNG Electronics. It is not done in KK Overseas at all.
I understand.
Yeah.
One would, I think, be forgiven for wondering why such closely allied businesses can't be under one entity. They are, okay, as you've explained, some things are separate. But if they were all under GNG Electronics, what would the concern be?
Now, as I just mentioned, these are two different businesses.
I
one is a legacy business.
I understand, sir. I said allied business. They're in the same space. They're quite connected. Why can't they be under one entity? I'm just trying to understand the thought there.
So it's personal care appliances, toys and video games are not allied businesses. Refurbished computer business is a different business. Only a very small portion, that is a brand new computer business, which is less than 10% last year. And this year it's less than even 5%. Is in a separate business because we want to keep refurbished business and brand new business in a different entities.
Why is
not
that,
in the same
sir?
entities.
Why is that, sir? Why do you want to keep refurbished business in a separate entity? I'm just trying to understand the management rationale for it or the promoter rationale for it.
Refurbished business functions in a very, very different way. It has a different trajectory. It totally functions different way. And the brand new business is in KK Overseas because of the legacy, because we have been doing it like that before. It doesn't make sense to do brand new business in GNG Electronics because it doesn't add any value to GNG Electronics or its shareholders.
Okay, but you know what the problem is? Half the group's revenue is sitting outside the listed company. So I'm speaking to you from the shareholders' perspective. Why should they not get the benefit of half the revenue of the group company?
No, but actually there is no such benefit. That business has very thin profit margin, as you can see from the CARE report also. And it's basically distribution. We don't want to confuse the investors or confuse they think that we are like a conglomerate. We are in GNG Electronics, we totally do refurbished computer business, which is exclusively done there. So if we do all these things these businesses in the same entity, it is confusing the shareholder or confusing the business proposition.
Okay, I'll tell you what the concern is, Mr. Khandelwal. And I know we talked about the CARE rating report. You've given your explanation. That is fine. What about data sharing between the two entities? And I know you're saying they're not allied businesses. They're not the same businesses. There's only a 10% overlap. But then again, comes back to my core question of why this kind of a structure? Would you look at reviewing this kind of structure? And is there any kind of customer data sharing between both entities?
No, and not at all, because customers are different. When personal care appliances, toys, video games are sold on Amazon, which is 95% of the business, the customer profile is an end customer. Here, the customer is a business customer majorly, which is our main focus. So there is no data sharing between the two businesses at all. And if at all, what we get the information is whatever little business of brand new we do in KK Overseas, that gives us the idea and trending of the market price and other things, which helps in deciding our pricing strategy for GNG Electronics. As we know that the prices of brand new computer have risen sharply in last 4 or 5 months, which actually helped us in increasing, in working for the benefit of GNG Electronics and remaining connected to the market. It was the only intention.
Okay. Would you review this kind of a structure going forward, or you would like to just keep it separate?
Well, anything is possible, but I can't say at this point of time. This situation has just come in. And the social media post is like mostly on the selective interpretation of outdated information using the AI tool. Like they say about our Dell stores and Chroma store, which we have not been using for working on for the last 8-10 years.
No, okay, fair enough, Mr. Khandelwal. That's why we invited you here to respond to some of those things, because for sure your responses are not AI. I don't know about the social media post that started all of this. You're speaking to us
it states as Atlas, report by Atlas. So it's not my assumption.
No. I'm not saying that. I'm saying that I'm telling viewers that our response from Mr. Khandelwal is real, not AI. I don't know what you saw on social media. So we want to get a real response over here. How can you address concerns from investors because of that social media post? At one point, you've said that the social media post is wrong. How else can you address those concerns in terms of no RPT, no related party transactions? Is there a clear Chinese wall between KK and GNG?
Absolutely. Absolutely. We have issued, just to address the concerns of investors, we issued the press release last evening. And there is a clear Chinese wall between the two entities. They function independently. There is a clear management, different management of KK Overseas. There is a different chief CEO for the company that manages business separately. And my involvement is for the benefit of GNG Electronics and growing this business totally. So there is a clear Chinese wall between these two companies.
What about the promoters? They have involvement on both ends, right?
The promoters are, like, from the ownership standpoint, yes, but from the management and running of the business, there is a separate management for the KK Overseas Corporation with a separate CEO and the team, which is mostly based out of Bangalore.
All right. Thank you so much, Mr. Khandelwal. Once again, we appreciate you coming in and taking all of our questions. And this is what companies should do. If there is a doubt in mind, come out and address it. And that's important to do as well. We'll take a very short break. GNG Electronics in focus. But on the other side, we have all our big interviews lined up. You're going to be hearing from Mohit Joshi of Tech Mahindra when we come back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11.
Even as the mood on IT overall is a bit negative, all of the companies are coming out with their numbers, and Tech Mahindra, in terms of commentary, is perhaps showing a more optimistic outlook than others. What's leading to that optimism? I'm speaking now with Mohit Joshi, CEO and MD of Tech Mahindra. Mohit, great to catch up with you after the numbers that have come in line with most expectations. And some of the analyst commentary today is also talking about how it is a great maneuvering in a tough quarter. But let's come to the outlook. You're sounding more optimistic than other IT companies. What's leading to that?
So thank you. I think, we were delighted by the numbers we were able to report yesterday for the quarter and for the full year. And really the trajectory of growth that we've shown over the past couple of years since we announced the transformation plan has been very satisfying, an upward trajectory in terms of revenues and obviously a 10-quarter expansion in margin. But while we've been demonstrating this upward trend in margins and profits, we've also been building the institutional capabilities of the company. We've been winning a lot more large deal. And as we get into FY27, that is really what is giving us the confidence, the very solid foundation that we've built for the business, and the backlog of large deals that we have now created. It obviously gives us more revenue visibility into the current financial year, and leads to our confidence that we'll be able to meet the commitments we'd made to the market of a 15% margin and growth ahead of our peers.
You know, the big talking point really for your space is the impact of AI, and some of the other companies have talked about deflationary impact of AI that they will see on revenues. Now, you don't talk about AI revenues as a separate a separate reportage like some of the companies do. Can you give us some visibility on AI revenues, and do you see any deflationary impact at all?
Sure. So look, AI clearly is a very big theme for not just for our industry, but obviously for the entire world. It is driving a huge amount of productivity, and hopefully in the future will lead to revenue expansion for our clients and for ourselves. The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line. In the short term, though, there is a concern that some of the productivity asks that are being driven by the client will result in some revenue compression for the industry as a whole. But I feel that the overall size of the opportunity is very significant. Every single technology transformation wave for our industry, whether it was the Y2K movement or the enterprise apps move, was positive, and there's no reason why they should be different.
No, so what is the kind of deflationary impact you would see? Some are saying 2 to 3% for their businesses or for the industry. Are you seeing any kind of deflationary impact or hit on revenues in that range?
Look, I think the 2 to 3% number has come by only yesterday from one of our peers. It's not something that that I've seen previously. Clearly, for any portfolio, you've got a large portfolio, for instance, of application management or application maintenance or infrastructure. And when these deals are being rebid or they're being repriced, there's a certain expectation of productivity from clients. But that productivity expectation has always been there. Maybe now there is an AI flavor to that. But I would not say that there is a specific set number which is deflating, revenues because of AI, which is anything hugely different from what we've seen in the past.
Okay, so at the cost of repetition, just because this is an important point, I'm going to double click on it again. Are you saying that you're not seeing any impact or any deflationary impact of AI on revenues going forward?
Sure. So look, what I'm saying is there is clearly a productivity expectation from clients. Some of that productivity expectation is driven by adoption of new technologies. But it's very hard to strip apart the two, saying what is a normal productivity expectation in a rebid versus what is the productivity expectation because of AI. And also the fact that you really can't separate just the deflation. You also have to look at the opportunities that you have for expanding your portfolio of offerings. So it is not just the one thing, right? It's multiple things altogether.
Okay, so you're not looking at it that way. Fair enough. Talk to me about BFSI. That's where you've seen sharp recovery. What has led to that, and what has worked in this one vertical?
Fair enough. So if you look at our recovery, not even our recovery, our performance in Q4 was quite broad-based. Manufacturing actually was the fastest growing vertical for us. We also did extremely well in telco, which has been sort of a home market for us. For BFSI candidly is our third largest portfolio, but clearly is the largest spender in terms of technology. The way we've gone about it is we've obviously looked at our existing set of accounts and the headroom for growth there. We've opened a number of very promising accounts, Fortune 500 companies, which we feel we have the opportunity to scale. And we've really brought in world-class talent from the industry. So I think a combination of these three factors, headroom in existing clients, new client acquisition, and new talent acquisition, I think these three things are helping us. And I'm quite confident that as we move into the current financial year, this tailwind that we've had should continue.
You know, maybe it's a matter of timing, but I'm asking you another question which is stemming from commentary from one of your peers. Communications is your largest portfolio, and now, commentary coming in that discretionary spending is lowering in communications or in telecommunications. Are you seeing this?
I think that commentary was very specific to a client or to a set of clients. Really, as I look at our telecoms portfolio, we do see opportunities for expansion and for growth in the current year. But that's also because our telecom portfolio is structurally different. For a lot of our peers, their telecom portfolio is only in the IT space. We obviously have a significant IT component to our telecoms business, but we also have a large BPS business. We have a very large business in network services, right? And networks really are core to telecoms. We also have a very successful product business in Comviva that has grown at double digits for the past 2 years now. So I do feel that we're feeling optimistic about the opportunities in telecom. There will obviously be client fluctuations and client-specific discretionary spends. But our broader portfolio and the fact that we are not dependent on a handful of clients and have broader global coverage should insulate us to a degree.
Okay. In terms of your deal pipeline looking strong, you've spoken in some detail about some of the new deals or the ongoing deals, Orange, FICO, for example. What is the translation to revenues looking like? Can you give us some color there?
Yeah. So look, usually these deals take a couple of quarters to ramp up and then to ramp up fully. We expect these deals to follow the same trajectory. It usually takes between 3 to 6 months for the ramp ups to start, and then we're hoping for a healthy uptick from these deals in the remainder of the year.
When I look at the numbers that have been reported this time, I think the hedging has hit maybe the profit number, and there has been a relook at the hedging policy, I believe. Can you just give us some more details on that?
Sure. So look, like all the other players, we do hedge our FX exposure.
Yeah.
But given the extreme volatility that we've been seeing from a currency perspective, right, we have now started to reduce the tenor of our hedges quite significantly. So from an average of 2 years, we have come down to an average of 1 year or less. And that is the way we are dealing with the exposure. It can clearly go both ways. We are not a bank, we're not a treasury operation. We just want to minimize the risk that we have to our earnings from foreign currency volatility.
Okay. In terms of hiring, as you ramp up your deals, is it going to lead to more hiring? Because you have a net negative hiring for the year at minus 6.5%. Is that net negative hiring an impact of larger AI optimization?
Yeah, look, I think first, I think that the net negative number is slightly smaller than that because you've had quarterly variations and you do have a lot of seasonality in our BPS business. I think the way we've been looking at it is a lot of the incremental revenue that we've generated, we've been able to staff it with the efficiency that we're seeing from our fixed price programs, right? I think we are quite clear about the fact that our fixed price programs had some efficiency to deliver. And I think as people get released from that, we've been using them for new projects. Clearly, as we see growth, we will be hiring, as our Chief Operating Officer had shared yesterday. Even despite a muted growth last year, we did take on over 900 freshers, and we expect to take on more than that in the current year.
To what extent? Any kind of outlook that you can give us in terms of more freshers that will come in?
Well, look, we recruited about 6,000 in FY25. We recruited about 900 plus in FY26. I think it would be more than the FY26 number, but certainly less than FY25.
Okay, so the trajectory is not growing in that sense. It's an important, broader point to understand.
It's growing. It's growing. It's not going to hit an all-time high. That's all.
Okay. As we wrap up, Mohit, I want to get your view on the commentary about how Indian IT companies are standing up against the AI wave. How do you answer some of those questions that I'm sure you're being asked all the time?
So look, my sense is that this is an industry that has evolved over time. I've been part of the industry now for nearly 26, 27 years. And I think over time, the industry has really deepened its level of ability to play at the technology cutting edge, has developed a very deep understanding of our clients and of our clients' industries. And as AI gets more broadly adopted, as is the need to modernize the existing technology stacks and to build new AI stacks, the industry has the role to play, to play in this transformation and in building a bridge between the old stacks and the new stacks.
Okay, thank you so much for your time. Mohit Joshi there, CEO and MD of Tech Mahindra on the quarter gone by.
All right, well, that's the management of Tech Mahindra. The stock is Well, it is losing a little bit of ground, and really that's more to do with the valuations than anything else. The stock reacting not necessarily to earnings. But we've come off the low point of the day very quickly. Now, just down about 100 points thereabouts for the Nifty 15. The broader markets actually trading in the green. On that note, let me welcome on Nitin Bhasin, Head of Institutional Equities at Ambit. Nitin, thanks so much for taking the time. How are you reading where things stand right now? Because even in this conflict, which has now gone on for a little over 50 days, you've seen various stages. And at this moment, it seems like it's a siege and we're waiting for something to give on the negotiation table, but the markets don't seem to be too worried. What do you think?
I think in the last 4 or 5 years of the various wars that have happened in the world and the kind of risks that we have seen, I'm pretty surprised that the Indian markets have been resilient. Even global markets have been to some extent resilient. I think it's the general flows availability in the world market. Perhaps they've taken most of the risks, which perhaps in the last 50 years would have been considered as, great shocks. And perhaps people understand the story post-COVID that, it was a one-time thing and then the market actually went on to create more highs. I would say the market seems to have taken this in stride that a lot of this could get solved in the near term. And from there onwards, the world as an economy will start through reconstruction, and which should be positive for corporates, though I have my fears around energy prices and lead inflation and hence pressure on consumption. But I think the world is looking at reconstruction and the business opportunities and the revival of growth post the war coming to an end.
In some sense, that's worrisome, right? Because if you think about India's energy dependence on imports and the current state of affairs, the market has moved in April as dramatically as it has. And we were just talking about this earlier today. Out of the 500 stocks in the Nifty 50, over 300 have seen an uptick of 30% in April. So the flows that came through for the mutual funds have been deployed clearly in the month of April, and we've seen a sharp run-up. Is this dangerous?
No, I wouldn't hazard to say that's dangerous, but perhaps prior to the month of March, there's a lot of cash sitting on the sidelines for the last few months, whether it was mutual funds, whether it was HNIs. And I wouldn't say that the mood is only the same for mutual funds. In my interactions with leading HNI brokers as well, what you get a sense is many of the HNIs as well as the institutional investors have deployed this money back in the market, because valuations appeared in many cases attractive, especially the mid cap and the small cap. And that's why when you give the number of 300 stocks or 250 stocks, it's a reflection of some technical factors like stocks trading below 200-day moving average. So people thought that, okay, in the history, that's never happened that the stocks don't make money in the next 3 months to 6 months whenever they start trading below 200 DMA. So perhaps that came in and people wanted an opportunity to buy. Valuations appeared inexpensive compared to last 12 months. And here you go, you have a very good bounce. I don't think it's dangerous. I would say it is the animal spirits or perhaps the buoyancy which people wanted to, display, but valuations were holding them back. Valuations were becoming acceptable. People came in. Our view has been slightly different. I can come to that a little later.
Let's come to that right away, Nitin. Hi, Tamanna here. Do you think valuations are now at acceptable levels?
No, clearly, for the last 18 months on your channel or otherwise, I've been highlighting to investors that it's been large caps, which have a much better possibility for you to either make return or not lose you money. Small cap and mid caps went through the last 2 or 3 months of crash, but that created some opportunities. I wouldn't want to say en masse, stay away from small caps or mid caps. Many stocks became very, very acceptable in terms of valuations. So hence, I would say, people should be looking at stocks which are good companies, can build businesses. But also at the same point in time, we've highlighted that we are still, as a overall cohort, more bullish on large caps in India for the next 12 months also. And hence, for that reason, can use this opportunity if you are stuck with not so good quality mid caps and small caps, where you think valuations are still punchy, use this bounce to trim positions to reallocate into large caps. I would still maintain that.
You know, it's so interesting because we speak to such a variety of people on this segment through the day and on the channel. And one view that emerges time and again, Nitin, is that, all right, large caps are safe, but have they really done anything? Do their valuations actually justify the kind of results that are being put out? Because quite a few of large Nifty companies have reported. Some are, of course, due to still report. But in terms of tech, banks, we have some picture of what's going on, even FMCG. Do you think that there is a case to this, that have the large caps deserved the kind of attention that you're talking about?
No, clearly, it is all about cycles of valuation and not losing money. Not always you can make money. Okay. So perhaps again, the large caps is not about every large cap will do well. There will be again pockets. Sometimes it will be private sector banks, and sometimes it will be the energy companies which will actually hold fort. Or perhaps people will start talking about Coal India as value stock, as a large cap to be held on. So, those arguments keep changing. But small caps in India, how many of the companies that we can say very clearly can grow at about 25% earnings or 25% EBITDA growth, and available to all of us at about 25, 30 times or 32 times. I think many of them are trading at about 35, 36 times FY28. So a lot of that is priced in. So I think rather than saying what is somebody doing or not, we in our team, we look at what's priced in. It appears that risks on the small cap and the mid cap are perhaps priced in little less relatively even today compared to the large caps. What is Nifty trading at? 19 to 20 times perhaps, or even less than that on a trailing basis. So I would say that's the reason what's priced in. To me, it appears less is priced in the large caps. If you want to make money, find small cap, mid cap ideas. But if you have large sums of money, it's only the large caps where you'll have some hiding place.
Nitin, ultimately, there is an expectation or greater acceptance that the macro factors that we are currently witnessing, with crude even today above $100 to the barrel, is going to have a bearing on earnings in FY27. The extent of damage is currently not known, both in terms of quantification as well as in terms of duration. So do you now discount an impact in only the first quarter and the second quarter as well? So what is your base case scenario for earnings growth for large caps as well as the broader markets?
I think for this particular year, you're rightly saying that the impact of the energy input prices, especially let's take a company like Interglobe. This year they'll have a very, very wild swing in their earnings because of the input prices going up. So we are still believers of closer to 9 to 11% sort of an earnings growth for Nifty for this year. Remember, 1 year back, you were thinking about FY27, 17 to 18% growth. Now we've already come down to 13, 14. A few of the companies will have very wide swings. So not 1 quarter or 2 quarters. I would say actually for the whole country as such, this could have an impact for about at least 6 to 12 months. Remember, this is having an impact on inflation. This will have an impact on supply chains. And the government will have to come in to step in to either question some things like the base minimum wage. We've seen that happen in North India. Whilst it helps the consumption at the bottom of the pyramid, it will have an impact on the margins of some companies. So I would say earnings predictability for the first quarter and the second quarter will be very, very hazy, but it'll start becoming a little better as we go during the year. But I think the whole year could see the impact of these energy prices, inflation, or supply chain disruptions, or even to some extent consumption issues at the bottom of the pyramid.
Nitin, what did you make of the IT pack? I'm speaking to you before Infosys, so okay, maybe that picture is not entirely complete. But are you in the camp that is very, very worried about IT?
Clearly, there are two views in this. Tamanna, we've always held. One view is definitely, if you take a little longer view of 2 to 5 years, there is a pressure on this entire sector because they haven't invested in the capability enhancement, which is getting challenged from the AI. Number one, the quality of deals is not getting any better, and the margin pressure will continue to have visibility in the company's numbers because of either inflation in the employee cost. But what happens is that stock prices go through sometimes extreme reactions because this is a gradual decline of the sector, perhaps. But the stock prices react much faster. Sometimes they can be oversold. So perhaps in the last 1 year, we've seen a couple of times being oversold. Right now, I wouldn't want to take that position that IT appears to be oversold. I would say I'll just give it some more time to form a proper opinion on exactly the IT sector today. But fundamentally, they're in a tough spot.
Okay, what about private banks? Are you as enamored by private banks as everyone else is? And since you talked about large caps being the place where you preserve wealth right now, should I hazard a guess that the answer is yes?
Yeah, nearly yes. I think we're not still overweight on the market in terms of extreme overweight on the private banks. Clearly, we prefer private banks and some regional banks in India compared to the public sector banks. Some of these banks, either it's ICICI or HDFC Bank, they've held their numbers well. But yes, I wouldn't say this is my number one idea is HDFC Bank in India. I wouldn't want to say that. But clearly, preservation of capital, some of these banks make sense.
Nitin, let me follow up on what you said, right? So the Nifty 50, 9 to 11%, and obviously this is an average, and so some laggards and some outperformers. Where do you think the outperformance is going to come from, and who's going to be the anchor here? Anchor in the bad sense.
Okay. No, see, if you think about today also, nearly closer to 50% of the growth contribution for FY27 is from the BFSI sector, and within that from the banks. I think after that, you could say perhaps sectors like oil and gas, let's see, OMCs could be the actually drags over there for a bit. You could have aviation, which is only one company, could actually be a drag on the earnings growth over here. So hence, you've got a few companies which are smaller sectors. Consumption, FMCG, I don't think is neither a drag nor just like a baseline number over there. Question is how autos behave. Because autos is somewhere we are seeing some buoyancy, but can that get impacted because of fuel prices impacting affordability or earnings pressure impacting affordability? So hence, I would look at auto more carefully over the next 1 year, or let's say 1 quarter or 2 quarters, to form a view that could autos become a drag because they've been holding up really well. What happens to them?
Okay, thank you so much, Nitin, for joining in today and answering all of our questions. Have a great day, and always a pleasure to have you on. As you know, as we wrap up with Nitin Bhasin, we've been razor focused, as we always are, on what's happening in the markets, but let's widen that and tell you what's happening in the rest of the country. It's an important day. Polling is underway for 2 state elections, so those political synergies matter. It's the first phase in West Bengal, undoubtedly one of the most important elections of this season. Tamil Nadu Assembly elections as well. Both are politically significant as they influence national power equations, regional leadership narratives, and center-state dynamics. I'm in fact going across to my colleague Shiv Arur, who's Senior Managing Editor of NDTV 24/7, to talk about why these elections matter in a national perspective. Shiv.
All state elections are crucial from a national perspective, but you couldn't find 2 better examples of states that fit that description than Bengal and Tamil Nadu, the 2 states going into the polls today. Tamil Nadu in a single phase. This is the first of 2 phases for Bengal. Both very, very high-profile states with a large number of seats, and both incredibly interesting from that national perspective. First, let's take Bengal. Bengal is a state that has a typically ill-tempered election already. This is a state where the BJP is seen to have a certain degree of momentum. 15 years of incumbency of the Mamata Banerjee-led Trinamool Congress, framed as an outsider versus insider kind of battle, the non-Bengalis versus the Bengalis, the SIR issue, which is largely seen politically within Bengal as a Chief Election Commission imposed kind of issue on Bengal for these elections. All of this makes it very much a kind of center versus the incumbents in Bengal kind of political fight in many people's perception. And that's the reason why it's very important. Remember that Bengal, beyond all of this, is hugely important to the BJP. They came pretty close to a real upset in the last election in 2021, and therefore this time they've got a real point to prove. They're depending on increased anti-incumbency. What was then a very, very personal fight has become largely about issues this time, but that doesn't mean it hasn't lost its kind of very personal flavor where it's framed as Modi versus Mamata even at this time. So that central flavor to this election in Bengal is unignorable and undeniable. Move down south to Tamil Nadu. This is a state where literally the incumbent chief minister has pitched the battle as a center versus state fight, whether it is delimitation, whether it is state contributions to the national exchequer, taxes, etc. It's been a north-south divide that's been brewing over the last few years. Remember that the DMK has never scored a successive win in 2 elections back to back. You've got the NDA trying to create a larger footprint inside Tamil Nadu. You've got the Prime Minister's own sort of special interest and special love for Tamil Nadu. We saw that in the run-up to the Lok Sabha elections as well. And that makes the sort of central tadka or the flavor in Tamil Nadu also similar to Bengal, very, very undeniable. These are both states with very strong local identity, local politics, distrust of the outsiders, framing the outsiders as those who want to come and disrupt the traditional political realities of those states. So the BJP, with a point to prove, treats every election like a do or die battle. So it stands to reason that all of these states have a great amount of importance from that national perspective. So Bengal and Tamil Nadu are going to be very, very interesting.
And we'll be watching all of the action. Thank you so much for that, Shiv. Here's the thing. This report has gone viral, which says that you will see fuel prices at the pump go up $26-27 after the elections. I think they may have preempted it a little bit, because I don't know if anyone can come and now raise prices to that extent in any case. But now that the story is out, one doesn't know.
Rumors about prices increasing for fuel and Diet Coke.
And Diet Coke is just not there. Forget about price increase because of no aluminum cans, I suppose. We'll definitely need one after this show, but that's all the time we have on India Market Open. From all of us who put the show together, thank you for watching. Stay tuned. Your questions answered next on Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit.
Welcome. You're watching NDTV Profit. I'm Mahima Vachharani, and Havells India is in focus on the back of its Q4 earnings. For sure, a beat in terms of where growth in cable stands. Lloyd's and electronic consumer durables, of course, did see a drag, and this is on account of Q4 not being a very strong season for consumer durables as a whole. And macro outlook, of course, will be something that we'll be watching out for in terms of future demand considering competition. But to take this conversation forward, we're joined by Anil Rai Gupta, who's the Chairman and Managing Director at Havells India, joining us now. Mr. Gupta, always a pleasure speaking to you. My first question is with regards to cables and wires. That's one of your strongest growing segment this quarter. Just want to understand, considering the competition clearly rising, how sustainable do you think this growth is going forward in FY27?
Thank you, Marima. I think cables and wires is not only the demand is strong, but also the fact that Havells has continued to invest in the capex cycle in the last couple of years, which has given us good capacity for our industrial cables business, which is underground cables. There we see a fast growth in the entire year and the fourth quarter last year. In fact, the stronger segment, which is the largest segment amongst cables and wires, which is the domestic wires business, did see a revenue flattening in the fourth quarter because of the fact that there were raw material price disruptions and destocking of the channel during the first half of the quarter, and also a high base over last year. So I think overall it's a mixed performance, and we look forward to the coming year.
With regards to Lloyd's as well as your electronic consumer durable segment, of course Q4 is not the strongest quarter, right, because of delayed summer, etc. But now that summers have really picked up, how are you seeing the traction of demand coming in for both of these segments?
I think last year was a dampened year because of this summer season. The inventory was built up at the channel. The consumers were not really picking up the material, and the industry faced huge headwinds in this business. I think going forward, fourth quarter was not really a marker for this because there were channel inventories. But I think going forward in the first quarter, we should see a stronger summer as compared to last year, which would mean a higher growth in this business as well.
Mr. Gupta, with regards to your raw materials, I believe that they will have inflation because of this entire West Asia conflict. Just want to understand as to how much of an uptick have you seen in terms of raw material inflation, and how much of that will be impacted in Q1 and Q2? Because I believe that to a lot of extent price hikes are going to cater to it. But what is it looking like? What is the scenario looking like right now?
Yeah, I think we are undergoing this challenging period because, we started off the calendar year January with already some raw material hikes in copper, aluminum, silver. But with this West Asia conflict, the other products like petroleum, which directly affects engineering plastics, they also came under purview. And because of this, price hikes are imminent, which has been going on and it's continuing. And I think while it may affect, because sometimes the entire cost cannot be passed on, so it may affect the margin, but also I think what we are more concerned about is how it impacts the demand. So we're all looking forward to a reasonable conflict resolution in the West Asia market for markets to settle down and the demands to become normalized in the coming quarters.
Got it. Mr. Gupta, overall, if we take a look at the sales growth for FY26 as compared to FY25, it's been a tough year, right? It's seen a growth of around 3 to 4%. Going forward in FY27, considering demand, considering competition, considering this impact of West Asia conflict as well, what are the growth projections internally that you would have discussed for top line as well as bottom line coming in?
Well, I think last year, you're right, the growth was in low single digits, also because of the fact that our major portfolios of air conditioners, fans, air coolers, they actually saw a negative revenue growth in the last year. So going forward, I think this year looks very positive from all points of view, but also from a numbers point of view. If you see, we see price hikes here. We see a good summer, a low base last year. So frankly, even if there's a decent growth, I think, we'll have to look at 2 years as a whole or CAGR. So we are expecting much better growth in the coming year because of these factors what I talked about, but our continued investments in brand, distribution, product innovation. So that's the real key for us, for our growth drivers in the coming year.
Got it. And for margins, they'll be in the same range as they were in the last 2 years?
But we strive for, normalized margins, increasing market shares. But as I said, this West Asia conflict is something which is, I would say very fast, but also temporary, hopefully. So let's see how the margins pan out. But our strive will be to, recoup our margins through our strong brand innovation and distribution.
All right, Mr. Gupta, thank you so much for being so candid with your answers and of course taking out the time and speaking with us at NDTV Profit. Hello and welcome. You're watching Ask Profit here at NDTV Profit. You just heard the management of Havells India. Let's try to pull up the chart and see as to how it's doing in trade today. Yesterday, it did see an uptick post announcing its earnings, but did, of course, fall off from its day's high point in just a bit of time. And today, it's seeing a knock of almost 6% But that's with regards to where, of course, Havells go. Let's take a quick look as to how the markets are also doing. Let's try to pull up the benchmark, the Nifty 50 as well as the Bank Nifty. The Nifty 50 right now is trading with cuts about 0.6% off from the day's low point, but still trading around 140 points lower. The Bank Nifty also seeing a downtick of around 0.8%. Let's try to pull up the Nifty 50 heat map to see as to what are the counters that are putting pressure when it comes to the entire Nifty 50 chart. There's Trent, which is trading 3% lower, probably seeing profit booking in trade today. It's run up almost 30% in the past 1 month. Shriram Finance also taking a knockdown by about 2.6%. Tech Mahindra, M&M, Bajaj Finance, Bajaj Finserv. So both Bajaj Twins also not doing well in trade today. All of these down in that range of 2% each. But on the flip side, Dr. Reddy's is something which is flying in trade, up 7%. Followed by Cipla. So pharma as a whole is doing very well in trade today. Geo Finance, even Sun Pharma is up by about 1%. ONGC, Nestle are some of the other counters that are doing fairly well. Let's try to pull up the sectoral heat map to take a look at the sectoral picture. At this hour, you have Nifty Pharma, like I said, up 2%, followed by something like the Nifty Energy doing fairly well, but Auto taking a knock, down 1.8%. Realty also seeing profit booking today, down 1%. Consumption as well as PSU banks also seeing profit booking. So that's with regards to where the sectoral indices are concerned. The broader end of spectrum, also let's try to pull up the mid cap 150 and the small cap 250. Not that bit of a pressure coming in on both the mid cap 150 and small cap 250 as compared to the benchmarks. But still, the small cap 250 down by about 1.15% and the mid cap 150 down by about 0.2%. But with that, let's start taking all your stock related questions, and to answer them, we are joined by Kush Bora, founder of kushbora.com, and we'll be soon joined by Shahina Mukaddam. In fact, we are joined now by Shahina Mukaddam, the independent market expert. The first question that's coming in from Archana, who's writing us from Mumbai, asking about Pine Labs, whether an entry into this counter makes sense right now or not. Shahina, a very good morning to you. I'll come to you on this one. Your view on Pine Labs?
Well, I think the overall IT segment and especially the small cap is not really doing too well. So I would suggest that better opportunities available rather than Pine Lab as of now.
Right, the next query is coming in from Satyan and it's on Som Distilleries. He has bought few shares at a price of around 150. He wants to know whether should he continue to hold on to this counter for the next 6 months. Any view on this, Kush?
Hi, first of all, very good morning, guys. I think you said the buy price was 150, right? I mean, still some distance away. The trajectory is northwards, so I would suggest a hold with a stop loss around the 88-89 zone. But I think you should start exiting at slightly higher levels of about 110 and 125. 150 will perhaps take some time coming.
All right, viewers who are tuning in, you can also give us a call on the number that's flashing on your screen up there, or send us your queries on the WhatsApp number. The next one is coming in on Trent. The buying price of our viewer is 4320 and 18 is the quantity that he or she has bought. Wants to know the outlook for this counter in the next coming days. So looking from a short-term perspective, Kush, profit booking definitely on the cards for this one today. Would you recommend to continue to hold for a few more days after seeing that 30% run up in the past 1 month?
Yeah, so I would suggest holding on to this one. The reason being that, yes, there has been a run-up, but the stock is seeing good volume accumulation over the last few sessions. Now, one, because of profit booking, two, there was a resistance around the 4,500 mark of the 200-day moving average that is also playing up. But from a medium to long term perspective, what's happened is that there's a falling trend line resistance that the stock has broken. So there's a good possibility that once this profit booking is over, the stock could resume its upward move. And even now with this kind of dip, the stock is not too far from the buying price. So my suggestion, continue to hold. Keep a stop loss slightly deepish, close to the 4150 mark, and continue to hold.
Okay, the next query is coming in from Abdul Rashad from Kerala, and it's on Cupid. He wants to know whether this is the right time to enter Cupid for the next 6 months. Any stop loss, any target that you could suggest on this, Kush?
Yeah, so my issue with this stock is that, once it starts to run, it gets overheated very soon. And that's the case even now. We did see a sharp run up on this stock in the last just about month or so. From 77, it's gone up to about 112 right now. So overheated. I wouldn't suggest an entry now. If you see the primary trend for this one for the last couple of years has been phenomenal. So yes, you should buy it on declines. Maybe close to the 95 to 100 support zone. You could consider an entry. Right now, no.
Okay, all right. The next one that we have is from Mohit, who's asking us about a couple of names, but I'll take GAIL from his portfolio. He wants to know whether he can continue this continue holding this from a long-term perspective. Shaina, your view on GAIL?
Well, from the long-term perspective, it is fine, but I think in the shorter term, it will go through some issues because of one, availability of gas, and two, the pricing also. We really don't know what would be the exact impact on profitability. So I would suggest that it is better to wait to buy GAIL, and if you're holding, I would suggest it is better to sell at least half the quantity as of now and review after 3 weeks.
Okay. The next query is coming in from Vijay from Chennai. He wants to know the short-term target on Indigo. Kush, any view on Indigo?
Well, there is a recovery, but I don't think it's it's a meaningful one at that. It's more of a recovery from the oversold territories. The stock was anyway hammered, for even before the war and the issues started. My suggestion from a near-term perspective, the recent swing highs of 47, 47.50, those should be your targets. If that is taken out, the stock could move higher, but right now the volume action doesn't really confirm that. So from a short-term perspective, 47, 47.50, these are your targets.
Okay, all right. So that's the view coming in on Interglobe Aviation. The next one that we have is from K. Parthasarathy, who's writing us from Chennai, asking about IRCTC. He's bought 80 shares at the level of 760, sitting on a loss of around 30% right now. Wants to know whether to hold, add or sell more from a long-term perspective. Shaina, your view on IRCTC?
As of now, I think it's the hold because, we are likely to see good numbers going forward. There are a number of, the Vande Bharat trains that are coming on. And I think this will increase their revenues over a period of time. Also, their catering business is doing pretty well. So as of now, I would say it's a hold.
Dilip from Kolkata has few shares of Voltam Transformers. He wants to know whether should he add more from long-term perspective. Shaina, any view on this?
Voltam Transformers, I would suggest that he can add at current levels. I believe in terms of valuations, it is reasonable. It's a small cap company. And I think you can add, but don't add all at one time because of the overall market is a bit volatile. So add it in a staggered fashion.
Okay. The next one that we have is coming in from Kishore, who's writing us from Hyderabad, asking about Siemens Energy. He's bought 49 shares at an average price of 2,700. Wants to know if he can go ahead and add more. At this point of time, he wants to know the price at which he can average. He wants a technical view on this one. Kush, I know you would not recommend averaging, but your overall view on the charts for Siemens Energy?
Not bad at all. The stock's actually seen a very good recovery, a very good revival. It's broken out above that 3,000 resistance zone and then gaining strength from there on. Also the 200-day moving average close to that mark, that was a resistance. So multiple technical events, for the positive working for Siemens Energy. My suggestion, you should continue to hold. As far as, adding more is a concern, maybe on slight declines close to the 3,100 mark is where you can consider. It has a reasonable support. Broadly the 3,000 to 3,100 mark will act as a support, but yes, if you do want to add, that's the zone where you can consider adding some more.
Okay. All right. Now, Godrej Industries has been in focus. Just to explain their corporate structure, it holds around 23.7% in Godrej Consumer Products, 44.8% in Godrej Properties, 64.8% in Godrej Agrovet. In fact, Pirojsha Godrej takes the helm of Godrej Industries Group at one of its most pivotal moments. In an exclusive chat with NDTV Profit's Nisha Podar, he sets a 5-year target of building 5 lakh crore market cap powerhouse and scale it further. Here's a snippet of that conversation.
First of all, you of course have big shoes to fill. What is the ethos that, or the legacy of Godrej that you are going to carry forward, and what are your aims and targets for the new vision?
Yeah. Well, thank you. Of course, it's an exciting opportunity for the group. I think we're at what we think is a fairly unique moment where we can celebrate both being a 129-year-old group with a founding in 1897, but also in our new format as the Godrej Industries Group, just a 2-year-old group since the restructuring of the Godrej Group. So we want to try to bring together the best of those things, the strength and confidence that the legacy of the brand gives us, but also add to that the kind of youth, ambition and energy that we hope to bring to bear through our new structure. Right. So I think, the values that the group has always stood for that we want to take forward are inspiring trust first and foremost. I think the group has always stood for a certain way of doing business, and we want to make sure that we celebrate that, we build that into the culture on an ongoing basis, and that we never forget that part of where we've come from. We also want to be very focused on creating delight. We think, if you look back both to the recent past, but the further away past, there are many stories and many examples of the group really doing something very innovative, creating true delight for our customers, and we really want to take that forward. And last but definitely not least, we want to be very bold. The group has had a tremendous track record, a tremendous record of innovation and progress at all times. And we want to make sure that the brightest period for the group lies ahead. And think boldly about the opportunities and the possibilities to take all the tremendous advantages we enjoy and carry them forward to this next period.
I'm glad that you stated all of that, because it's not easy to be building sustainable businesses over 100 years. Very few conglomerates have managed to do that, Pirojsha. So therefore, the big task that you have ahead in the new identity of Godrej. But of course, you targeted the 5 lakh crore rupees of market cap in 5 years from now. You're just under 2 lakh crore rupees at the current moment. So what are the growth areas? What are the plans in the new version that you are going to really focus on for the business?
There's a lot of exciting opportunities. So at the Godrej Industries Group level now, we have 6 different operating businesses in sectors as varied as real estate, FMCG. Our agri-business in and of itself is a conglomerate with 6 or 7 different verticals under it. We also have in the unlisted space some very exciting new businesses like Godrej Capital, our financial services play, which is our youngest business, just started about 5 years ago, has seen a lot of progress in that period, but we have big ambitions for that business. We also have a legacy oleochemicals business called Godrej Chemicals that we're trying to put into the direction of becoming more of a specialty chemicals player. Quite excited about the opportunities there. And lastly, we have a business called Godrej Ventures that has a film studios business, a managed office platform, as well as a core office in partnership with Godrej Properties. So these 6 businesses tapping into almost all parts of the country's economy, whether you look at the agri economy or the urban economy through real estate or the financial services opportunity. So really quite optimistic about the possibilities in each of these. We've had many notable successes in recent years. If you look at the last 5 years, cumulatively these 6 businesses have delivered a compounded sales growth of over 20%, also a compounded earnings growth of over 20%. So we want to sustain that growth, make sure earnings per share continues to grow at over 20%, add to that an expectation that each business individually delivers a return on equity of at least 18%. Bringing together that growth and efficiency is what we think can unlock this value and take us from where we are today to this 500,000 crore aspiration. We also think there's an opportunity over that period to list a couple of additional businesses.
All right, so that was an interesting conversation with Pirojsha of Godrej Industries, of course. But let's start taking your stock-related queries as well. The next one is from Saurabh Goyal. He's talking about Garden Reach Shipbuilders. He's bought it at the levels of 2375 and wants to know whether he can continue to hold or book profits at the current levels. Kush, what would you recommend?
Yeah, so I think he's bought it at fairly interesting levels. The stocks had a good run. My suggestion would be to book partially, but continue to hold. The stock's got good momentum, good volume action. There is a golden crossover also, about to occur. So technically, it's got a few things going for it. However, resistances around this 2875, 2900 mark. Multiple times the stock has retraced from there. So you don't want to be, still holding on if the stock slides yet again from those levels. So my suggestion: book partially, hold the rest with a stop loss at the 2725 mark.
Right, the next query is coming in from Hiren from Surat, and he's holding shares of Colgate and Devyani, currently sitting on a loss on both the counters. He wants to know whether should he continue to hold this further or sell. Shaina, any view on Colgate and Devyani?
Well, Colgate has been an underperformer if you look at it over a longer term period. I believe in FMCG, that is not my top pick. So as of now, I would switch from Colgate. And Devyani, I think QSR inflation has impacted their profitability to some extent, but with the consolidation happening, I believe Devyani could be something you could look to add, but add it at depths. Hopefully, the inflation over a period of time will come off. As of now, we are facing some issues because of raw material prices going up and other food prices also remaining reasonably high. So I would say you can add Devyani, but add it in staggered fashion and over a period of time.
Okay, all right. The next one that we have is from Amit, who's writing us from Dubai, asking about two sugar stocks, Dalmia Bharat as well as Praj Industries. He's saying that he's got 500 shares of Dalmia Sugar at 400 rupees. Wants to know the target price for the next 1 year. Kush, all of these stocks are flying in trade today, of course, on the development coming in, but your view with regards to where charts go?
Never been a big fan of this space. There is a momentum that comes in, of course, sometimes news backed, but then it just fizzles out equally quickly. So my suggestion would be to be nimble footed on some of these names. However, that said, Dalmia Bharat has had a good run, continues to depict higher price action along with good volume action. So yes, you could continue to hold. I think the stock has enough and more momentum to go to about 460 to about 475 levels in months to come. So yes, you could continue to hold, but I would suggest a stop loss at the 385 mark. And like I said, you have to be nimble footed in some of these names.
Kush, the next query is again for you. It's coming in from Ramana from Bangalore. He's holding 500 shares of Bank of Maharashtra, bought at a price of 64. He wants to know whether should he book profit, hold or add more at the current level. Any targets or stop loss if you would suggest?
Yeah, so I think Ramanna's perhaps been listening to us, especially on the morning show on Ask Profit as well, where we've suggested Bank of Maharashtra as one of the preferred picks in this space. The stock's done phenomenally well. What you're seeing right now is more of profit booking. 77 was a key resistance level for the stock of a rounding bottom formation breakout that came about. That acts as a support. So right now, I would suggest, even if it's not too far off, keep 77 as your stop loss. Given that your buying price is lower than that, this will act as a trailing stop loss and help you take some money off the table. So hold, but with a tight stop loss at 77.
Okay, all right. The next one that we have is on Maruti Suzuki. Mahalakshmi from Hyderabad has been holding 4 shares at the levels of 6,675 since 2021. So she's been a patient investor. She says that now she wants to go ahead and sell this and buy into something like a Hyundai or Ashok Leyland from a long-term perspective. Shaina, would you recommend that?
No, I would suggest continue to hold Maruti. That the valuations, in fact, are quite reasonable. It's available just about at 20 times EV to EBITDA. In fact, if you see the capacity addition that they're planning over the next 3 to 4 years is pretty aggressive, and they've got good new launches. The question on Ashok Leyland also, I think Ashok Leyland should do reasonably well, but I would prefer Maruti over Ashok Leyland. So you continue to hold Maruti.
Shaina, as well as Kush, it's time for our rapid fire round. You both know the drill. I'll take up the first question, which is coming in from Arvind. Arvind is asking about Canara Bank. He says that he's bought 2,000 shares at levels of 161 and this is before the stock split happened, and wants to know whether he can continue to hold this from a really long-term perspective. Shaina, your view?
Yeah, it's a hold. They are expected to do pretty well, reasonable valuation.
Okay.
Arun from Hyderabad is holding few shares of RHI Magnesita at a price of around 110 rupees. Should he continue to hold for long-term, Shaina?
I'll pass the stock.
Okay, the next one is on Thangamel Jewelry. V. Murli from Bengaluru has bought 150 shares yesterday at 4077. Kush, the momentum is still there on this one?
Yeah, the momentum is there, but it's seeing some profit booking for the last 3 to 4 sessions. So my suggestion would be, ideally you should put a stop loss, as in when you buy the trade. For now, I would suggest hold, but with a tight stop loss at 36.50.
Okay. Mr. Reddy is holding shares of Triveni Engineering around 329, bought at a price of 159. Should he hold or sell China?
He should hold it as of now. There's a lot of developments happening in that space.
iFinance is the other one. Ramesh from Bengaluru is holding 60 shares, bought at the levels of 130. Wants to know if he can continue to hold at this juncture. China, any view?
I didn't get the name actually.
iFinance. It's a recent listing.
Yeah, so I don't have any view.
Kush, enough data by any chance on the charts?
No, afraid not.
Yeah.
Okay, Soumya from Bangalore wants to know whether is it a good time to enter BSC. Kush?
Yes, have been fairly constructive on BSE for some time now. As far as the current entry goes, my suggestion would be to wait for a decline towards the 3350, 3400 mark and then enter.
Okay, Orion Pro Solutions is the other one. Suman from Kolkata is holding at an average price of 893 and 21 shares is what she has. Wants to know if she can hold or exit. Kush, your view?
You should continue to hold. Keep a stop loss at 835.
The next query is on Galaxy Surfactant for you. Kush Jayakrishnan is holding few shares, bought at a price of 2,015 rupees. He wants to know whether should he continue to hold this counter for the next 6 months.
Yeah, about to break out, but volume action still not very encouraging. But yes, given the jump, you can hold stop loss at the 1740 mark.
Okay, the next one is on Aditya Infotech. Our viewer Sagar is holding more than 5,000 shares is what he's saying. Can he continue to hold this from a slightly long-term perspective? Shahina, any view?
No, I don't have a view on this.
Kush, any view on the charts?
Yes, you should continue to hold. In fact, you can add more near the 2,100 mark as well.
Okay. Next query is on HDFC Life. Jivan from Hyderabad wants to know whether is it a right time to enter or could there be more correction to this counter. Shahina, any view?
I think there will be a bounce from here, in fact, for the overall sector. The sector has corrected. So it's a hold and a buy at any dips you get.
Okay, Wellspin Corp is the other one. Rajesh Maheshwari is holding 150 shares at an average price of 573. What's the short-term outlook for this one? Kush?
Wow, I think you should book profits at least partially right now in this one.
Next query is on Praj Industries. Somesh from Kerala is holding 150 shares at a price of 369. Any near-term targets on this, Kush?
First suggestion would be to book profits already overheated, and you can then continue to hold on to the rest of the quantity for about 435 and 455 kind of levels for coming weeks.
Okay, ITC Hotels. Vijay Kirti has bought at the levels of 199. 700 shares is what she's holding. Continue to hold from long-term perspective. Shahina, or shift to Tata Power?
She can continue to hold ITC Hotels. I think there will be a bounce over the next 6 months to 1 year from these levels.
Vijay Kumar is holding close to 10,000 shares of Vedanta, bought at a price of 708 rupees. Should he continue to hold or sell this counter, Shahina?
You should hold it. There's a split in the near term which will be positive.
Alright, okay. So that brings us to the end of first rapid fire round. But time to slip into a very, very short break. We'll be right back answering all your queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
In
the factory floors of Guangdong to the policy corridors in Beijing. What is going to be China's next political, economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send us your queries on our WhatsApp number that's flashing on your screen up there. The next question that we have is coming in from Mr. Mishra, who's writing us from Mumbai, holding 50 shares of IRM Energy, bought at the levels of 462. At this level, he wants to know whether to hold or sell. Kush, if you can try to pull up the charts for IRM Energy. Any view? It's a small company, 1100 odd market cap, but any view on this one?
Very honestly, this is not something that I track very actively. This is the first time I'm looking at the charts, but just a very quick preliminary view. Stocks actually run up quite a bit. It's already overheated, taking out the 200-day moving average. You might want to perhaps place a stop loss at the 270, 275 mark, but like I said, I don't have a in-depth study on this one. So take it with a pinch of salt.
Okay, a caller query coming in from Vizag. Radha, you can go ahead and ask a query.
Yeah. Hi, sir.
Hi.
Yeah. Okay, sir. I'm having the Sumitomo Chemicals long from the 200 shares of 530 average.
Okay.
So whether shall I average or what is the long-term and short-term view on this? Whether my price will come or should I exit?
Okay. Shahina, any view on Sumitomo Chemicals? Should Radha add more shares to lower the average price, or should she exit?
Well, I think as of now you hold it because I think there is some bit of raw material price increases which could impact their profitability in the next couple of maybe months, a quarter, 1 or 2 quarters. So as of now, don't add, hold it, and then watch for the numbers as and when it comes to take a call. You review it later.
Okay, all right. The next one is coming in from Ashok, who's writing us from Andhra Pradesh. He says that, is it the right time to enter something like an Engineers India by booking profits in whatever counter he's holding, and wants to know, so he's already bought, my bad, he's already bought Engineers India at a price of 200 rupees. He's sitting on profits. Wants to know if he can shift to something like a Sai Silks, that is Kalamandir. Kush, would you recommend that?
I think Engineers India itself is doing rather well, and kudos to him on buying it at such a good price, holding on to this one for now. So I would suggest you should continue to hold on to this one. Yes, it is approaching the recent swing high of 250, 255, so maybe some resistance. But on the whole, if you ask me, the setup's pretty encouraging. But if you want to, yes, you can book partially. Sai Silk does not have a lot going for it right now. There is a bottoming out formation, which is in process. Maybe a close above 106, 107 perhaps will push that trigger. So maybe what you can do is not exit Engineers India completely, book partially, hold the rest, and enter Sai Silk once it closes above 106, 107, and then keep a stop loss at about 100.
Right. L&T Tech actually came out with its numbers, and if you look at what brokerages are saying on this counter, largely they have not changed their stance. ICICI Securities has maintained their hold rating, has marginally cut down the target price to 3,380 from 3,550, the earlier target price. Now they are saying that the company is looking quite robust post the cleanup that they have done. Apart from that, they also say that the portfolio rationalization has dimmed the performance in the fourth quarter. They have cut the EPS estimates for FY27 and FY28 by around 5 to 6% on the back of weaker than estimated growth in the high-tech vertical of the company. They also say that FY27 revenue growth will likely be in mid-single digit, given the fact that there is a strategic change, leadership change and macro uncertainty also. Now to give us more details on this, we are joined by Amit Chadda of L&T Tech. Firstly, sir, in the third quarter FY26, management explicitly stated they used that quarter to reevaluate market trends and consult with their clients to prepare the 5-year strategy starting FY27. So what has Q4 thrown up for you?
So what Q4 has and the year has thrown up for us, I mean, if I was to give you a summary numbers here, so we ended up at total revenue for the company ended up at $1,321 million, so $1.32 billion of revenues. If I look at continuing business, if I may, which is the business that we will take going forward because we have divested a part of our business, we ended up at $1.233 million of continuing operations, up 8.3% year on year. EBIT margins came in at 14.5%, and net income came in at 1281 crores, up 7.4%. Just in the quarter, for continuing business, we came in at a net income of about 347 crores, which is up year on year as well as quarter on quarter, 24% up year on year, 9% up quarter on quarter. Overall, mobility has stabilized for us and will grow in CY26. Sustainability is up 13% year on year, and tech has done well. They've grown about 19.7% year on year. North America as a market grew 12% year on year for us, and Europe grew 2.5% year on year, and both of these will continue to grow. Sixth quarter in a row where we've brought in about $200 million of large deal wins. In fact, one deal win is about $75 million over 5 years. And overall, thematically, H2 has been better than H1 as we stand today.
Also, can you provide any update on the large deal pipeline size, TCV trajectory, conversion rates, and expected ramp-ups that we are looking in FY27 top line?
Sure. So, see, Luca, if I look out, my pipeline today is up 31% year on year, right? And number one. Number two is that our large deal wins also, as we look forward, I am fairly comfortable with this 200 million per year trajectory. See, the entire large deal wins through the year stood at about $855 million, which is up 40% from last year. So we are entering FY27 on a good note. Margins are up and they should continue to inch upward. Whatever we had to stop doing, we have completed all that in quarter four, and you will continue to see the continuing business grow quarter on quarter from here on as you go forward. Lastly, we've actually added a 50 million account in our category as well. So after a very long time, a 50 million plus account, and we're sitting on a number of large deals in the 3-digit category, TCV 2-digit category, and we believe that will help us. Additionally, we have done two more things as we look forward. One, from a headcount standpoint, after a long time, we've added about 500 net headcount in the company. I do believe that as I go forward into the year, I will add another 500 headcount. The number of AI patents has gone up in the company, and we are pivoting on engineering intelligence, like I've told you. And finally, we made a little bit of a change. We've actually re-designated one of our board members to become the head of strategic initiatives, large deals, and growth markets, because we want to focus on that. And we've also inducted our CFO on the board of the company. So those have been, in a nutshell, what we have just done.
Now that FY27 marks the formal start of a Lakshya 5-year strategy, can you give us some specific revenue growth band for FY27 in constant currency terms?
Sure. So if I look at FY27, you will see the company strive for between 13 to 15% CAGR. So if I look back at the past, if I may, here, See, we grew at about 12.4% CAGR over the last 5 years, which was higher than the industry, which grew at about 8%. As I look at the next 5 years, I aspire to deliver between 13 to 15% CAGR over the next 5 years in an EBIT range of 16 to 17%.
But sir, analysts are watching for FY27 guidance as that is the ultimate needle mover. What are you penciling in there?
So FY27 will be higher in terms of growth than the organic growth we had in FY26 for sure. But story to be played out. As you are aware, we have stopped giving annual guidance. That's why we are providing a 5-year view and very fairly comfortable in this 13 to 15% band in a 5-year period, and largely driven by organic growth.
Thank you, Mr. Chadha. Thank you for joining us and giving us the way forward for L&T Tech. Well, that was the management. The stock is down around 2.5% in trade. Moving on to our next query coming in for Kush. Puneet from Ghaziabad wants to know whether Lupin or Fortis Healthcare, in which of this counter should he invest around 5 lakh rupees for the next couple of months? Kush, what would be your view here?
Mahima will be very happy about this. The jinx continues. Whenever Punit is not around, we get a query from someone, his namesake. So that's obviously on a lighter note, guys. I think both of these stocks have a good structure. Lupin, by the way, is on the cusp of a breakout from a long-term perspective. So definitely something to be kept on the radar. The breakout comes at about 23.75, very close to the current level. So yes, I will keep this on my radar. If you want to be preemptive, you can buy with a stop loss at about 22.75. So about 100 points lower. And Fortis Healthcare also has had a good run, a trending line breakout, 200-day moving average being taken out for the last couple of days. So good move on this one as well. So I would say good stock selection on both of them. Fortis also you can go ahead and buy, keep a stop loss at about 900, 895 zone.
Okay, all right. We've got our next caller. I think Anjali is calling us from Vijayawada. Anjali, go ahead, ask your question.
Yeah, good morning, ma'am. Thanks for allowing me to ask the query. And I'm having Vimta Labs of 1,000 shares at 700 price, 1,000 quantity at 700 price. So I'm holding from last almost 8 months. So what is the long-term and short-term view on this? Shall I average now any good uptrend, or shall I hold?
Okay. Sorry, Anjali, I got your question. I take this up with Kush. Kush, Vimta Labs, any view on the charts for this one?
Yeah, nothing to write home about, I'm afraid, because it's had a big knock. The rebound also is not as encouraging, and it's starting to see some resistances around the 495-500 zone. So maybe if 500 is taken out, and not just taken out, it has to be with some gusto, some strong volume backed action, then you could see it heading towards 535, perhaps even 560 kind of zones. But for now, consolidation, since there is a chance of a rebound, I would suggest a hold on this one, and the stop loss should be 450. There are a couple of technical support zones around that level.
The next query is coming in from Rajesh from Bangalore. He wants to know whether is it a good time to buy Gaudium IVF, the recently listed company, for long-term. Shaina, any view on this counter?
No, I don't track it.
Okay.
Next, Kush, by any chance, enough data on the charts to give a perspective?
Nah, afraid not, no.
Yeah, okay, all right, no worries. The next one is on GE Vernova TND. Jeet from Kolkata has bought at the levels of 4610. He's sitting on good profits of around 18% is what he's saying. He's not mentioned the quantity though. Wants to know if it makes sense to enter the stock right now and average from a long-term perspective. Shaina, your view?
Well, both the business prospects are good, as well as, the stock has seen a one-way rally upside from a long time. At the same time, I believe, so because of the sharp rally that we've seen in the medium term, I would say buy it at dips, because valuations are slightly on the upper side, but business prospects remain strong. So you could keep adding it at dips.
Okay, the next is a caller query coming in from Hyderabad. Ram, you can go ahead and ask your query.
Hi, good morning. So I do have a query on the public sector bank. So I have invested in HDFC for 10% portfolio. So I wanted to invest into the Canara Bank, into the public sector bank. Is it a good investment in the long term? First thing is, did I miss the rally? Is there any rally behind it actually?
Okay. Shaina, any view on Canara Bank? Good investment for a long term?
Yeah, I would believe so. It's a good investment. You can add Canara Bank. Valuations are pretty attractive. It's just at one-time price to book. And also, I think the balance sheet quality is improving. So you can add.
Okay. All right. The next one is coming in from Gayatri, who's writing us from Palakkad. She's saying she's bought Delta Corp at 72 rupees today. Saying that is it a good bet from an intraday perspective, considering it's already dropped to 70 rupees? Coach, what's your recommendation on this one?
Yeah, no, from an intraday perspective, no, as you've rightly identified, the stock's already cooled off from the highs. And if you see the charts, bang on at the 200-day moving average, it's hit that high and retraced from there. While the volume action yesterday and today is very encouraging, until it takes out the 200-day moving average near that 73 mark, I suppose, there will be some hurdles along the way. So from an intraday perspective, not too far from your buying price, I would suggest an exit right now.
The next query is coming in from Suman from Kolkata, and it's on ITC Hotels. He has around 670 shares, bought at a price of 199 rupees. Any long-term view on this, Shaina?
Yeah, I'm positive for the longer term. In fact, I think these are the levels you can average and hold it for a 3-year period. They are expanding and they should do pretty well over a 3-year period. Maybe in the shorter term, they are impacted by a number of issues like raw material prices of fuel. But I think over the longer term, it should pay off, given the rupee depreciation also.
Okay. The next one is on Canfin Homes. Sachin from Uttarakhand wants to know a short-term outlook on this one. He's bought 100 shares at the levels of 916. Kush, your recommendation on this one?
Yeah, you can continue to hold this one. Yes, just some distance away from the buying price, and incidentally, that happens to be the first leg of resistance once the stock moves higher from here on. But I think the structure is fairly positive on this one. A close above 900 will push it towards your buying price and higher to about 955, 960 odd levels also. Volume action also very healthy. So yes, all in all, you can continue to hold Canfin Homes. Stop loss for this one comes in at about 860, 865.
Gunit from Mumbai wants to know whether is it a good time to enter Bajaj Finance for long term. Shaina, any view?
I think it's a bit expensive as of now compared to the other stocks on the portfolio. It is a strong management, but I would look to add it maybe a couple of quarters down the line when valuations start looking a bit more attractive.
Okay, all right. We've got Arvind on the phone line calling us from Bareilly. Arvind, a very good morning to you. What's your query about?
गुड मॉर्निंग मैम मेरे पास BST इंडस्ट्रीज का शेयर है 281 पे।
ठीक है।
कंपनी के रिजल्ट्स वगैरह काफी अच्छे आए थे अभी, पर मैं टेक्निकल चार्ट्स पे देख रहा हूँ, क्या मुझे ये 230 के लेवल तक दिख सकता है आने वाले समय में? 230 का लेवल।
230 अभी द स्टॉक अभी 261 पे है।
हाँ।
ओके,
टेक्निकल लेवल पे जानना चाह रहा हूँ मैं कि मतलब ये मुझे और नीचे मिल सकता है आने वाले समय?
अच्छा, और नीचे मिल सकता है कि नहीं? ठीक है, ओके, गॉट योर क्वेश्चन अरविंद. कुश, what is the perspective with regards to charts? Do you think it can go back to 230 and then bounce back from there? That's the strategy I think Arvind is trying to approach. Would you recommend that first thing? And do you think it will go back to that 230 levels?
So, देखिए अरविंद, if I may answer this in Hindi because he's asked it in Hindi. So, देखिए मैं कहूँगा एक गुंजाइश है, बट 230 नहीं, मेरे हिसाब से यहाँ पे आपको 245 का जो स्तर है इस पे नज़र रखनी चाहिए. एक गैप है जो फिल होने आ सकता है. प्लस अगर आप देखें तो 200 डे मूविंग एवरेज 255 पे है. तो अगर आप और अक्यूमुलेट करने के लिए देख रहे हैं तो आई थिंक 245 से 255 का जो स्तर है ये ज़रा ज़्यादा इंपॉर्टेंट है मेरे लिए. इनफैक्ट अगर ये ब्रेक होता है और 230 तक स्टॉक आता है तो स्ट्रक्चर थोड़ा सा बिगड़ जाएगा. तो अगर आपको अक्यूमुलेट करना हो तो 245 से 255 का जो जोन है इसमें अक्यूमुलेट करने देखें, ये जरा हेल्दी रहेगा.
Okay. The next is a caller query again coming in from Chennai. Yamini, you can go ahead and ask a query.
Yeah, hi, good morning. I have 110 shares of Godrej Agrovet at 783 rupees.
Okay.
I don't mind holding for a long term, or I don't mind from long term perspective as well, but want to know if I have to exit anytime soon because I'm already booking a loss.
Okay, so I'll get you a technical query on this one. Kush, do you see further downside when it comes to Godrej Agrovet?
Yeah, the stock's just gone sideways. It's not really doing much, and for some time now. So there is a possibility that the stock could consolidate. I mean, even if an up move does come about, I think it might face hurdles around the 645 mark. So you're in for a long-term or a medium-term consolidation phase for the stock. So while you can continue to hold, I don't see an immediate uptick on this one. On the downside, I would suggest a stop loss like I always do around the 565, 560 zone.
Okay, all right. The next one is on ITC. Kishore Kushal from Vellore is asking this question. He's holding ITC 1500 quantity at the levels of 340. Wants to know whether he can average at this price from a long-term perspective. Shahina, your view?
Yeah, I believe he can average at this point because it seems to have found a very strong, around 300. That's a very strong bottom for it. So I would average, and valuations are attractive. We've seen VST industry numbers were very strong in the cigarette business. So I think the rest of the pack also should benefit from that. So I would say you can average.
The next query is coming in from Govinda. He's from Jharkhand. He wants to know whether should he hold or average more shares of Tech Mahindra. He hasn't mentioned any price at this level. Shaina, any view on Tech Mahindra?
Well, Tech Mahindra has shown better numbers than the rest of the smaller mid-cap IT stocks. Valuations also reasonable. So yes, you can, but given the fact that the overall IT sector is facing headwinds and the sentiment is negative, so I wouldn't buy it altogether. Buy it in a staggered fashion over the next 4 to 6 quarters.
Okay, all right. The next one that we have is coming in on Crompton Greaves Consumer Electricals. This is from Ashok, who's writing us from Ludhiana. Says he's a regular listener of NDTV Profit, so thank you so much for that. He's holding 1800 shares at the levels of 312. Can he continue to hold? Kush, your view on the charts?
Yeah, there's a double top formation around the 265 to 70 zone, so that could act as a technical resistance. The stock's already taken a massive knock, so some revival was on the cards. Given the current recovery, I would say yes, you can continue to hold. Stop loss at 235 zones, but for any kind of meaningful uptick to come about in this stock towards this buying price, I think the 260, perhaps even 270, that zone needs to be taken out.
The next query is coming in from Vinay, and he has around 1000 shares of L&T bought at a price of 3,204. He wants to partly replace this counter, or he can continue to hold L&T for the next 2 to 3 years. China, should he do this?
He can continue to hold L&T for 3 years that he's talking about. But if that is the only stock in his portfolio, yeah, he can add some other mid-cap stocks, maybe in banking or defense.
Okay, all right. The next one that we have is on Vedanta. Our viewer is asking whether it's the right, Anil Singh in fact is asking us whether it's the right time to buy Vedanta from a short-term perspective. Kush, the demerger date, of course, is set, has been announced on 30th of April, but do you think buying before that makes sense technically from a really short-term perspective?
I think it does. The reason for that is the stock had a good run, healthy volumes. There were negative RSI divergences popping up on the weekly setup, suggesting that yes, a profit booking dip was around the corner, and that's come about. If you see the last 4 sessions, the stock's already seen some profit booking. Again, not on very high volume, so that's a good sign. Supports were anyway placed at the 730-35 zone. If you see the low today, the stock's actually made a low at 733, so it's respecting that support zone. So yes, you could start accumulating Vedanta from a short-term perspective. Stop loss for this one would be at 720.
Saurav from Jaipur wants to invest 40,000 rupees in a stock. He's already holding Laurus Labs and Bharat Electronics. He wants to know whether should he add more shares in both these counters or should he buy Acuitas Chemical. Shaina, any view?
Bharat Electronics is one of the safest stocks in these volatile markets. He can buy it at any dip that he gets and hold it for the 3-year perspective.
Okay, all right. Time for our second rapid fire round. Keep your answers as short as possible, Shaina and Kush. The first one is on Eternal. Our viewers bought at the levels of 240. 1700 shares is what Parth is holding. Can he continue to hold from a short-term perspective? Kush, your view on the charts?
Yes, you should continue to hold. Stop loss at 248.
Charan from Bangalore has around 100 shares of Marksans Pharma at a price of 346. What's the long-term view on this, Shaina?
He can continue to hold as of now.
Godfrey Phillips bought at the levels of 2215. Continue to hold from a long-term perspective, Shahina?
Yeah, it's a hold.
Lata wants to know if there is any target for IIFL Finance. She's holding shares at a price of 505. The stock is down nearly 7% in trade. Kush?
I would in fact suggest a stop loss rather than a target. 415 is your stop loss.
Karnataka Bank, 800 shares bought at the levels of 172 rupees. Continue to hold. Kush, on the charts?
Yes, you should continue to hold. Stop loss for this one 235.
Amit from Kolhapur is holding few shares of Wipro at an average price of 297. Should he continue to hold this counter or exit China?
Well, if he's looking at the longer term, he can continue to hold. But if it's short term, then he should exit.
Okay, Indian hotels from a long-term perspective of 2 years, Akash wants to know whether they can continue to hold the 80 shares that he's bought at the levels of 700 rupees. China?
Yeah, he can hold an average at any depth.
Mohan from Visakhapatnam wants to know whether should he hold Coforge from short-term view, Kush?
From a short-term perspective, no, I would suggest an exit on Coforge.
Okay, the next one is on United Spirits. 40 shares bought at the levels of 1371. From a 5-month perspective, Kushal wants to know whether he can continue to hold or not. Kush?
Yes, you can continue to hold. Stop loss on this one close to the 1335 mark.
Vivek from Chennai wants to know whether is it advisable to invest in MV Photovoltaic at current level, China?
Yeah, he can. There's a lot of developments happening in the segment. He can continue to hold and maybe add also at any depth.
Man Industries, Rishi from Bhuj wants to know whether to hold or add at the current levels. Kush, your view?
No, it's a hold. In fact, you should book partially and maybe add some more around 515, 520 zone.
Ramesh from Pondicherry is holding 1300 shares of HFCL, bought at a price of 92.43. Any targets on this, Kush?
I'm sorry, I'm having difficulty. Oh, okay, got it. No, you should continue to hold this one. Good moves, I think 101 and about 108 are your targets. Stop loss could be at your buying price.
ICICI AMC, continue to hold or book profits? The viewer has not given the buying price, but Kush, your view?
Limited data, I'll pass.
Prashant from Bangalore wants to know targets on Tejas Network. He's holding 50 shares at a price of 445. Kush?
Yes, you can hold some profit booking happening. Hold for a stop loss of 385 and on the way up 450 and about 485 levels targets.
Okay, Abbott India, 2 shares bought at the levels of 19,000 rupees. The viewer wants to know whether they can continue to hold from a long-term perspective. The stock is currently trading at 25,400 levels. China?
He can hold.
The next
at current level.
The next query is on Quality Power from Lakshmi. She's holding few shares at an average price of 835. Kush, should she continue to hold this counter or book profits?
Book partial profits, add again around the 1200, 1230 zone.
HDFC Bank bought at the levels of 800 rupees. Continue to hold. Kush, from a chart's perspective?
Yes, but don't expect momentum. This is more of a positional bet. I've maintained that previously also. Keep a stop loss at 765.
Vishwanath is holding 3,000 shares of Varun Beverages at an average price of 435. Should he continue to hold this, China?
I believe he should exit half of the quantity and hold the rest for long term.
Hyundai Motor, is this the right time to enter? Kush?
No, not very constructive on the setup.
Alright, that brings us to the end of this rapid fire round. China as well as Kush, thank you so much for taking out the time and helping us answer all those 64 queries I think that we managed to answer with, in fact, 3 management conversations. So thank you so much for that. But completely out of time on this edition of Fast Profit. Do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome to KYC, that is Know Your Company. I'm Mahima Vachrajani, and let's try to figure as to what company are we going to decode today for you, our viewers, as well as people who invest in a lot of stocks. But, let's try to guess the company that we're going to talk about, right? The first one, let's try to pull up the slide and see. Leadership in Mangalsutra segment. This company basically holds the leadership in terms of B2B segment in the Mangalsutra segment, listed on September 17th, 2025. So fairly recent listing that we are talking about. The stock is up 29% from its IPO price, and that's not been the case for a lot of IPOs that have been recently listed in the past 6 odd months. Furrowing now into the gold bridal jewelry, which is a high margin business and also a high value business, which is going to give them leverage going forward, considering the manufacturing capacity also that have. So that's the guess the company part. Let's try to understand as to which is the company that we're exactly talking about. We are talking about Shringar House of Mangalsutra. With regards to this company, what it does and what is exactly the manufacturing capacity and what is the exact flow of manufacturing for this one. Basically, it specializes in design, production, distribution of Mangal Sutra, both in terms of B2B and it also gives it to retailers. So 15 distinct collections and more than 10,000 active SKUs is what the company has in terms of only Mangal Sutras right now. In terms of prominent customers, big names are there. Titan, Reliance Retail, Novet Jewelry, Joya Lucas, Malabar Gold, all of these are the clients for Shringar House. Now the company also serves 34 corporate clients, 1,089 wholesalers and 81 retailers. So it's a complete B2B business that it does in Mangal Sutras. The company is focusing now on high value added jewelry segment going forward, and in terms of where the capacity goes, it has around 2,500 kg per annum capacity and also has an integrated manufacturing facility that it does. So completely in-house manufacturing is what it has, and that to an integrated one. In terms of the key news coming in, I think an astute investor, S. Iyer, has acquired 5 lakh shares on 22nd of April. So this was a big news coming in. That's why we saw this movement in the stock price as well. The company is now diversifying into gold bridal jewelry, like I mentioned earlier as well, right? It's a high value business and high margin business as well. And in terms of where the other news aspect is concerned, the company is also shifting its manufacturing capacity from Lower Parel to Kandivali. So that's also another news to keep in focus and keep in mind. Now in terms of how the industry is faring, right? Overall, India's wholesale gold jewelry, as per data from various sources, the segment is expected to reach around 48,900 crore by calendar year 29, and this suggests a CAGR growth of anywhere between 9 to 10% and this is the CAGR growth that we are talking about from calendar year 24 to 29. So that's the CAGR growth at which the entire industry is growing, but the company is growing at a much faster pace. Now, strong HNI interest is also there in the counter, and in terms of volumes as well, we've seen good growth coming in as to where the share price action is concerned. Strong distribution network is helping it in cross-selling also going forward when it diversifies into high value and high margin business of bridal jewelry. And the other reason as to why it is in a sweet spot is because larger order wins are expected from corporate clients going forward once it diversifies, plus its existing business as well. And the company is targeting unorganized sector and undeserved tier 2 to tier 4 markets. So I think the focus more right now is from tier 2 to tier 4 markets, and that will give company an overall leverage going forward in terms of its distribution, in terms of its selling opportunities as well. Now let's try to take a look at what are the parameters that we're going to talk about in this segment. The first one that we're going to pick up is the income statement, followed by balance sheet, then cash flow, and then return ratios. And then we're also going to talk about how the shareholding pattern is for the company, followed by street cred as to how the counter has performed so far since listing, valuation metrics, as well as what's the outlook going forward. And then we'll also be speaking to the management of the company to understand as to what the outlook of the company looks like. But let's start talking about the first parameter, the income statement. In fact, like I said, we'll be speaking to Viraj Thadeshwar, who's the AD and CEO of Shringar House of Mangal Sutra going forward. But let's start talking about the parameters, the income statement first. Now, if you take a look at the last 3-year CAGR growth in terms of where revenues stand, it's been a strong growth of 21%. EBITDA growing at almost 45% of 3-year CAGR, and net profit has seen a growth of 46% CAGR. Now, a lot of this growth in the past 2 years has also come in with rising gold prices. Because of gold prices going up, we've seen a lot of value growth coming in, but we'll try to understand from the management as to how volume growth has also fared. Now, because we've seen strong CAGR growth in the past 3 years, we've given it a thumbs up. In the past 9 months also, the company has done fairly well. Revenue growth of 41% year-on-year basis. For EBITDA growth, it's even stronger as compared to how its 3-year CAGR has been, like a 65% growth, and net profit growth at 76%, much better as compared to what it's done in the past 3 years. In terms of margins, I think this is where the pain point is, because margins have been reducing for them, but them foraying into other segments might improve their margins going forward. So that's with regards to where income statement goes. But let's try to take a look at the balance sheet aspect as well, as to how balance sheet has been in the past 5 odd years. In terms of where the balance sheet goes, overall, from a perspective of share capital perspective, we've seen that it got listed recently in September 25, and in terms of reserves, they've been growing in the past 3 years from a 128 crore to almost an increase of 500 odd crores. So they've been reserving whatever profits they're making from. Even in terms of total equity, that aspect has also gone up because of reserves going up. Borrowings have also slightly increased. So we try and understand from the management as to why these borrowings have gone up, and this is largely on account of both short-term and long-term. Short-term largely on account of working capital, but we'll try to understand as to what the debt repayment plans are looking like. Cash and bank balance is an area of concern. We'll try to ask the management if there is any fundraising on the cards considering the expansion that they're planning, because overall cash balance has remained in that range of just 3 to 4 odd crores. So that's with regards to where balance sheet goes. Now let's try to pull up the cash flow statement as well. This is the third metric that we're going to talk about. In terms of cash flow statement, cash flow from operations has turned negative in FY25 and has also stayed negative in September 25. And considering 9 months at a negative 7%, the year will also close at that negative number as well. But overall, PAT has seen a good increase, but cash flow to PAT ratio has been on a negative footing. So I think that is an area of concern. We'll also speak to management about it. But overall, even net cash flows has been on a negative footing, and that's why we've given it a thumbs down. Now let's try to pull up the return ratios aspect and see as to how they have been. A healthy return ratio has been largely maintained in that range of 20 to 24%. So your ROCE has been stable and has been at that 24% mark in the last 3 to 4 odd years. So I think there is no area of concern here, and we've simply given it a thumbs up when it comes to the return ratios. Now let's try to see the street cred of this company as to how the company has done when it comes to the share performance since its listing, and as to how the entire performance has been like. But before we talk about that, let's try to take a look at the shareholding pattern as well. There is skin in the game when it comes to the promoters, because promoters have been constantly holding 75% into this counter, and it doesn't look like they're going to reduce their entire holding. But FI holding, there is FI interest coming in from a 4% just during listing. It's gone up to 6% in just a matter of 2 quarters. DIs, of course, have been selling and FIs have been buying that. So from a 4% in September 25, DI holding has come down to around 2 odd percent. Public holding remains fairly stable around that 17 to 20% mark. As of March 26, it stood at 17 odd percent. So that's with regards to how shareholding goes, but there's skin in the game, and that is why we've given a thumbs up. Let's try to pull up the street cred, like I was talking about, from the life high, of course, it's down 19%, and this is considering the way markets have moved in the last couple of months. But overall, from its IPO price, it's up 29%, and from 2026 low, it's up 26%. So there is gain coming in from 2026 low as well, and that means that it's showing high investor interest in this counter. Just to point out here that IPOs in the recent past 6-8 months have not done very well. As compared to that, at least this IPO has seen gains of 29% versus its issue price. So that's with regards to where street cred goes. Let's try to pull up the valuation. This is not an interesting aspect, because overall, if you take a look at the valuations of all these jewelers, because Titan is trading at 80 times P right now, Thangamayil at 49 times, Kalyan Jewellers at 36 times, and this as compared to Shringar just trading at 21 times. So valuations as compared to where peers are concerned is much more attractive for something like a Shringar House, Mangalsutra, and considering that it's growing at a very fast pace, at a very good CAGR, the valuations right now are justified at where they stand. Let's try to then look at as to how the outlook of the company looks like in the next coming years and near future as well. They are diversifying into gold bridal jewelry, and that's certainly a thumbs up, because like I said, it's a high value, high margin business, which is certainly going to benefit the margins for the company. Plus, it's targeting the unorganized sector, that is tier 2 to tier 4, where there's a lot of unorganized sector that's playing its part in different ways. I think organizing it is going to definitely benefit the company. Third-party facilitators are onboarded to drive scale from here on, and that is something that is going to augur growth for the company going forward as well. Lastly, in terms of where the outlook stands in terms of expanding. The company is planning to expand to 5 cities and has identified more for further rollout as well. So the company is not just planning to diversify into segments, also planning to expand in terms of where geographies are concerned. Plus, it's also building going forward a strong presence when it comes to their overall presence. But this, of course, is with regards to where the outlook goes. Let's try to now see as to how the cumulative ratings look like of all the 8 parameters that we talked about. The first one being income statement, we've given a thumbs up. Good CAGR growth, all in terms of revenue, EBITDA as well as net profit. Margins, of course, still a concern. But overall balance sheet is a thumbs down because cash position is at a very thin lining. Plus, there is borrowings which is growing. So we talked to management about that. Cash flow, we've seen negative cash flow in FY25, operating cash flow in negative in FY25, as of September ending as well, and that's why we've given it a thumbs down. Return ratio is very positive, very healthy, near that 22 to 24% mark, so giving it a thumbs up. Shareholding, also a thumbs up because there's skin in the game, 75% held by promoters, plus FI seeing an increase in stake. Street cred is slightly a thumbs down because overall, if you take a look at the picture as to how it's off from the high point, we've seen some pressure coming in the stock. Valuations, definitely a thumbs up, much better as compared to where the peers go, and that's why we've given it a thumbs up. And outlook, most certainly a positive one because the company is planning to expand into segments as well as geographies coming in. So the total rating that we've given this counter is 5 out of 8. So that's the overall rating. Of course, with regards to how the Shringar House of Mangalsutra goes, but let's try to get in the management as well. We're now joined by the management. Sir, my first question to you with regards to what we talked about. We've been talking about how significant growth you've seen in the past 3 odd years. Just want to first understand as to now that you're trying to foray into this bridal jewelry that we talked about, is high value business plus high margin business as well, if I'm not wrong. What is the foray looking like? What are the plans to grow this segment as a whole?
Hi, good morning, first of all. The point about the bridal jewelry. So as you know, we have been in the Mangalsutra segment for over decades. And for us to grow, being a Mangalsutra, it is the most key product in a bridal jewelry. So for us to grow in this segment, bridal jewelry, was a must-do point. Because the customers we have, like currently we're having more than 1,000 customers who are consistently working with us, and we are growing with them. And these customers are not only just unorganized players, but giants and organized players as well. So in the whole entire process of growing, even these customers are growing big, and we want to grow with them. So Mangalsutra is a key product for us, but to grow multiple times, we have to increase our product categories. So bridal category was a big demand from our customers to us, as they are seeing good rise in bridal jewelry category. So we have already started developing and selling bridal jewelry in the market. And we are in the tie-ups with all the big jewelers, the corporates, the single chain stores and single stores. Bridal jewelry, if we talk, it's more than 40 to 45% of the total jewelry market. So that is a big jump we are looking at. And with the existing customers, we are hoping and we are positive that it will give us a very good boost in terms of growth and in terms of profit returns as well.
Okay, Viraj, with regards to where your overall margins are concerned, they've been slowly and steadily growing, but wanted to get a sense, considering that the gold prices have shot up a lot, with overall condition in the West Asia conflict as well. Where do you see your margins going at? Plus, you're entering, the bridal jewelry space. What are the margins going to look like going forward? Is there going to be a steady pace of growth going forward as well, or they're going to be in that range of 6 to 7%?
When we talk about bridal jewelry, of course, it is a high profit-fetching category.
Correct.
So the other reason also to get into bridal jewelry is that the industry is growing, the category is growing, and with the new manufacturing setup we have just recently started, we are looking at producing much more high value products which can fetch us more profit. And with the new setup, we have not only increased the production capacity, but we have also increased the quality of the product, the range of the product, and the high range of the product, so which can fetch us better margins and also give our customers a better quality and a top-notch product.
Viraj, with regards to where your capacity utilizations go, they've dropped a tad bit in FY25 as compared to where they were in FY24, if I'm not wrong. What are the capacities utilizations looking like right now? And going forward in FY27, what is the expectations in terms of how they will fare?
When we talk about the capacity utilization, I think it was nearly, production capacity utilization was nearly around 70% in the previous years. And with the new setup coming in, and we have almost 2x doubled our capacity with not only just, and also at the same time, we have increased another category with a new manufacturing setup. So we are looking at bigger volumes, bigger sales, and majority utilization of the capacity. And with the existing customers, the name of the customers you see, and the growth they are showing. So I'm really positive that the growth ratio is going to be maintained, and it is going to increase in future as well.
Got it. Viraj, with regards to your borrowings, the long-term borrowings have reduced to quite an extent, right? They're almost negligible right now. But in terms of short-term borrowings, I reckon that this is on account of your working capital requirements. But this is compared to where your net cash flow position stands at right now, and cash balance basically where it stands right now. Do you think that going forward to maybe fund your working capital requirements or maybe fund your expansion, you'll be needing funds? So are you looking for any fundraise going forward?
So currently we are going phase by phase. We are not going to rush into borrowings a lot right for now. But as you know, the working capital we require with the increasing in gold rate. The more the rate increases, the more capital we require. So currently looking at the existing working capital, I feel that we are more than ready for the market and for the current season and ongoing business processes as well. So in future, I'm not too sure about increasing of borrowings, but yes, to increase revenue and profits in the existing working capital, that has been the key motto for us right now.
Okay, and what is the store expansion plans looking like going forward in terms of the growth plans going forward in FY27?
As you know that we have in last financial year, we have added 2 new stores, one in Delhi, one in Pune, and Bombay, which is a key main corporate store which we have. So currently we are in the process of more increasing the revenue and scaling up in the existing stores only. And probably once we achieve that, hopefully this year or probably next financial year, we are planning further more stores coming up. But at the same time, not only expansion through stores, but also through facilitators module, which means that we, by not opening stores, but to also make our reach that particular city or that particular state using that module, we are aggressively going towards that. And if we see a potential in another city, so hopefully we may plan and also go ahead for other cities and more stores.
Raj, with regards to where your growth is concerned, how much of it is coming from value growth versus volume growth? Because price of gold have really gone up, right? So what's the kind of volume growth that you've seen in FY26, and going forward, what is the kind of growth that you're penciling in for FY27?
So definitely the focus has been volume growth for us because value growth is definitely there, and we can we'll be seeing in the flowing numbers over the years with the gold rate increasing. But the main focus for us is volume growth also. So we are dedicatedly, our entire team, let it be the sales team, which is we have been increasing the sales team, the entire management team, the manufacturing team. So to make it more organized and more productive, we are working towards how to increase the volume growth also. So the bridal category, which we have introduced lately, so that will be a key point for us in volume growth. and we are expecting a good volume from this new category.
Viraj, with regards to where gold prices go, considering the volatility in gold prices, what is the hedging strategy in place right now? How much of hedging do you do? And how do you cover yourself against that volatility?
Yes, so we have always been following a hedging policy, and we are going to maintain it at the same pace because in such a volatile market, we want to focus more on production and sales rather than focusing on any other aspect. So the hedging policy is maintained. Currently, we are having a 40% hedging policy, and that is going to be maintained, and we will keep up to it.
Viraj, as per recent developments coming in, there was gold imports that were stuck because of a new DGFT coming in. What's the progress that's happened there? Now the gold imports have a easy free flow, or is gold still stuck there? And any impact on your business because of that?
So, being in jewelry since a very long time, since several decades, the channel we follow for material procuring, so we don't rely on only one source. We have several sources from where we procure our gold bullion. So, we never saw any big challenge coming in terms of procuring raw material or gold. So, because of the system we follow, because of the multiple channels we follow for our supply and we depend on them, so it has never been a challenge for us.
And with regards to the West Asia conflict, any exposure that you have in Middle East, has that been impacted at all?
So of course, in the last 1 month, we have seen Middle East being disturbed. But Shringar being our 98% of the revenue comes only from India. So we are mainly dependent on India, and only 2% comes from abroad. So of course there has been certain disturbance, but at the same time we have seen a seasonal growth in the same period which we see right now. There has been an Akshaya Tritiya season recently, so that has been a very key season and a good season, I would say, as I saw a good flow of customers coming in. And so maybe it's all covered up because my focus has always been, Shringar's focus has always been the domestic market. But of course, we are focusing on overseas market as well. So not only UAE, currently we are supplying to US, we are supplying to UK, we are supplying to New Zealand and several other countries. So the exposure is so vast that the volume compensation comes from all over the country and from outside.
And Viraj, what is the ratio like right now in terms of your supply, your exports versus your domestic sales, and how will that dynamics change going forward?
Like I mentioned, 98% comes from the domestic market. But now with the new category coming in, it will be a very key point and a strong point for us to step into overseas market, as we will now be able to go to our customers with a vast range, not just only Mangalsutra, but other categories as well. So that will 100%, I feel, help us penetrate better in the market and get more and more volumes and sales from our customers. So the new category will not only increase in India, but also from overseas.
Okay, Viraj, thank you so much for helping us answer all those questions, and that too so candidly, and of course taking out the time and speaking with us at NDTV Profit. All right, so viewers, you heard the management. That was Viraj Thareshwar, the ED and CEO of Shringar House of Mangalsutra. But with that, completely out of time on this edition of KYC. But do stay tuned for more news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello, welcome to watching Prime 5 with me, Aisha Said. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
A lackluster handover continues to keep the benchmarks under pressure today, with risk sentiment awaiting geopolitical cues. Sensex sheds more than 700 points. Auto, real estate are under the most amount of pressure, while pharma as well as energy remain resilient. The war premium is back in the barrel. Oil is ripping higher as diplomacy really stalls and tankers stay frozen at the Strait of Hormuz. Now, Brent soars past $103 a barrel as peace talk headlines fade fast with ships not moving. Firoz Shah Godrej, the new chairperson designate of the Godrej Industries Group, unveils a new identity and vision, aims 5 lakh crore rupees market cap by 2031 to list 2 more companies from Godrej stable. Stay tuned for the snippets of the conversation. Voting for state elections underway in West Bengal and Tamil Nadu. 152 of West Bengal's 294 constituencies vote in the first phase. In Tamil Nadu, all 234 seats are voting in a single day election. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take a look at the market. And yes, it has been a shaky day with no really confirmation in sight of any peace talk between US and Iran. And that's really putting pressure on the overall market and also the global cues that we are really taking note of and reacting to. So at the moment, Nifty 50 really are losing 170 odd points. Remember, it opened with 200 points odd gap down, and today also in the trading session at the moment it is inching closer towards that lower point of the trading session, it after a volatility in the first half of the trading. Well, if we take a look at the contribution chart, well, most of the heavyweights like Reliance Industries as well as HDFC Bank and ICICI Bank and Mahindra, all these are really contributing downwards for Nifty 50, dragging it down, and only a handful of the blue chip counters really showing momentum, a little bit of strength, and those are coming in from the pharma space like DRL as well as Cipla, even Geo Financial Services after the results, and L&T. These are the handful of companies really, especially from the pharma pack. Even Sun Pharma are showing a tinge of green at the moment. When we take a look at the sectoral play, as we mentioned, pharma is a good pocket, energy is another, but on the downside, remember the consumption and also a yardstick for economic activity, auto sector along with bank sector, these are the ones which are really coming in as a drag. So market really worried about overall momentum coming in from the war front. Remember, there are two factors which are also impacting the sentiment, and they are all feeding into each other when it comes to the negative sentiment. The two factors are, first, crude oil prices above $100 per barrel is bad news for the Indian market. And on top of that, remember, rupee has also been consistently depreciating by 10 or 20 paise on a regular basis, and that is also coming in as a concern. So that's where the market is at the current moment, almost 0.5% down when we talk, 0.73% down when we talk about Nifty 50, and IT is not that bad today, which was a key dragger in trade yesterday. All right, Kritika Prabhu Desai, who's the research analyst at Mirae Asset Sharekhan, joins in now. Let's get chatting about some of the earnings coming in. Kritika, what do you make of Trent's result, and also what is the signal it gives on the demand and consumption scenario while we are grappling with many of the headwinds coming in the market, as well as also the price pressures and inflation? Kritika.
Yeah. Trend results were a strong beat on estimates. We had, the revenue growth is strong at 20%, margins strong expansion to 18.6 versus around 16 expected, and PAT also grew by around 30% and beat expectations. So overall, a strong set of numbers. Going ahead in terms of the outlook, yes, there is some expectation of muted this due to geopolitical instability, but overall in the long term, the demand looks to be good, and we expect that the demand to be stable going ahead as well.
All right, demand you're saying is stable. When we talk, Kritika, about the stock movement of Trent after this particular result, does it call for an upside or downside, and how do you find the valuations in your assessment?
Basically, the current the downfall in the today's session is largely due to the profit booking. Post the business update, the stock had already seen a strong uptick in the price, and which is why today there is a good profit booking. Also, there are some concerns for the like-for-like growth due to cannibalization and new stores taking time to mature. So these two are the main factors why the stock is seeing some correction today. But going ahead, we expect that the company is likely to perform well going ahead as well. So valuations are though premium side, but we believe that it is a good thing.
All right, but Kritika, would you say that at these valuations where the stock had run up over 30% in 1 month ahead of the results and now seeing a slight bit of profit booking coming in of 2.5%, do you think it's a buy for medium term at these levels?
Yes, definitely, because we see the company aggressively adding Zudio stores in tier 2 and tier 3 markets, and here the penetration is quite low and it has good scope to expand going ahead as well. Also, they are working on their operating efficiencies, which we can see that the margins also are likely to improve going ahead. So definitely at these levels, we can consider it to be a buy.
All right, when we talk about the margins, Kritika, one important question, of course, the EBITDA margins have been very good for this particular quarter, and that was also expected, 18.6%. Do you think, you said that the margins will continue to improve because of cost efficiency measures. Do you think first these levels, 18.6 that it has already achieved, these are really what are sustainable, and also how much upside do you see in the margin front going forward?
So for the current quarter and for the financial year, they have been quite good. We don't see a sharp increase in the margins, but we do expect the margins to remain stable or slightly improve in the coming years.
All right, but one more important thing is that the commentary coming in from the management on account of the West Asia conflict impact, and that we are seeing not just in Trent but across all companies, is the price inflation because of the various raw material supply chain constraints and also the transportation and crude derivatives as raw material. These are the four factors which have been impacting the overall inflationary pressure really coming in the economy and expected to accentuate further if the war really continues. Looking at that, Kritika, how would you see Trent in particular and the space overall?
So yes, definitely in the near term, we do see margin pressures due to all of this instability. But in the medium term, if we see, definitely companies will take some measures and trying to improve their margins or at least maintain margins at the current level. So for Trent in particular and also for the overall industry, I think near term pressure does exist definitely, but in the medium term, margins would likely improve going ahead.
All right, and any word on their expansionary plans in terms of the store expansion and the footprint that they are looking to expand? So over a 1 to 5 year term, would you have a view on the expansion strategy and how the stockholders' returns can really accentuate in this counter?
So currently they have around 1,300 odd stores across its lifestyle concepts, and they are aggressively adding Zudio stores in tier 2 and tier 3 markets. So we see good expansion, no specific numbers, but we see good expansion in the Zudio portfolio going ahead as well.
All right, Kritika, thanks so much for a quick take on the Trent results really coming in and slight pressure on that particular counter on an otherwise, remember, weakish day, and the stock had already run up by over 30% in the last 1 month in the run up to good numbers that they have really posted. So profit booking coming in, but from the research side and at least from all the brokerage reports that have come in, there is more upside that is incorporated in this particular counter, despite the valuations being on the richer side, is the verdict coming in. That's a good set of numbers and an important set of numbers when it comes to the earnings and the demand as well as consumption momentum. All right, moving on to another important discussion that we are really tracking. The government had announced that even in the fuel used for aircraft, because of the ATF prices going very high because of the crude levels being on the higher side on account of the Middle East tension. Well, will the airlines be able to use ethanol blend fuel, and can that really lift off some pressure on the fuel costs for the airline commuting? That's the big question that we are asking today. Let me welcome on the show an expert joining in, Vijay Nirani, who's the Managing Director at True Alt Bioenergy. Vijay, good to have you on NDTV Profit. Your first take on the government's measures on various alternate forms of energy while we are constrained on the crude oil front.
Thank you so much for having me. I think it's a great day for us. Yesterday, there was a notification to sort of allow for different sources of hydrocarbons to be used or blended along with air turbine fuel. This is not a, I mean, it's of course, it's late in time that the government brought this notification, but we've been anticipating this for quite some time. Government of India has already taken a mandate to start blending 1% of SAF into air turbine fuel by 2027. That is the year to come. We are left with a few months on hand to start blending that mandate. And we still did not have a clear roadmap. Now that there is a lot of pressure in terms of pricing because of the Middle Eastern conflict, we are seeing this the policy of the government, or rather the mandate of the government to blend SAF with ATF becoming a reality a little sooner.
Right. So, Vijay, we want to get into a little more technicality on this, and you're an expert on bioenergy. Understanding the practicality of this mix, has it worked? How will it work? And what is the already precedence that we have that this can be used immediately, because the concern is also immediate?
So if we take a step back, back in when we had COP26 under the Paris Accord, there was a body called CORSIA that was created to curb, or rather monitor, the emissions in the aviation sector. And this body, CORSIA, gave mandates to the developed countries and the developing countries to start using, or rather reducing, carbon emissions in the aviation sector. Now, we must know that close to 65 to 70% of the emissions in the aviation sector comes from burning of fuel. So that's the biggest chunk of carbon emissions reduction that we could achieve. And, unlike your roadways, railways, and the airways, we can't put batteries just yet, because there are close to about 40,000 airplanes around the world that are in use. And these 40,000 airplanes have to consume air turbine fuel itself. And recently, ASTM, that's the American Standards for Testing and Methods, came out with a approval to start using specific molecules that mimic the same molecule characteristics of air turbine fuel. Now, and they called it SAF. So the whole objective of this notion of sustainable aviation fuel is how much carbon emission is achieved, or rather is emitted per megajoule of energy that is burnt while the aircrafts are flying, right? So the benchmark for sustainability is at 22 grams of carbon emissions at per megajoule of energy burned. And let's say to achieve this, there are multiple pathways. One is called HEFA, one is through used cooking oil. The one that we at True Volt Bioenergy are trying to achieve, and we're trying to set up a 10 crore liters per annum sort of a capacity in Andhra Pradesh, is using ethanol as feedstock and converting these molecules into alcohol to jet based SAF. Now we have had a life cycle assessment from well to tank life cycle assessment on the molecules that come out using, say, C heavy molasses to ethanol, and then that ethanol getting converted into SAF molecules. So we were actually surprised to see that we actually achieved a life cycle assessment of only 18 grams of carbon emissions per megajoule of energy that burns. So it's well below the mark of 22. And India having a lot of capacity in terms of ethanol, we are well poised not only for self-consumption or our in-house demand, but we could be an export hub for especially the South Asian countries or the Middle Eastern countries that have already taken the mandate under CORSIA.
So Vijay, very well explained the entire life cycle. I want to understand, while you are looking at carbon emission aspect of the green, SAF, I am also looking at the cost component because of which the government was pushed to take this kind of a decision. So in terms of the scalability of the innovation that has really come in ethanol blending for aviation fuel, in that, what is the practicality and technicality in terms of usage immediately is what I wanted to understand.
So ma'am, if you look at the global price range right now, so SAF is being traded at almost 3.5 to 4x of that of air turbine fuel. So of course, naturally, because it's a new fuel, there's a lot of technological very advanced technology that is utilized, and we don't have product at scale. So there is almost a 4x price hike in the global SAF that is being traded. However, what we have estimated at TrueVault Bioenergy, the molecules that we are producing, we are estimating that we get at least about 60 to 65% of premium as against air turbine fuel. Let's say today the air turbine fuel before pre-war era, pre-Middle Eastern conflict era, was somewhere about 100 to 110 rupees a litre. Today, post-war, it's almost at about 138 to 140 rupees a litre, and this is at a controlled price. Now, Government of India came around, and to support the domestic airlines from the price shock, they gave a discount of 25 rupees. So today, all the domestic fuel that is being available to the airline carriers is almost about 25 rupees cheaper than that of what the real market cost is. Whereas international flights, there is no discount and they're getting it at full price.
Sure.
So when we compare today's price to the price that we expect for alcohol to jet based SAF that we plan to produce in TrueVault, considering today's price premium, it should hardly be about 24 to 25%. And that's not a large premium, ma'am. So just one point on this is if we pay this premium today, eventually we end up at scale, we can curb down the price to a great extent and maybe even cheaper than the air turbine fuel that we end up getting.
Vijay, I understand the economics. I think from the cost control, I think the discussion then will shift to the availability. At least we have the assured availability in the domestic market. But Vijay, how much are you producing? What is the scalability? Can this be immediately used for blending and usage?
So we currently have 5 ethanol plants. We're one of the largest ethanol manufacturers. And we have committed to set up 10 crore liters per annum sort of a capacity in Andhra Pradesh. And we plan to use technologies like Honeywell UOP to set up this plant. And the groundbreaking is yet to begin. And we will only end up having this plant commissioned in the next 16 to 18 months. Right now, there's only one plant which is in operation that uses used cooking oil to make sustainable aviation fuel. And that is run by Indian Oil at Panipat. Other than that, India doesn't have any other plant. Probably TrueVault could be the second plant which is at scale that would be able to contribute to the SAF blending program of Government of India.
All right. Thank you so much for joining in there, Vijay, and explaining this aspect to us. So as you said, the groundbreaking can happen only 1.5 to 2 years from now. But the innovation and the process has already begun. That's good news. And the government has also given direction for self-sustainability on this part going forward. So you play an important role there. Thank you so much for joining in and explaining the ethos behind it. Thank you. All right, moving on then, let's focus on Godrej Industries. Remember, after the split of the group, there is a new young Godrej Industries that is really emerging with the change of guard on the top. So Firoz Shah Godrej takes the helm of the Godrej Industries group at one of its most pivotal moments, remember. And in an exclusive chat with me, he sets a 5-year target, build a 5 lakh crore rupees market cap powerhouse and scale it further, but also talks about the impact of the soaring crude prices and the impact of war on his different businesses. Here's a snippet of the conversation. Currently, in this environment where a lot of crude intermediaries are really adding to the inflation, supply chain constraints are really adding, what are the various new factors that are impacting the business and therefore the demand scenario?
So we're actually seeing a lot of positive momentum in that business. If you look at it, I think the FMCG sector as a whole went through a very sluggish period for a couple of years. And we saw in the first half even of last financial year, pretty weak market conditions overall. I think the government identified that, has stepped in with some sensible moves on GST and other things. And we actually have seen a big recovery in the market. We've also done, I think the team in our consumer products business has done fantastic work.
But now the world has changed, Firoz Shah.
I know you're right, but actually April is actually also continuing very strong. You're right, there will be input cost pressures. There are some advantages also in various parts of our portfolio, such as oil palm and other things. But I think the question will really be how long this lasts.
Yes.
Frankly, if it's something that ends in the next few weeks, as we still think is probably the base case, we don't expect any real impact on our full year operating plan.
Right.
If, however, of course, it continues for 6 months or more, if worst case forecasts of oil prices of being at 150, 200 come true, of course, it'll be a very different world we're all operating in, and we'll have to respond to that. But as of now, I mean it when I say even in April, the momentum in the business has actually been extremely strong.
Right. And when it comes to also the impact on the ground for this particular business, has it also pushed your targets of double-digit growth in a tough environment?
No, I don't think so, because I think the business is doing very well. It has a lot of brands that are growing very fast. I think the kind of innovations the business has done in the last couple of years have created several brands that are now growing extremely fast. If you look at it, something like Godrej Fab, our liquid detergents brand, has grown from 0 to 400 in just 2 years, making it one of the fastest home care brands, fastest growing home care brands in the country. Similarly, we've had small acquisitions last year that we think can do very well, like this Mushtaq acquisition. So I think there's a combination of things going on in Godrej Consumer Products that makes us very optimistic about the next few years, and including this financial year.
So I'm guessing that the heavy lifting of less than 2 lakh crore rupees to 5 lakh crore rupees target in market cap will have to be done by the consumer products business.
I think it certainly has to be a big contributor. It's at the starting point the largest market cap business for the group, but by no means will it have to do all the heavy lifting. I think we have big expectations from businesses like Godrej Properties, which has now been for 3 years the largest residential real estate developer. I think there's a lot of opportunity for value creation there, as we believe the sales, Godrej Properties has an accounting standard where you only recognize the projects in the P&L once they're fully completed. So sales goes first, then cash flows, then P&L earnings. I think the market is waiting to see those earnings. We're quite hopeful and confident of delivering those in FY28.
All right, so that was Pirojsha Godrej talking about the various group companies. Remember, there are 3 listed entities from Godrej Industries. Let's get talking about Tech Mahindra as well. That stock is also seeing some bit of pressure, over 1.5% down after a downtick yesterday as well on account of HCL Tech. So in this particular week, they are down almost over 4% in trade. And this after coming out with the stellar Q4 backed by robust margins as well as an uptake in the revenue. Let's listen into a slice of the conversation Tamanna had with Mohit Joshi, the CEO and MD of Tech Mahindra.
The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line. In the short term, though, there is a concern that some of the productivity asks that are being driven by the client will result in some revenue compression for the industry as a whole.
All right, moving on to another set of numbers. We are talking about Havells here, a raw material disruption weighed. Anil Rai Gupta, Chairman and Managing Director of Havells India, spoke about the company's performance. The stock is down almost 7% in trade. Take a listen.
The largest segment amongst cables and wires, which is the domestic wires business, did see a revenue flattening in the fourth quarter because of the fact that there were raw material price disruptions and destocking of the channel during the first half of the quarter, and also a high base over last year. So I think overall it's a mixed performance, and we look forward to the coming year.
All right, so that was a quick digest of all the important results coming in and the stock impact. Goodbye for now. Thanks so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and we'll have Alex Matthew who will be joining us shortly at the NDTV Profit Market Pit with all the action. But first up, let's quickly take a look at what's happening with the markets. Let's pull up Nifty 50 on the screens along with Bank Nifty, and then we'll look at the sectoral indices because it's the pharma pack which is seeing full power. Profit booking to some extent has come in on Nifty 50. We're now seeing cuts of around 0.8%. We have cooled off, from the day's highest levels as well. Apart from this, let's just pull up Bank Nifty because that itself is seeing cuts of nearly 700 points as we speak. So there is pressure building in terms of financials where Bank Nifty is trading at the day's lows. Let's quickly look at the sectoral indices right now and see what's happening with individual sectors because pharma was the one that was firing, that continues to remain in the positive with gains of 2%. Energy and media, a few of the other ones, but what's actually putting pressure is the auto index. That's down 2%. Financial services, PSU, banks, consumption, real estate, metals, all of them are seeing profit booking in today's session after the kind of run-up that we've seen in yesterday's day of trade. Let's quickly look at the broader markets as well. You have the mid-cap and the small-cap index, and then we'll see what the VIX is doing. There is that profit booking coming in terms of mid-cap 150, which is now down around 0.4%. And if you have to look at small-cap 250 as well, at the day's lowest levels right now, with cuts of 0.3% coming in there. The VIX as well, we're still elevated at levels of around 18.76. I think 15 is that level when usually the markets find some bit of comfort. So there is that cautiousness which is prevailing because there is no clarity emerging with what's happening with the West Asia crisis. And that's the reason why we're seeing this kind of market moods. Very quickly, let's look at NSE 500 and we'll see which are the stocks that are in focus today. Because clearly, it is a day where you've seen a lot of stock-specific action. So there you go, Delta Corp reacting to numbers. You have Praj Industries again, that's the SAF boost that we are seeing. Oracle Financial again, numbers. The pharma pack is up in trade. Data patterns is another one. ILFL Finance trading under pressure. Havells down as well, reacting to numbers and brokerages, where it's very interesting to see how all the brokerages are positive. It was a Citi which was the only one which is highlighted why a Havells could be a downer, and that's exactly how it has panned out. TVS Motors, Sterlite Tech and Sun TV are a few of the other names that we are watching out for. So that's with regards to where markets are concerned. But let's actually look at what the watch list is looking like as we speak right now. In terms of stocks that are in focus on this show, to start off with, first up on the screens, let's pull up, you'll have all the pharma stocks that are in focus. You have Camlin Fine, which is trading at a 1-month high. Websol as well. Yesterday, Vijay Kedia bought that 1% stake, and since then that stock is up in trade. GBTND is trading at an all-time high. Delta Corp
on the back of a strong set of numbers that they've reported is buzzing in trade. Apart from this, let's look at the other set of names which are on our radar as we speak. Havells India, again reacting to numbers. You have IIFL Finance and TVS Motors, where the volumes are pretty strong. Trent, again, the discretionary spending has eased. JFS, they've approved a JV with Allianz. Tech Mahindra is in focus as well on the back of earnings. Infosys, again on the back of earnings, along with Oracle Financial Services, Tata Communication and Bharat Coking Coal, all of them reacting to numbers. Praj and Truwalt, we already spoke about the ethanol blending aspect. Patel Engineering on the back of an order win. And SBI Life, where the VNB margins have dropped, and that's what the street probably is taking with a pinch of salt. So that's with regards to where the watch list goes. But first up, let's quickly look at what's happening with a Tech Mahindra. Let's pull up that one on the screens. The company reported numbers, overall at the look of it looks strong. They have said that they will be maintaining their FY27 guidance as well in terms of execution. Let's listen into a slice of that conversation that Tamanna had with Mohit Joshi, CEO and MD of Tech Mahindra.
The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line. In the short term, though, there is a concern that some of the productivity asks that are being driven by the client will result in some revenue compression for the industry as a whole.
Okay, so that's with regards to where Tech Mahindra goes. But the other stock which is in focus from the IT pack, you have Infosys that will be reporting numbers today. The other important development is going to be if anything comes in terms of a decision on Salil Parikh's extension goes, because there are news reports which have been suggesting that his third term extension is something that could not be on the cards. It might just be for 2 years till they find another person to replace him. But let's head across to Jasmeet to understand details in terms of what is expected. Jasmeet, after Tech Mahindra, now you have Infosys, which is in focus as well.
Yes, Hiral, I've been trying to say good afternoon. I'm getting
I was just expecting a Jasmeet to be there, and I just get Alex.
Well, so there's a very distinct difference in the way that Alex and the way that Jasmeet looks. Let me bring him into the frame as well, and you will see what we're talking about. Jasmeet, we're talking about Infosys, and the IT pack as a whole has been in focus all through the week because of earnings. You were at Tech Mahindra yesterday. I'm sure there'll be a few talking points from that. But Infi, a lot of fund managers watching for the commentary from this company very closely. What are the key aspects to pay attention to?
Well, how we have seen for other IT pack, we expect a muted quarter even for Infosys. Now, the key focus remains on the guidance. We are penciling in a guidance between 2 to 4% for FY27, but again, that becomes a key watch out given that HCL Tech had given the guidance below the estimates. So that's why the guidance for Infosys becomes very crucial for the entire IT pack altogether. While last year we did note in the Q4, the company hiked the guidance for FY26, but for FY27, the guidance estimated is between 2 to 4%. Well, apart from that, we expect the CC growth to be negative 0.6% on the back of that weak quarter. Apart from that, the large deal wins is something to watch out for, given we are estimating 2 to 2.5 billion in this quarter as well. Then we also have to look at the commentary in terms of AI deflation, which HCL Tech gave between 2 to 3%, but none of the other players are given so far. So Infosys, is it coming on and giving the AI deflation guidance, something to watch out for? Apart from that, we see the overall ramp up when they are costing, and further the acquisitions they have done in the previous quarter and how those are ramping up for the company. While lastly, the focus also remains on altogether the EBIT guidance as well. We did know that HCL Tech gave an uptick in that, but the Infosys remains at that band 2022. Will they maintain that or will they increase it? Something to watch out for.
Sure. And there's also at the helm whether Mr. Parikh gets the extension that has been sought or whether it's going to be a shorter extension. But Hiral, earnings front and center, even as we're speaking, Union Bank numbers are out. How do they stack up?
Yeah, I mean, at the face of it right now, if you just pull up the stock, you'll see the kind of reaction that's coming in on a Union Bank, Alex, because what I'm picking up so far is there has been an improvement in terms of asset quality. However, the provision number has spiked this time around. Your profits are up barely 6.6% this time around. So after that initial spike, you have seen that downtick that's coming in, and Union Bank of India is trading at the day's lowest levels. If you look at the other numbers which are flashing, your gross NPA is at 2.88% versus a 3.06 on a sequential basis. basis. So that is telling you that your gross and net NPAs have improved. If you look at the provision numbers as well, that is an important aspect to consider, because the number that I am picking up right now is close to around 1,055 crores, which is nearly 3 times your previous quarter provisions. So that is going to be something that we need to watch out for in terms of the provisioning number as well. Apart from that, in terms of the other aspects, I'm just going to wait for the flashes, but categorically it seems that the street is not really happy with the initial set of numbers that have been reported so far. If you have to look at the consolidated segmental revenues, your treasury income, because that is something that the banks have been monitoring. So on a sequential basis, we have seen a downtick that has come in on the treasury income front as well. So that probably is something what the street is not really happy with on the segmental front. In terms of your retail banking operations, that has remained almost flat if you have to look at on a sequential basis, but on a year-on-year basis it has improved. It's mainly the treasury operations which have seen a downtick on a sequential basis and on a year-on-year basis as well. Your operating profit has absolutely remained flat with a growth of around 3% at 7,955 odd crores. So that's with regards to Union Bank so far. Street seems to not really be happy with what we see so far. Let's get in Raja Venkatraman from Neo Traders as well. Raja, welcome to the show. Always a pleasure to speak to you. A quick view when it comes to Union Bank of India in terms of what charts are indicating.
They have been moving quite a bit slowly, and the PSU banks definitely are not able to live up to the expectations what the markets are deriving. And Union Bank has been witnessing some profit booking right now. Though the result seems decent, the profit booking which is seen at the higher levels clearly indicates that yes, there could be some pressure to the downside. So now if you're going to take a look at Union Bank, one should be looking to buy it at lower levels, because at higher levels there are strong resistances emerging closer to the region of around 195 to 200. I would say that if you want to get into a Union Bank, then the closer levels would be around 165 to 170.
Hi Raja, there are a few stocks that we would like to talk to you about in the rapid fire round. Let's keep this quick. The first one is Websol Engineering, and this is on the back of a significant stake acquisition by Vijay Kedia. The stock is in focus. Would you trade this?
Yeah, Websol Engineering definitely positive news flows, and overall the structure seems to be encouraging. So yes, I would trade it.
Okay, and what would you do with it?
I would look to play it for the next 2 to 3 months.
Okay, IFL Finance, significant volumes. What are the key levels to watch, and what's the strategy?
Yeah, NBFC space is definitely a very interesting space, and first of all, IIFL I would avoid it for the moment. The reason being that the markets have started reviving, but this stock hasn't. So I would say that it's best to avoid this at the moment.
Okay, TVS in focus on, for multiple reasons. In the most recent developments, of course, there was a joint venture or joint development agreement with Hyundai. But would you buy into this counter?
Yeah, see, especially after the Euro deal which happened, the auto sector did go up. After that, for the last 6 months, the auto sector has been under pressure. And with the auto sales number also not helping the revival, I would say that the entire two-wheeler pack is pressured. So this particular stock is more of a trading bet than an investing bet.
Okay, what about Patel Engineering?
Yeah, what we are seeing is that the mid-cap space is buzzing quite a bit, and especially the infra, the engineering, the power sector. So Patel Engineering definitely is a very good bet. After a long period of decline, the stock is showing some revival here, and it's been supported by volume, so it's a buy.
Okay, and in the ATF blending space, you have a couple of names that are standing out, Praj Industries as well as True Alt Bioenergy. Would you buy into these two counters?
Yeah, True Alt, I would wait a bit, but then Praj definitely, because the kind of structure and the kind of news flows that are coming into play with the support from the government, it clearly indicates that there is more upside left. Yes, you may feel that the stock has run away, but I feel that there is more room on the upside.
Okay, and Delta Corp, on the face of it, the numbers don't look fantastic, but because there's a one-off in the comparable quarter a year ago. There's an other income element in that, and so that explains the 90% drop in the PAT. But would you trade this? It's buzzing in trade.
Yeah, definitely the stock is buzzing in trade, but then there is long periods of decline, which has the historical period of decline would come into play, and you would witness some profit booking here. So right now it's not a good time to invest. Maybe at lower levels, closer to the region of around 65 to 69 is where I would try to re-enter the Delta Corp.
Okay, so that's quite a few buzzing stocks that we've already taken care of. But Hiral, what stands out with the Google trends today?
You know, it's very interesting to see because it's been the power pack that has been on Google Trends focus over the last couple of days. So that tells you that's where the interest lies as well with the kind of searches that are coming in. Today you have a IRDA, interestingly, which has come in. In fact, that was the top F&O gainer in yesterday's session, is seeing profit booking today as we speak. Trent, again down in trade. We've spoken about Havells reacting to numbers as well, and a Tech Mahindra. Raja, you know, if you have to look at a IRDA or for that matter a Havells or Trent, anything that you like from this space where you have a strategy?
Yeah, what I would say is that, you know, the FMCG SPAC has been, declining for a while. And now after a long time, I can see that the FMCG sector as a whole has been showing some revival. Amongst them, Trent suffered quite a bit over the last couple of months. And now over the last few days, the strong recovery here covered by volumes and also some brokerage upgrades, we can see that the stock can actually travel further and achieve its former glory. So yes, a trend is definitely on the buy side for me.
All right, so Trent is something that we've been focusing on as one of the stories of the day. Pretty stellar performance on the Q4 results, but the outlook is where the question marks lie. And I wonder what brokerages are saying. Quite a few of them actually positive on the results, but they're wondering what happens in FY27, right, Mahima?
Right, absolutely. And I think the stock performance also, right? In the past 1 month, it's run up 30% and probably seeing profit booking on the back of that today, right? But I think, like Alex rightly mentioned, right, because of the outlook, the management has gone out and said that demand overall, the demand situation looks a little cautious because of the West Asia conflict, and that's why probably we're seeing that profit booking coming in. Now, Morgan Stanley has maintained overweight with a target price of 4,835. What they're saying is that strategy remains intact to drive share of revenues in proximate markets. Citi has hiked the target price but maintained sell on this one with a target price of 4,100. Overall, strong execution, margin sustainability is a question mark is what they're saying. They say that they continue to like Trent's business model and execution track record but await better valuation. Lastly, Jefferies has maintained hold and hiked the target price to 4,675. So a lot of these brokerages have gone ahead and hiked the target price as well but maintained the stance. What it's saying is it's a strong beat. Reported a strong quarter, helped store expansion and improving like-for-like growth is something that they've liked. But overall, commentary seemed cautious in near-term demand due to geopolitical uncertainty, which may have led to higher cost. Trent continues to stay focused on densifying key market areas, and that is something that they're liking and probably will be tracking going forward. So this is the overall view as to how things have fared for Trent and what brokerages are kind of making of it.
Okay, let's go across to our fundamental expert. We've got Ashian joining us today. Ashian, this is one of the stocks of the day, and it's had a volatile day, understandably, particularly because of the run that it's had in April so far. If you are a new investor and have failed so far to buy Trent, would you do so today, or would you give it a pass and wait for better opportunities?
Yeah, sure. So firstly, thanks for having me on the show. If you are looking at Trent, and you can broadly look at this from a larger consumer pack, there has been a sustained period where you have seen consumer companies, especially discretionary consumer companies, actually struggling. So at least when I'm kind of looking at a company like Trent, I think the run-up that you've seen in April is not as material as the fact that you've actually corrected from an 8,000 high to kind of below 4,000, and from 4,000 you've come back up to about a 4,300 level. Trent continues to be one of the best run and continue to have amongst the best execution when it comes to the organized retail space. So yes, it is definitely a very, very interesting kind of a longer term hold, because discretionary consumption and discretionary consumption demand in India is one of the clearest longer term macro trends, and Trent arguably is one of the companies that is executing the strongest out there. The weakness that you've seen over the last 2 or 3 years has actually been part of a larger weakness that you've seen across consumer discretionary names. Now, as that starts to come back, we'd actually expect some of these stocks to start to kind of come back and actually perform slightly more structurally. But it is very, very important to wait and actually see that growth revival. Yes, Trent's numbers have been strong, but a lot of that growth has been driven by store addition. growth and same store growth, right? And across the industry, I think that is what markets are really waiting for a larger move in the space. Now, obviously, whatever's happening with US Iran, oil prices, the impact that's going to have on inflation and consumption demand, that is a headwind. So I think we need some clarity on US Iran before you get structurally more positive on a counter-leg trend.
So that's with regards to where trend goes. But moving on, Purocha Godrej takes the helm of the Godrej Industries Group as one of its most pivotal moments. Now, my colleague Nisha Podar spoke to him about the growth levers for the group going forward. Let's listen in. The stock also seeing some smart moves today.
At the Godrej Industries Group level now, we have 6 different operating businesses in sectors as varied as real estate, FMCG. Our agri-business in and of itself is a conglomerate with 6 or 7 different verticals under it. We also have in the unlisted space some very exciting new businesses like Godrej Capital, our financial services play, which is our youngest business, just started about 5 years ago, has seen a lot of progress in that period, but we have big ambitions for that business. We also have a legacy oleochemicals business called Godrej Chemicals that we're trying to put into the direction of becoming more of a specialty chemicals player. Quite excited about the opportunities there. And lastly, we have a business called Godrej Ventures that has a film studios business, a managed office platform, as well as a core office in partnership with Godrej Properties. So these 6 businesses tapping into almost all parts of the country's economy, whether you look at the agri economy or the urban economy through real estate or the financial services opportunity. So really quite optimistic about the possibilities in each of these. We've had many notable successes in recent years. If you look at the last 5 years, cumulatively, these 6 businesses have delivered a compounded sales growth of over 20%, also a compounded earnings growth of over 20%. So we want to sustain that growth, make sure earnings per share continues to grow at over 20%, add to that an expectation that each business individually delivers a return on equity of at least 18%. Bringing together that growth and efficiency is what we think can unlock this value and take us from where we are today to this 500,000 crore aspiration. We also think there's an opportunity over that period to list a couple of additional businesses.
Those are interesting ambitions that we're talking about with that change that has happened at leadership level. Ashi, this is Hiral on this side. The stock seeing some smart moves today has cooled off from the day's highs. But with the commentary coming in, with the change of leadership happening, how are you looking at the stock? Because the stock prices in terms of Godrej, we've not seen a massive move that has come in. But do you think from here on, with the strategic changes that could happen and where valuations stand, this could be an interesting juncture?
So I think it's a little early to kind of take a call there, because what you clearly do have is new management kind of rigor. And you have a very clearly stated ambition of kind of hitting a 5 lakh crore market capitalization for the group by 2031. Now current market capitalization would stand around 1,80,000. So there is clear kind of potential and aggression in terms of trying to create market cap. There are a number of fairly interesting businesses in the unlisted space. The only problem is at this point in time, there is fairly limited information or data available to really be able to assess how valuable some of these unlisted entities are that they are planning to kind of list going forward. But clearly there is a management which is sitting and kind of trying to unlock shareholder value, is trying to kind of increase market cap. They have kind of multiple listed group entities currently. Some of these have been performing quite well. Some of the others, however, have been underperforming. So I think a focus on kind of shareholder value creation, on trying to build out a market cap, and a clear plan on kind of getting more of the companies listed and into the listed fray clearly does seem quite appealing. That said, it's important to understand that the amount of information which is currently available is limited, and therefore while there is a lot of excitement and there is potentially a clear story here, visibility on the same and actual quantification of the same is a bit difficult. We do know the overall number of the 5 lakh crore ambition, but honestly, that's management's ambition. Actual market capitalization is determined by markets, not management's.
Regards to Godrej Industries as we speak. Let's just once again pull up a Union Bank of India, because that stock is crashing in trade at the day's lowest levels. 7% is the downtick that we are seeing on this counter. Now, I think the core issue of what's going wrong over here is the deposit credit mismatch, because the widening gap that's coming in on that front, your advances have grown by around 9 to 10% on a year-on-year basis, whereas if you look at the deposit growth, that has lagged significantly at just 2.7% on a year-on-year basis. So that is that, one of the biggest issues that I see over here, where there is a mismatch when you talk about the deposit and credit growth, because this creates risks when it comes to liquidity tightening, and this will actually force the banks to actually rely on costlier CDs, that's the certificate of deposits, or market borrowings as well, when they have to actually go fund their newer loans. Secondly, if you talk about their net interest margins, there has been intense competition, as we are seeing, for deposits in FY26, and that has led to higher interest payouts. So your interest margins have hovered in that 2.67 to 3% kind of range. So that is one of the other concerning areas that you should be watching out for. And the operating expense. Now, the cost to income ratio is up towards almost 49%. And this is what is signaling your lower operational efficiency at the bank's level compared to the peers. And if you talk about your overall guidance, that is going to be key from here on. The management of Union Bank of India is slated to speak shortly, but the provisions have also gone up 3 times. So these are a few of the concerning areas that I'm watching out for in terms of Union Bank of India. A quick view, Ashi, because the stock has been correcting. We are at the day's lowest levels, cuts of nearly 6 to 7% coming in on this counter.
Yeah, sure. So I think what you're seeing in Union Bank is not just Union Bank, it's something you're seeing across banks, right? A lot of banks are struggling to kind of garner deposits at the same rate at which they can lend. This is leading to overall NIM pressure, and the fact that interest rates have reduced and you have kind of advances repricing immediately because they're now kind of linked to interest rates. That is kind of causing NIM pressure and deposit pressure across the banking space. I think what you are seeing with Union Bank is you are seeing a greater level of pressure on both of these factors when it comes to Union Bank. Now, I think the way we look at this is we actually look at this as a private sector and the kind of leading private sector banks versus PSU banks. What you have seen over the last couple of years is you've had some of these leading private sector banks correct in terms of valuations, and PSU banks have actually rallied and valuations have caught up. The relative valuation gap between private sectors to PSUs are now close to an all-time lows, at least over the last decade. As you kind of, the way we kind of look at it is, as some of these pressures are kind of there in the banking system, you will see a clear gap between how private sector banks are able to deal with these pressures vis-a-vis PSU. And I think when you look at Union Bank, it is clearly evident of the same. We've had HDFC Bank, we've had ICICI Bank numbers come out. They've not had, while they have had pressures in terms of deposit growth and NIM pressures, it's not been as high, and which is why you're kind of seeing Union Bank kind of correct the way it is.
Yeah, absolutely. Ashi, I was actually looking at the P&L, and first of all, core growth of just 1%. So NIR growth of just 1% for Union Bank, and that is the issue that I saw was actually a 34% decline in the treasury operations results, right? So the profit from treasury operations down by as much as 34%, having a bearing on the PAT number as a whole. So do you think that this is something that the public sector banks as a whole are going to have to contend with because of the kind of treasury operations that they have and the way that yields have moved in the March month of the previous quarter?
So at least from our perspective, right, treasury income tends to be very volatile, and it is volatile quarter on quarter based on how interest rates have moved. So really treasury income is not something we are as concerned about. We do know that it moves up and down quite considerably. It's not something that a very strong or very weak number should lead you to change your view on that particular quarter's results, because this is a very volatile line item. What is more important is your longer term structural ability to grow your advances, protect your NIMs, and keep your costs under control. I think it's actually that, right? The fact that advances have come off a bit, you've had NIM pressure over last year, and you've had some amount of So you've had some amount of asset quality pressures. These combined have led to weakness in banking overall, and kind of like, I think slightly higher levels of weakness in PSU banks, which have been struggling a bit more. Treasury income, according to us, is not the big concern because that will be volatile based on what's happening with interest rates. It's not something that has an impact on longer term value creation or valuations.
Okay, so that's with regards to Union Bank. And, you know, treasury income has been one of the concerning areas right now in this quarter as well. But thank you, Ashi, so much for joining in. Always a pleasure to speak to you. Completely out of time. With that, it's a wrap on this edition of Trending Stocks with Alex, the team that put the show together, and myself. Lots more lined up On the other side, we have the Union Bank management also, who will be taking the press conference, and I think that's where you will get all your answers as well. So please stay tuned to NDTV Profit. We'll have Piyush Shukla, who will be, actually looking at from NDTV's end.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he
A lackluster handover continues to keep benchmarks under pressure, with risk sentiment awaiting geopolitical cues. Sensex sheds more than 750 points. Auto realty are under the most pressure as well, while pharma and energy remain resilient. And the war premium is back in the barrel. Oil is ripping higher as diplomacy stalls and tankers stay frozen at Hormuz. Brent soars past $103 a barrel as peace talk headlines fade past, with ships not moving. Meanwhile, Pirojsha Godrej, the new chairperson designate of Godrej Industries Group, unveils a new identity and vision, aims 5 lakh crore market cap by 2031 to list 2 more companies from the Godrej stable as well. That's the snippet coming in from this particular conversation. And voting for state elections underway in West Bengal and Tamil Nadu. 152 of West Bengal's 294 constituencies vote in the first phase. In Tamil Nadu, all 234 seats are voting in a single-day election. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. First things first. And it's looking like a weak day coming in for Nifty as well as Sensex. When you talk about Nifty, about 180 odd point cut coming in. Sensex, that cut is actually much deeper for the Sensex. When you talk about the sectoral picture as well, it's looking like a broadly bad set of picture in terms of PSU banks, autos and Nifty Bank and Realty. Those are the sectors that are leading the losses as well. When you also talk about some of the gainers as well from within the Nifty 50 pack, in terms of sectors, you do have pharma that is in decent shape right now, and even energy that is doing well for itself, remaining resilient in a market that is otherwise tepid. Let's also talk about some of the stocks that are under a lot of pressure right now. So something like a Havells India makes it to that list, Union Bank of India as well, and we'll be getting you some more details shortly as well when it comes to that number also coming in for the earnings fine print. About a 6% knock is what the stock has taken right now, and a sharp fall that you've seen coming in the last few minutes for this particular counter. More details will be shared with you in just a little bit of time, but before we do that, quickly taking a look at some of the Nifty 50 losers as well. So SBI Life makes it to that list, Trent, Tata Motors, PV, Bajaj Finserv, Shriram Finance, Interglobe Aviations. Those are some of the other losers as well. When you talk about the top gainers as well from within the Nifty 50 pack, something like a Dr. Reddy's is holding up quite well. Adani Enterprises, Sun Pharma, ONGC and Coal India also in decent shape. And Nestle is also continuing some of its momentum from yesterday. But, you know, when you talk about the entire commodities pack, that's also very important to take a look at right now. And in fact, let's do just that. Let's take a look at Brent oil futures as well, crude as well as WTI right now. And, you know, when you talk about the movement that you've seen coming in, it's quite the surge that you're looking at. Look at that $103 a barrel level also being breached for Brent, as you can see on your screens, about a 1.5% uptick coming in for Brent. But when you also talk about WTI, about 1.5% uptick coming in there as well. But let's also, like I mentioned, Union Bank is also in focus. Our reporter Piyush Shukla is in conversation with the management. You know, that's something that you're looking at in terms of the importance of the stock, and it's taken a very sharp knock. The presser is currently underway. Let's tune in.
Of 18,697 crore for the year, sir. Credit cost remained at 0.23% for FY26 year as a whole and 0.16% for Q4. Return on asset at 1.36 and ROE at 18.04% for quarter, and for the year as a whole, ROA and ROE stood at 1.25 and 15.86% respectively. Next slide, please. So this slide shows the profitability parameters, sir. Operating profit, as I mentioned, for the Q4, it's 7,955. Again, this is the highest ever profit reported by the bank. Grew by 14.59% on a quarter-on-quarter basis and 3.31% on a YOY basis. Net profit again reached to 5,316 crore in Q4. Grew by 5.96% on a QOQ basis and 6.64% on a year-on-year basis. Again, this is the highest ever net profit reported by the bank. Next slide, please. This slide shows the asset quality of the bank. Both gross and net NPA stands improved to 2.82 and 0.48%, mainly driven by recoveries and upgradation. Total recovery is 13,800 crore, 13,008 crore, and controlled slippages were 8,451 crore in Q4 and 12,073 crore in FY25. So if you can correlate this, our recoveries are higher than the slippages, containing the credit cost. So PCR improved to 95.03% from 94.61% a year ago. Credit cost declined 53 basis points to 0.16% on a year-on-year basis. Slippage ratio contained at 0.85% in Q4 versus 1.13% in the corresponding quarter of the previous year. Credit growth. Next slide. Yeah. This slide shows the credit growth. Advances, as I mentioned, grew by 9.74%. The major contributor in this segment is MSME, which grew by 18.75%, and retail grew by 16.75%. Corporate advances also registered a growth of 6.39%.
Alright, and there you go. So that's the commentary also coming in from the management of Union Bank. When you talk about what went wrong with the stock, of course, you do have the net interest income that is went down by quite a bit. Credit costs saw an increase of about 7 basis points, and the provisions also were quite elevated, and that's something that you're looking at. Of course, the stock has taken a sharp cut as well, about a 6% drop coming in for Union Bank. And we'll get you some more details a little later as well. But before we do that, let's, like we were talking about oil prices, They've in fact surged. Brent is near $103 a barrel. Let's quickly take a look at those levels as well that I was mentioning for you. 1.5% uptick coming in for Brent. When you talk about WTI, about 1.5% uptick coming in for that as well. And you do have the blockade that is escalating in terms of the Middle East supply shock, and that is very much in focus. Let's also go across to Ajay Kedia, Director Kedia Advisory, standing by with some more insights right now. Mr. Kedia, thank you so much for taking time out and joining us this afternoon. First things first, I wanted to try and understand what you think about oil prices right now. Do you see the surge being sustainable from here on?
Very good afternoon. Yes, definitely, because we have seen multiple of time US and Iran were trying to go with a talk, but this is the third time we have seen the talk has been totally failed. And since 1st of March, we have seen a spike towards 120 on account of closure of Strait of Hormuz. Today, the condition is same. In fact, overall, I think scenario would be in this range only. So we expect prices would continue to hold above $100 mark. Maybe a level like 108, 110 could be there because things are not cooling down as of now. Let's hope for next 48 hours how the things would be going. One more thing is if this type of things will continue to be there, so it will be just like a Cold War, what we have seen in Russia-Ukraine condition. So similarly, I think energy infrastructure has been totally damaged right now, which will prevent prices to go below $90, $92 as of now for at least Q2, Q3. Post that, maybe we can see, because OPEC is now trying to leveraging wherever the production cut has been announced earlier. Now they are recovering that. So I think prices will remain on elevated levels, can see.
No, absolutely. And we're seeing some indications of that really happening also, Mr. Kedia. But, when you talk about the higher for longer assumption for oil prices, do you think that still sustains? Because like you mentioned, some of the key infrastructure has taken quite the hit in this particular war.
So I think currently we are still under a war-like situation only, so it is very difficult to update anything because as soon as we see the news for ceasefire, immediately there is a fall of 18-20%. And whenever there is a fail news, immediately we see a jump. But despite that, we expect for at least next couple of quarter prices would be above $85 for Brent, and maybe possible if things are settled down, a level like 70, 75 between could be in Q4, because overall we are oversupplied as compared to the demand. But as of now, because of logistic concerns, prices are getting supported. So maybe for Q2, prices on higher side could be around 112, 115, but lower side could be 95. And slowly and steadily Q4, we can see prices moving back in the range of 70, 75. But forget, 60, 65 won't be coming in 2026.
No, absolutely. And that is something that we could just be penciling in, given that that entire base has completely been reset by the war as well. And that assumption has really drastically changed for oil prices. But let's also talk about gold as well. That's extending losses right now. Do you think that it's just a stronger dollar, or do you think that the fundamentals for gold are starting to look a little less lucrative?
See, one thing more in gold we have observed. See, in last 50 days, we have seen money was just wait and watch mode would be there. Today, in last couple of days, we have seen crypto is showing a very good strength. Today, Bitcoin has been around 78,000. That clearly shows money is now moving towards Bitcoin. Even Russia is started accepting the cryptos, and that is why we have seen focus is now shifted to Bitcoin. Coming on the gold prices, I think from 5,400 to 4,100, and now prices has rejected 4,900. As of now, dollar index is around 98.50, trying to recover. So somewhat, unless and until $5,000 doesn't break, we are bearish for gold. Maybe a level like 4,500 to 4,450 could be possible. But one thing is very much clear: in 2008, 2022, whenever this type of war or global condition comes, initially for 4-5 months, prices comes down. But after that, there could be a bigger rally. So for a short period, yes, we are expecting a bearish move towards domestic market. Also, we can see prices moving back to the level of 125, 130, but long term still intact because of de-dollarization and other factors what we have seen, because interest rate cut would not be possible in 2026. Maybe we can see rate hike in Q4 if elevated energy level would be there.
Right now, absolutely, and that makes a lot of sense in terms of the way that we've been seeing things unfold as well. But Mr. Kedia, when you talk about gold as well as oil, do you think that gold, it hasn't been trading as a safe haven asset for quite some time, and you've mentioned why that could be so. But going forward as well, do you think that oil is starting to pick that role up as a safe haven, that investors are rotating back to oil given that there's so much volatility?
Yeah, if we talk about crude and gold ratio, then definitely in last 1 week period, we have seen again this inversion relation has been started where crude prices are going up and gold prices are down. But that will be a tactical move only. We can see both going in hand. As of now, yes, because of uncertainty, crude prices would be on elevated level, and gold we are facing a sell-off because equity and other risky assets are under pressure. So that could be a temporary fall for gold. But yes, right now, looking to the ratio, crude and gold ratio, it should go up. That suggests crude prices would be outperforming gold.
Absolutely. And do you think that this is a bad time for buys as well when you talk about gold, given that it's extending losses? Some of the price levels, some price points could be looking attractive to investors.
So I think after a couple of years, a great rally, what we have never seen in last 10 to 15 years, definitely there should be a correction or a time correction. The gold is facing a time correction right now. Immediate support, actually, I am expecting around 4,100 at least. So I think for next couple of months, it will be a range bound or sideways to negative move for gold. This is the right time to buy, but in a piece by piece manner. Either you go with a SIP in ETFs, you can go because long term still intact, but short term, I think market would be sideways to negative.
No, absolutely, and that makes a lot of sense in terms of what you should be doing. Thank you so much for joining us with those insights as well. So there you go. If you're looking for fresh buys for gold, this is the right time, and there's a time correction that is currently playing out. So might be prudent to really be looking at this right now in terms of the kind of roadmap that you have for gold prices going forward as well. Let's talk about raw material disruptions that weighed on Havells as well, and that's this particular counter that you're talking about in terms of what has really happened with the stock, about a 6.5% knock that you're seeing for this particular counter. And when you talk about the revenue as well, it's taken quite the sharp hit. Domestic wires business is something that the management is flagging. Let's go across and listen in.
The largest segment amongst cables and wires, which is the domestic wires business, did see a revenue flattening in the fourth quarter because of the fact that there were raw material price disruptions and destocking of the channel during the first half of the quarter, and also a high base over last year. So I think overall it's a mixed performance, and we look forward to the coming year.
All right, then there you go. So that's the word coming in from the management, where they're flagging raw material disruptions being the key problem here. They, in terms of brokerages, also you do have Citi that has cut the target price for this particular counter, and that's also the commentary coming in from them. They're talking about how the growth and margin improvement from here on is actually quite important for their re-rating. Jefferies as well as maintaining a hold rating as well on this particular counter, and that's also something that you're looking at. Macquarie as well, that also has an outperform rating coming in, but they're also flagging some of these margin surprises and macro uncertainty posing, some of those headwinds as well. So that's largely what you're looking at. Jefferies, of course, maintaining an outperform rating, and that's the word coming in from the brokerage verdict as well. But let's also move on, take a look at Tech Mahindra that came out with a stellar set of numbers in the fourth quarter, backed by robust margins and uptake when it comes to the revenue. Let's listen into a slice of the conversation that we had with Mohit Joshi, CEO and MD of Tech Mahindra.
The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line. In the short term, though, there is a concern that some of the productivity asks that are being driven by the client will result in some revenue compression for the industry as a whole.
All right, then there you go. So that's AI that could be dragging the industry as a whole, and some revenue compression could be on the cards. That's the word coming in from Tech Mahindra, from the key talk point as well when it comes to IT companies, and that's AI. But let's also talk about something like a Trent that has delivered a strong set of numbers in the fourth quarter. Of course, the stock is down about 2.5%. But when you talk about the brokerage verdict, that's also quite important to take a look at it. But first, let's take a look at the earnings fine print. Mahima is standing by with that roadmap as well as the brokerage verdict.
Right, so overall, Shreyansi, if you take a look at the earnings, definitely on a strong footing, beat estimates on all front, plus aggressive expansion is what they've done this quarter. Even in terms of, margins, it was a big beat coming in largely on account of cost optimization, plus revenue growth was better than what it did in last 2 quarters of 15 and 70% respectively. This time they've done 20% and announced, of course, bonus as well as a fundraise of 2,500 crore. Now, revenue saw an uptick of 20%, EBITDA an uptick of 40%. EBITDA margins at that 18.6% mark versus that of 16% earlier, and net profit saw a growth of 30%. Operational highlights: Star Bazaar business is seeing a revamping. That was a slow growth of 6% took place. Like-for-like growth was reported in a low single-digit number, and overall emerging categories now contribute almost 21% to their overall revenues. Plus, online sales also saw an uptick of 25% and now form almost 6% of Westside's total sales. In terms of major corporate action, bonus declaration of 1:2 in that ratio, fundraise via rights issue of 2,500 crore, and recommendation of dividend of ₹6 per share. Now, what is brokerages saying? Brokerages have largely maintained their stance, but have hiked the target price by a tad bit. Morgan Stanley has given a target price of 4,835 with an overweight rating. They're saying overall, our strategy remains intact to drive share of revenues in proximate markets. Citi has maintained sell, hiked the target price to 4,100. Overall strong execution, margin stability, however, is at risk. They believe that gross margin has likely benefited from inventory provisioning reversal as well. In terms of Jefferies, they've maintained hold and hiked the target price of 4,675. What they're saying is that it's a strong beat for sure. The company reported strong Q4 helped by store expansion and improving like-for-like growth. Operating leverage benefits have also helped EBITDA grow 40% and commentary seemed cautious in terms of near-term demand, and that's something that they'll be watching out for going forward. So this is the overall view as to how things are fared for Trent. But I think it's seeing profit booking today. It's rallied almost 30% in the past 1 month on the back of its business update coming in, and probably seeing profit booking today, and also on the back of the bearish commentary that the management has given.
Absolutely, and thank you so much for putting all of that into perspective, Mahima. So there you go, profit booking as well as some little bit of softer commentary also coming in from the management that is weighing on the stock down about 2% right now. But let's also talk about another counter that is down quite a bit, Union Bank, that is in focus. The stock is down about 7% 6% right now. And you do have the core income that is declining, provisions rising. Let's also go across to Shivam, who's standing by with some more details in terms of what is really happening with this particular counter and what really went wrong.
Well, yes, Union Bank has posted a weak set of numbers for Q4 FY26. And let's look at the 5 top reasons what went wrong in this result. Starting with the net interest income, it has gone down by 1% to stand at 9,400 odd crores, which has resulted in a decline in net interest margin by 12 basis points on quarter basis. If we look at the total provisions, that has also increased by 3 times to 1,055 crores, and provision for NPAs has also surged 80% to 423 crores. Credit cost has also seen an increase of 7 basis points on quarter basis, and other income has aided in profit, but that includes income from investments and treasuries, which are non-core operating income. So that's why that's not also a reason for a good set of numbers. So return on asset has also saw a marginal uptick, and asset quality has improved, but on profitability and provisions front, bank hasn't done that well and remains a concern.
No, absolutely, and that concern is also being reflected when it comes to the stock price. You can see that 6% knock also coming in for this particular counter. Thank you so much, Shima, for also putting it into perspective. Let's also talk about one more counter that is really in focus, which is Tech Mahindra, and we've already, talked about it just a tad bit. Let's take a look at the earnings fine print very quickly and take a look at what the brokerages, of course, had to say. You've heard out what the management then had to say about the AI roadmap as well, but let's go across and listen in to Jasmeet, who's standing by with that entire earnings fine print.
Well, thank you for that. We look at Tech Mahindra as an entire company. It has done pretty well with what the expectation was in terms of overall revenue and EBIT growth. And even the margin expansion, we're estimating an uptick of 24 BPS, but the margin up moved, showing at 70 BPS, showing the confidence in the overall long-term guidance. Well, the management also restates that they are on track to achieve the 15% target by FY27, and they remain on track of that as well. If we look at the other key details, we make a note that company records its second consecutive quarter of hitting that $1 billion mark in terms of deal win. And in this particular year, company currently records deal win worth rupees 3.8 billion, making the highest ever deal win for the company. If we look at the overall CC growth, it comes in at 0.6%, which remains positive despite macro uncertainties. We're talking about the key numbers. The numbers have shown positive upmove in terms of revenue and EBIT, while margins are expanded, but net profit saw a one-time hit coming in from the subcontracting and the forex charges, which might get mellowed in the coming quarter. Now, if you look at the overall brokerages, they have remained conservative in this particular counter. Something like a City on TechMahindra, they have maintained sell with a target price of 1275. What they see the overall quarter was largely in line. They also see the valuations are already poisoned in the entire positivity of the particular counter. The next one is Jefferies on TechMahindra. They have maintained underperformance, but they have hiked the target price to 1220 from earlier 1180. Now, what they say is they have seen the revenues are in line with the estimates, while the profits are missed due to the forex losses. They also make a note lastly saying that they raised the EPS at 2 to 3% on the back of that INR depreciation.
No, absolutely, and that makes a lot of sense in terms of Tech Mahindra's earnings fine print as well, Jasmeet. But the reason why we're talking about this is because the entire IT pack is very much in focus. You're looking at Infosys as well, and you do have the poll that we should be looking at in terms of the key things to watch out for here. Jasmeet, let's go through the what is being penciled in terms of the earnings as well as the dividend front.
Well, for Infosys, the key crucial thing to watch out is the overall guidance in this particular quarter. But before we get on the guidance and the commentary, what we're expecting, let's quickly understand the key numbers. Well, we are estimating the revenue to be flattish and say an uptick of slightly 0.4%. In terms of the key EBIT margin, expected to rise to 0.98%, while the overall margin is expected to rise by 9 BPS points. Now, in terms of net profit, that's an interesting one. It's expected to rise by 11%. This is on the back of that low base we saw in the previous quarter. It is one-time labor code. Now, in terms of the key highlights to be watched out in this particular result is the overall CC growth. While brokerages are penciling in CC growth between -1 to -0.2%, but it's something to watch out of how it has panned out this quarter. And this particular year, the company has not reported even a single negative CC growth. So Q4 becomes a crucial to watch out for. Apart from that, the update on the acquisition of Versant as well as other ramp-ups which they had done in the previous quarter will be in focus. We also would like to focus on the overall large deal win, which are expected to be in the range of 2.5 to 3 odd billion this quarter versus 4.8 in the previous quarter. Now, in terms of the guidance, which is key crucial to watch out for, if you look at the overall brokerages, Morgan Stanley and HSBC penciling in a guidance of roughly 2 to 4 odd % versus 3 to 3.5 in the previous quarter. They expect the overall guidance band to increase. While secondly, Morgan Stanley expects the FY27 margin outlook to be between 20 to 22% for this particular quarter, which is something to watch out for. All in all, we expect a muted result, but the guidance become a key crucial to watch out.
Absolutely, and thank you so much, Jasmeet, for joining us with that update also coming in terms of what to pencil in when it comes to something like an Infosys. Of course, IT is in focus on the back of it being down, yet again, not, like it was yesterday. But let's also take a look at the pharma pack that is in focus. It's remaining quite resilient, and it's already seen a volatile April, though initially you did have this underperforming the broader markets before staging a sharp comeback. It's quite an interesting story. In fact, Varsha is standing by with just that update there.
Well, yes, we are seeing a good rally in overall sector. Now, this is after the underperformance that we have seen in April. Let's see what Nifty Pharma has done versus all the index. If you see, the Nifty 50 is up almost 7% in April. Nifty Pharma is up only 4%, while Nifty Auto is up 7%. Nifty Bank, if you see, 10%. Nifty Realty, 19%. So, there's a sharp underperformance that Pharma has given to the street. But let's see why Pharma lagged in April, because there were no major earning upgrades or no positive surprises as such. Also, US pricing pressure narrative resurfaced. So, and also if you see, April saw profit booking at higher valuation levels because 25 was a good year for Pharma. And this money was rotated into banks, PSUs, infra and capital goods, and hence Pharma stayed out of the favor during this rotation phase. But now what changed today? Of course, there was a short covering after recent weakness, number one. Now money is actually rotating into Pharma as a defensive hedge during the volatility that we are seeing. Talking about the key performers, you have Dr. Reddy's. The stock is among the top contributors to Nifty Pharma today. If you see, this is because analysts are expecting a potentially a generic semaglutide launch in Canada for Dr. Reddy, and Dr. Reddy will have a first mover advantage for that. And for Cipla, if you see, Cipla is also buzzing in trade. This is because of they got approval for albuterol sulfate, which treats bronchospasm, and this has almost If you see, the market is estimated at $1.5 billion. Even Aurobindo is also buzzing now. This is because the 800 crore buyback at rupees 1,475 per share opened today. And also this spillover is also expected to other stocks also. You have Lupin, Piramal Pharma is also buzzing because of optimism spillover across the sector stocks. So overall, if you see, Shreyansi, the pharma is actually coming back and people are buying to the defensive sector.
No, absolutely, and thank you so much, Varsha, for joining us with that update there as well. So it's really staging a comeback, and that's something that you can very clearly see being reflected today as well, with that being the top sectoral gainer as well. But with that, we're completely out of time on this edition of the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening.
MSMEs who have exposure towards the export segment, do you see second and third round order impact coming on those, and do you feel going ahead there could be in Q1 or Q2 some sort of trust building? And if you could share the SMA 1 or 2 moment as well, has there been some increase? How are MSMEs doing on that front?
So your first question was basically related to that how we see the coming years or coming period. So it is very clear. Let me just share with you. This is the third time I am meeting you in this hall. So we are very clear that, September when we met, I think 28th or 29th October, we made it clear that yes, then we met in the month of January, 13th, I think 13th or 14th. And the growth you have seen, if you take the growth, it is more than 6.5% in the half year. So actually whatsoever result you are seeing, it is on 1 6 months we are muted, 1 6 months we have tried to make it actually. So you see it is a more than industry growth if you ask me. So almost if you take 7%, 7 into straight away if you take 6.5, so 6 into 4, quarter into 4, annualize, if you analyze it is almost 20-24%. So we will continue with that growth of that industry which is growing even better than that. So very clear. Even our CASA growth is much better than the total. I think retail and CASA, which is we have grown in the 6 months very fast in that. Now coming to the second part, which you asked about this. So Government of India has come and Reserve Bank of India has also come on the exporters particularly. So in that I think I'll give you the data. We have already So 306 applications came through Jan Samad portal. In this 210 are already sanctioned and 180 are already disbursed. And it has related to, that 20% of the total limit. I am saying that one. And coming to the Reserve Bank of India trade relief measures, so there were eligible applicants were 522, in which we actually talked to all, and then 59 people have applied. And that PC extension is for 35 application, post shipment for 3 application, and FITL for 40. So in total 170 and 21 and 49. So we are in discussion with them, and we are disposing that as per the eligibility.
But going ahead, do you see any stress coming up? These are export credit measures. There's no moratorium as such on loan payments, right? Do you see any?
Until now we have not seen any, there is that is stable, but yes, there sometimes we hear about Morbi cluster, which is in talk. So basically where the energy intensive sectors are there, because there was delay in gas, commercial gas, so maybe these sectors which were more dependency on the energy side. And one more thing which we have observed is that import which was happening. So that import which was happening, so the goods which were coming, so because of this Hormuz Strait and all, so actually it was elongated by 35 to 45 days. So when we had a lot of discussion with our exporter, importers and all, we came to know about this, and I think this trade relief measures has helped them a lot. So up till now we have not seen as such any very critical things coming into the MSME sectors, but then the companies which are in the cement and all this where, so if they are having a cash flow, then certainly the MSMEs are attached to them. But up till now we have not seen this relief measures has helped them. But yes, that import remittances, inward remittances, we have seen a decline. So I think this is one point, because importers are also there. So number of counts or maybe the total volume which is coming as a import remittances or inward remittances, it has fallen. I think around by 5,000 crore or something like that.
Well, that was the management of Union Bank. Now, the stock tanked nearly 6% post coming out with these numbers. Now, not a great set of numbers given the fact that the companies, if you look at the GNPA ratios, that improved both on a sequential basis, GNPA and NNPA. But the net interest income, that was down around 1% on a YY basis, close to 9,400. NIMs also decreased on a sequential basis. But moving on from one earnings to other set of earnings, SBI Life also came out with these numbers yesterday. My colleague Sharad Dubey caught up with the management. Let's listen into what they had to say.
Strong numbers coming in, especially if I look at the performance, at least in the value of new business and other operational parameters as well. Just wanted to get your view on it, how things were, because last time we spoke, Q3 numbers were on the stronger side. So this year ends on a strong note.
We are happy that the company has been able to deliver as per the guidance that we had provided at the start of the financial year, both on the top line as well as on the bottom line. The top line growth at 13% is above the industry average and also above the private industry average. So that is a satisfying feature. We are also happy that we have been able to provide the VONB margin also at 27.4%, which is within the guidance that we had provided for 26 to 28%.
And talking about the AP numbers, though it has moderated a bit compared to your other numbers, but it's still better than peers. Is there a little bit of concern going ahead into this new year, or will you maintain this growth which was there?
For the current financial year, that is FY27, we are maintaining the guidance of around 14% growth on the IRP basis and also on the APE basis. There was a little softness in the fourth quarter of the year for the entire industry, in fact for the entire financial segment.
And why was this? And why was this?
We think that this is the result of the geopolitical events that are happening. A lot of turmoil is going on all over the world, and the financial markets all over the world are affected by these events. We are also a part of that only.
Okay, so of course this is an impact which of course is not under your control, but just wanted to understand a little bit more about the product mix over here. Going forward, how will SBI Life's product mix move around, and are we looking at any higher yielding products?
During last 2 to 3 years, we have been focusing on growth with profitability. We are ensuring that our product lineup in all these segments, all these lines of business, that is protection segment, non-par segment, participating segment, is good. And our product launches in last couple of years have been very strong in these products. These products have been very well received by the market. The customer response is good, and that has resulted in good growth rate of these line of businesses in overall product mix. What that has resulted in is a drop in the overall ULIP contribution to the product mix from 70% to 66%. And going forward also, we will continue to work on this product mix in a positive manner.
And Jingran sir, apart from this, the OPEX costs seem to be on the higher side. Is this because of a little bit of seasonality at play, you're putting in some more marketing cost, or is it that something that we can see that putting a little bit of pressure in Q1?
One major bump in the operating costs is coming from the input tax credit. You are aware that GST was waived in the month of September. And that has resulted in a very good growth phase for the entire insurance industry. But on the cost front, that has put a little bit of pressure.
And will this continue, sir, in the first quarter?
This will have some effect in the first quarter and up to the month of September also. But we are happy that with our product mix, with our cost optimization initiatives, we have been able to largely mitigate this effect.
And Jingran sir, let's talk about the overall FY27 targets, which you have kept. I remember in third quarter you had stated that Sharad, you need to wait 1 quarter. So I'm waiting now. That quarter is over. What are the FY27 targets which has been set?
For FY27, we are looking at a top line growth on the IRP front at 14%. We have been growing at a little above the industry average, and we will ensure that going forward in FY27 also we maintain the same trend. On the margin front, we continue to believe that we will be able to deliver in the same range of 26 to 28% in the coming year, I mean the current year also.
Well, that was SBI Life, giving a growth outlook for next 2 to 3 years. But moving on, Tinna Rubber is one such stock which is in focus. Now, this company is Asia's largest recyclers of end-of-life tires. Well, they do have, Vision 2028 also, wherein they're expecting revenue target of around 1,000 crores by FY28. Profitability goal, if I were to talk about, EBITDA margin expected above 18%, and ROC is expected about 30%. A lot of triggers actually working for this company. New businesses, international operations, and FY26 and 27 are expected to perform better. But to speak more about the outlook ahead for next 2 to 3 years, I'm here joined by Mr. Gaurav Sekhri, who is Managing Director at Tinna Rubber. Mr. Sekhri, hello and welcome at NDTV Profit. Pleasure to have you. Let me start off with the current ongoing situation of Middle East war that we are going through. Just wanted to understand the trends of raw material prices and impact of this war on your company.
Sure. Hi, good afternoon, and thank you for having me on your show. I think the Middle East crisis has impacted everyone, and in a small or large way. In our case, we haven't felt the impact of it in Q4, and we are hoping that, and like the rest of the world, that this should now resolve the crisis in the Middle East, and things should normalize. So I hope we can get past this whole impact of Middle East relatively unscathed. But there has been some impact on higher freight rates on us. But Our customers have been very understanding so far, and we've not had so much difficulty in passing on the price increase to the customers as of now.
So if you could just give us some understanding on what percentage of price increase you have actually managed to pass on to your customers?
We are, we've been targeting between 5 and 10%, and depending on different customers, different product lines, we are achieving that to some extent.
And what would be the hit on your financials, not in Q4 at least, but in Q1, if any?
I don't expect any major impact of the Middle East situation on us. Like I said, things are hopefully stabilizing now and normalizing now. We have Q4, it has not impacted us at all. And in Q1, with the price increases that we are getting on our product lines, I expect the impact to be minimal.
And sir, sticking to the financials, you were expecting almost 535 to 540 crores of revenue in FY26. If that is to be taken, Q4 should be the highest quarter for you, ranging around 145 to 150 crore when it comes to revenue. Are you on track when it comes to FY26 with guided EBITDA margins?
Very much so. I'm very happy to share, very much so. Q4 was our highest top line quarter, and what you said, it's fairly accurate. It will be slightly better than that.
Okay, slightly better than what you have guided. Got that view. Also, sir, for FY27, you're expecting around 700 odd crores of revenue. But considering the Middle East crisis, but just now you said you're not seeing much impact of Middle East war. So could investors expect that 700 odd crore of revenue in FY27?
We fully expect it to be. We've just finished our sort of granular business planning session for FY27. We fully expect to be very close to 700. We've got our capex that we had done on the new plant in Varale in Mumbai. That is, the trials have already begun. We expect the production to stabilize during Q1, and we should start seeing some sales coming from this expansion towards the end of Q1, and then of course consolidate in Q2.
And so what about margins? Currently, you're hovering around 15 to 16% of EBITDA margins. Where will they go in FY26 and FY27?
We continue to maintain that we will see this number, this EBITDA margin to be met. There are, in fact, some benefits of operational efficiency which are beginning to kick in. But we also have some new projects underway which will take, which are expenses are always forward ended. So overall, I think 15 to 16% is reasonable to expect.
Right. Also, if you could just give us some idea on the international business, what is the kind of capex plan that you have? What is the kind of growth that you're anticipating, say, over the next 2 to 3 years?
Sure. So, we almost 3 years ago decided to take our learnings outside India and implement them in countries which have a very similar cost structure and some other macro factors which appeal to us. So we set up our first plant in Oman, which is operating in a stable manner. Some impact has been there on Oman due to this war. Fortunately, Oman has very good relations with all Middle Eastern countries, and it is not impacted so badly. But there is some disruption in shipping, and our customers within GCC also are seeing some reduction in their business, which also impacts us. So Oman has been our first initiative, stable, doing well. We are happy with where it is. I don't expect any major capex in Oman. South Africa, we began work a year ago. We are continuing to stabilize the operations in South Africa. I think we are another 6 months away. We are right now losing some money in our South Africa operations, but it's a very calibrated, very well thought out decision to go there, and our investment exposure is fairly small. Of course, the intention is to build a full recycling plant there by next year. But we remain very, very optimistic on South Africa.
Right. On that note, South Africa was expected to break even by Q1 FY27. Is that still the case?
I hope so. I think towards the end of Q1, we should start seeing that number. This, again, the Middle East war has not helped us because freight rates from South Africa have shot up, which impact the business there somewhat. But all the macro fundamentals for South Africa remain solid, and we remain committed to continue to grow there.
Right. Well, thank you so much, Mr. Sekhri, for answering all the questions, and it was pleasure speaking to you. Thank you so much.
Likewise, pleasure for me as well. All the best. Thank you.
Thank you. Well, this was Tinna Rubber outlining the growth outlook, expecting the FY26 to end around by 540 odd crores and 700 odd crores for FY27. But with that, let us also invite the guest for our show, Tapan Joshi, who is a research analyst at CA-Tapan.in. Well, Tapan, welcome at NDTV Profit. You heard the management of Tinna Rubber, expecting good growth for FY26 and FY27. What's your view on that counter?
Yes, if you see over the years, this company has done quite well now, both in terms of revenues and profitability. And the way they told that the expansion is also underway, even capacity expansion, they are going to do it in next few years. Margin improvement, of course, will be the focus, and value added products, hopefully they are going to scale up. The only thing is, raw material pressure will be there. So there will be indirect pressure on the margin. And overall EBITDA margin around 10% is little bit low, but I think government infra and again, overall the demand is quite good. And if you see, this year was not so great, last quarter and other last 3-4 quarters, but I think things will be improving. The stock has already come down from the top, so I think at this valuation it looks okay. And if someone has a long-term horizon, of course they can hold this stock for long.
Right. Now let's get in Mahima to understand what's been buzzing in the hosiery stocks like Lux Industries, Rupa or Dollar Industries. Mahima, is it because of the summer season? Usually we see a pickup in demand in these companies, right?
Yeah, probably that's the reason, right, Somit, because we've seen an uptick for all of these counters in the past 1 month, and today also they're flying in trade. If you take a look at today's performance, Lux Industries is locked in upper circuit at a 10% mark. Dollar Industries also gaining on 20% higher, and so is Rupa and Company, which is trading around 12% higher. Now, in terms of 1 month gain, all of these counters, Lux has seen a gain of 88%, Rupa has seen a gain of 38%, and Dollar Industries has seen a gain of 30 odd percent. Now, the reasons behind this could be the probably summer sales growth posing a good momentum and good volume growth coming in. Expectations could be that, and on the back of that they are buzzing. Recent price hikes in innerwear happened in southern markets, and probably that will follow through in other markets also. That will augur well for top line, and that could also be one of the reasons to why these are flying in trade. Now, if we take a look at the sales growth and profit growth for all of these companies and the valuations as well, the sales growth in the terms of past 3 years CAGR, Lux has hardly grown at 4% CAGR. Rupa has seen a degrowth, in fact, of 3-year CAGR, stands at minus 6 odd percent, and Dollar Industries has seen a CAGR growth of around 8 odd percent. Profit growth for 2 out of the 3 companies is negative, because Lux Industries saw profit CAGR growth of 4%. But at the same time, Rupa did see a degrowth of 24% and Dollar at a degrowth of 16 odd percent. So this, considering this growth metrics and as compared to where this stands in terms of valuations, is very divided, because Lux Industries P stands at 47 times, Rupa at 19 times, and Dollar Industries at 17 times. Though Rupa and Dollar are cheaper as compared to where Lux Industries stands, but still valuations are looking expensive, and overall growth is not justifying that. So this is the overall view of where hosiery stocks go.
Tapan, how are you looking at these counters? Valuations expensive and growth not justifying. Do you concur with that view?
Yeah, fully, because if you see, of course, a very big jump in all these stocks, but from last few years, these stocks are not doing well, as Mahima already told about the sales and profitability. Again, there is a raw material price pressure and many other issues already from the management side also there, and they lost the mojo over the last few years. Now, as the stock has already gone up, all this stock has gone up, I think at this level it looks expensive. Again, we have to see whether the quarter to quarter they are able to give the good profitability or not. Then only better to enter. Only one good instance does not mean that we should enter this stock. So I wait for 1 or 2 quarter more consistent performance, then only better to enter.
Right. Well, moving on, time to dive into the F&O market setup and the cues shaping in trade today. Let's bring in Parth for more details.
Thanks a lot, Varsha. So let's have a look at the BSE FNO Qs that are shaping up today, starting with the Sensex heat map. So Sensex had a gap down opening today, and since morning it has been trading in the same range. Among the top gainers, we have stocks like Sun Pharma and Bharat Electricals, while in the top losers, we have stocks like HDFC Bank and Mahindra and Mahindra. Now let's have a look at the FNO in the FNO segment. Starting with the long build-up, we are seeing stocks like Jio Financial and Policy Bazaar Fintech, both of which are up over 3.5% in trade today. Moving towards the short covering, we have Dr. Reddy's Labs and Oracle Financial Services Software. Dr. Reddy's is up around 9.7%, while Oracle is up over 8%. Oracle posted its Q4 numbers yesterday, in which the company saw a very strong jump in margins. Now moving on to the long unwinding, we have stocks like Havells and Union Bank, both of which again have reported their Q4 numbers, both of which are down over 6% in trade today. And lastly, moving on to the short build-up, we have SBI Life Insurance and TVS Motors, both of which are seeing some downside today. So these are the major FNO snapshot for today, and moving on with the show.
Well, thank you so much, Parth, for all the details. Moving on, let's pull up Camlin Fine Sciences. Let's see what that stock is doing in trade. Its stock is up almost 9 to 10%. There you go, 16% in return that the stock has given today. But let's see what are the key triggers when it comes to this counter. One is, of course, the vanillin volume guidance. Q4 FY26 volumes are, if you see, are expected around 600 to 700 tons. FY27 vanillin guidance and geographic mix, if I were to talk about 4,000 metric tons of guidance which has been given by the company, and FY27 geographic mix is expected around 60% from US and 40% from Europe. When it comes to blends, this is the core growth engine for the company, which delivered double-digit growth in Q3 despite operational disruption in Brazil. But FY27 growth for blends is expected at 25%. FY27 revenue guidance, which has been given by the company, stand at around 2,200 crores, and FY28 is expected to end at 2,400 crores. Well, gross margin, if you see, is expected at 46 to 47%, and EBITDA margin for FY27 is expected at 12 to 14%. So overall, a good performance is expected by this company in FY27. And lastly, on the acquisitions, though, Winpai contributed almost 13 crore in Q3, which is expected to grow 40 to 50% in FY27. But Tapan, what is your view when it comes to Camlin Fine Sciences? A lot of triggers working in this company, but what would you advise to investors considering the valuation and the huge run-up which we saw today?
See, the already stock has gone up, but if you see last few quarters, the stock has not been performing. The stock is almost down a lot from the top, and you can almost 63% down from all-time high. And the problem is that revenue and profitability has not been consistent overall, and that is the problem with most of these sector stock. I think the whatever updates you have given are quite encouraging, but we have to see whether it is reflected in the P&L or not. Because the problem with all these type of stock, they may spark a lot, then suddenly they'll fizzle out, and that is where you get trapped. And these stocks is not giving that type of sign that suddenly there is a turnaround. We have to see that whether turnaround is happening for next 1 or 2 quarters, their results, and better that then only you should take a position. And so from my side, we will still be avoid.
Well, thank you, Tapan. Thank you for joining us and giving us your views on the stocks that we discussed. Well, moving on to EFC, that stock has been buzzing in trade. It's up around 5%, and in the last 7 trading sessions, the stock has gained in 5 out of them. What could be the potential reason behind this up move? Let's get in Shivam with more details.
Well, yes, the stock, if we talk about the movement, of the stock, the stock has seen a positive returns in last 5 sessions out of the 7 sessions, and also the stock has gained around 18% in last 3 weeks. The stock has achieved its biggest advance since October 9 last year, and the trading volume of the stock has also tripled on intraday basis. Let's look at the company's business. So company is in business of leasing the office space and interior designing and manufacturing of furnitures. Looking at the clientele, Few of the prominent clients include Tech Mahindra, Mahindra Finance, Amazon, Car Trade, Godrej and Flipkart. Now the company was in the news recently due to the 90% occupancy rate in record time at the Sprint Business Center, which is their commercial workspace at Pune, and this property has been leased out to multinational companies and large enterprises, and the company believes that this will strengthen its premium tenant portfolio. Looking at the valuations against peer, EPCI is currently trading at 3.7x of EV by EBITDA value, and Smart Co-working Space is currently trading at 6.41 times, and WeWork is trading at 5.88. So on valuations fronts also the company is trading at lower valuations, and the company is yet to report their quarter 4 FY26 earnings. But if you look at the quarter 3 FY26 earnings, the revenue has gone up by 52% to 270 crores. The EBITDA has gone up by 20% to 112 crores, and the PAT has also seen a positive growth of 55% on YY basis.
Okay. Well, thank you, Shivam, for that extensive research coming in on EFC. Well, potential increase in occupancy ratio could be the reason behind this up move that we are seeing when it comes to this counter. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories, shaping the world.
welcome. You're watching Ask Profit, the afternoon edition. I'm Mahima Vachharjani and I'm here to get all your stock-related queries answered. For viewers who are tuning in right now, you can either give us a call or send all your WhatsApp-related queries, on the number that's flashing on your screen up there, or even give us a call. But before we start doing that, let's take a quick look as to how the markets are doing. Let's try to pull up the benchmark, the Nifty 50 as well as the Bank Nifty. The benchmark is pretty much trading in the same range as it was earlier. 140 points for downtick is what we're seeing. The Bank Nifty also hovering around that 56,300 odd levels, seeing a downtick of around 770 odd points. Let's try to pull up the Nifty 50 heat map and see if things have changed there, because we saw Pharma Pack doing fairly well in trade today. And yes, DRL still continues to be the top gainer, up 10% now as we speak, followed by Cipla, with Sun Pharma, all of these counters doing fairly well in the pharma space. But you have Geo Financial as well as counters like Apollo Hospitals and Nestle also doing fairly well. But on the flip side, Auto is seeing a knock today. M&M, Tata Motors are some of the names that are not doing well. SBI Life on the back of numbers down 2.7 odd percent, and Shriram Finance also seeing profit booking down by about 2.8 odd percent. Let's try to pull up the sectoral heat map and see as to how sectors are looking like right now. Like I said, pharma doing fairly well, almost gaining 3% in trade today. Healthcare also doing well. Media also doing well. Defense also slightly in the green. But on the flip side, auto, PSU banks seeing profit booking today. You also have the banking index, which is under pressure. So private, PSU, both together are taking that down. And Nifty Realty also seeing profit booking today. Let's quickly pull up the mid cap 150 and the small cap 250 as well, because earlier we saw that the broader markets were still holding up, but that's not the case right now. Still at least doing better than where the benchmarks go, but the both of them are down by about 0.2% each. The BSE 500 quickly, if we can see that as well, to see as to what counters are buzzing away in trade. Delta Corp is one of the names which is standing out, up 17%. A Nifty 50 stock DRL in that list as well. Praj, Oracle Finance, IFP, Piramal Pharma, some of the names that are gaining in that range of 7% each. On the flip side, you have IFL Finance, which is down 9%. Havells, yesterday we saw an uptick when the results were announced, but that cooled off in minutes. And you're seeing Ashok Leyland also seeing profit booking today. But let's start welcoming our guest for the day as well. Jatin Geria, VP Technical Research at Teji Mandi, and Avinash Korakshakar, Founder and Head of Research at Avinash Mentor Research Services, joining us now. Welcome to both of you, and very good afternoon to the both of you. Jatin, good seeing you after such a long time. Before I start taking the questions, your quick take on the benchmarks right now.
Yeah, good afternoon. See, on the Nifty, we believe that there has been a dip since the last couple of trading sessions. However, the Nifty is still holding on to the level of 24,100, which is the 40-day average. So we believe that this average is a very crucial support. Also, we have the gap area that was formed on the 15th of April during the month, acting as a support. So there are multiple supports for the Nifty, and we believe that this pullback or the dip that we have seen should be considered as a buying opportunity. See, on the upside, we are expecting levels of 24,760 in the case of Nifty, and one should place a stop loss at 24,000 if someone is taking a long position at current level. So we are expecting this dip to be bought into, and we are expecting 24,760 on the upside with a stop loss placed at 24,000.
Okay, all right. Let's start taking the queries then. The first question is coming in from Kolkata. Soumik is writing this. CMPDI is the counter that he's talking about. I'm not sure as to what this counter is. Let's try to pull that up. It says, okay, he's talking about the Coal India subsidiary, okay, and wants to know if it makes sense for him to make an entry right now in this counter or not. Avinash is talking about the recently listed counter. Would you recommend him to buy into this counter right now?
No, I think my guess is no. If the time frame is at least something like a year's perspective, then I think one can definitely look at buying. The stock is more or less close to its IPO price. I think the company's business model is very robust. But I think considering that it's a PSU, I think markets would also like to see the quarterly numbers, the kind of run rate the company performs. And for the first time, the management would be talking to the analysts, so one could get some sense on the business outlook. So possibly, yes, I think one can take a call here, but keep a time frame of at least 12 months so that one can get a reasonable risk reward.
Next one that we are talking about is Cohen's Life Sciences. Our viewer Gauri Shankar wants to know whether at this level does it make sense to make an entry from a 12 months perspective. Jatin, your view on the charts for Cohen's Life Sciences?
Yeah, see, recently the stock has witnessed a trend reversal on the daily chart. So, if someone wants to make an entry, one should keep a stop loss at 348 on the downside, and on the upside, we can expect levels of 410. I think it's a stock which it is a little bit risky considering the overall downtrend which it has been. The recent pullback seems to have some more upside, but overall, not a good stock to invest in.
Okay, all right. The next one is coming in on Amara Raja Battery. This is from Suman, who is writing us from Hyderabad. She says whether to average from a long-term perspective in Amara Raja. She's bought it at the average price of 1150 and 75 shares is what she's holding in her portfolio. Avinash, would you recommend that from a long-term perspective?
Yeah, I think despite the fact that the stock has risen significantly in the last few days, I think the company has said that it will be manufacturing fuel cells as well as lithium batteries for the electric vehicle segment. So if the investor can stay invested over the next 12 to 18 months, definitely these benefits would trickle in. And I think in the auto component space, it's a very large vendor like Exide, a large OEM and replacement market share. So yes, I think one can average, but definitely keep a time frame of 12 to 18 months.
All right. The next one that we have is coming in on Jana Small Finance Bank. Biswajit from Kolkata is holding 200 shares at the levels of 450. Says he's continued to hold this in the past 18 months. The price has bounced back from the lows to my price. From a medium-term perspective, can he continue to hold? 2 years is time horizon. Avinash, I'll stick with you for this one. Your view on Jana Small Finance Bank?
I think most of the small finance banks have been reporting good numbers. Their business outlook has been very positive. So here also, I think if the investor can hold on, I think I have not seen Gen Small Finance Q4 numbers, but definitely it looks like this quarter should be good, and I think hopefully FY27 will be a good year for most of the small finance banks. So next 12 to 15 months, definitely one can expect a decent risk reward.
Right, so that's the view coming in on Jana Small Finance Bank. And as Avinash rightly mentioned, all of these small finance banking companies have done well where numbers are concerned this quarter. Moving on to the next one, which is on Tips Music. Basically, our viewer has bought 120 shares and sitting on a loss for around 5% right now on this one. And Puneet, in fact, is asking us from Bengaluru this question. Wants to know from a short-term perspective whether to stay, continue to hold or exit. Jatin, your view on the charts on this one?
Yeah, see, Tips Music has overcome its multiple resistance zone of 600, 610, and the up move has been accompanied with a very large volume. So I think there are a new fresh buyers coming in at current levels, and I am expecting levels of 690 to even 700 on the upside from a short-term perspective. So suggestion would be to hold.
Okay, all right. So that's the view coming in on Tips Music. We've got our first caller for this edition of Ask Profit. I think Lalita is calling us from Hyderabad. Lalita, very good afternoon to you. What's your query about?
Yeah, good afternoon, ma'am. So I'm having Info 8 50 shares long back at the 1400 price.
Okay.
So what is the short term and long term view on this? Is there any way to average or hold?
Lalita, can you help me understand whether you saw the charts while buying it or did you see the fundamentals of the company?
Yes, ma'am. That time it was high. It's almost a year back.
No, I'm saying, did you see the charts while buying it?
Yes, ma'am.
Okay, all right. Then I'll take this up with Jatin. Jatin, your view on Info Edge?
Yeah, see, overall, we have been a little cautious on the IT space and looking at the charts of Naukri or Info Edge, we believe that the downward trend is still intact. Yes, there was a pullback towards 1080, 1100 odd levels, but the up move is a little fragile. The structure is not very encouraging. So I would suggest to move out of Info Edge and move out to some other sectors rather than IT.
Okay, all right. The next one that we have is on Kalyan Jewellers. This is from Rajiv, who's writing us from Kerala, asking about Kalyan Jewellers that he's bought at 438 levels. Should he continue to hold or sell? Not sure if he's a long-term investor or a short-term investor, but Avinash, your view overall on Kalyan Jewellers?
I think he should continue to hold. I think gold jewelry business has been growing very rapidly, not only for Kalyan but the entire space. And I think, despite the fact that gold prices have gone up, demand has not come down. And hopefully, April to June quarter should be also a good quarter. So I think if he can hold on for the next say 12 to 18 months, I think this stock can definitely give him a decent risk reward.
Okay, all right. The next, I think we've got a caller, Narendra. Narendra is calling us from Hyderabad. Very good afternoon to you, Narendra. Go ahead and ask your question.
Yeah, good afternoon, madam, and good afternoon, panel members. Regarding, I have Asian Paints 30 quantities at the rate of 2,500. This Asian Paints stock is not moving much, so I wanted to sell or hold. If I sell, I can buy like Azad Engineering or Dr. Reddy.
Okay, got your question, Narendra, and to your point with regards to where Asian Paints is not moving, I think it's the effect that we've been seeing because of the West Asia conflict with crude prices rising. All of these paint companies get impacted, and that's why we're seeing the pressure on the counter. But I'll take this up with Avinash. Avinash, your view whether he should shift to something like I think he mentioned two stocks, Dr. Reddy's, and there was one more. Narendra, if you're there online, what was the other one? Asian Paints is what he's already holding, but I think he said one more stock. I think Engineers India is what he mentioned. Avinash, any view?
Yeah, I think he mentioned Mahima Azad Engineering.
Azad Engineering, yes, correct.
That is definitely a promising bet. But again, I would suggest that, if he does exit Asian Paints, I think he needs to give a 2-year view here because, the stock has run up significantly. Valuations are fair to expensive. So I think I suggest, it's better that he buys into in a staggered way and takes a 2-year view here. So only then he could possibly get a very good significant risk reward for Azad.
Okay, all right. The next one that we have is from Nagarajan, who's writing from Chennai, asking about IRDA, whether he can continue to hold from a slightly short-term perspective is what he's asking. Jatin, your view on the charts for IRDA?
Yeah, so IRDA, we believe that there is some sort of a trend reversal on the daily charts. If he wants to continue to hold, then 128 is the stop loss level, and on the upside, the next resistance is coming in at 148, 149 level. So he can continue to hold with a 128 rupees stop loss.
That we have is on GMDC. Nand Kishore is asking this question. He says that he's a long-term investor, wants to stay invested into this counter for the next 2 years. His purchase price is 450 and 3,000 shares is what he's bought. So sitting on good, in fact, great profits. Avinash is sitting on profits of over 7 lakh rupees. What would you recommend him to do right now? Book partial profits?
Yeah, I think he's got a large quantity. I think at least if he can book out 1,000 quantity and hold the rest, because this company is a very large player in the lignite segment, and again it's announced plans that it would be also getting into rare earth. So that definitely long-term prospects are good, but I think with such a good profit, it always makes sense to actually encash some of the gains. So partly profit booking can be advisable, and the rest of the quantity can be held on for the next 12 to 18 months.
Okay, all right. We've got our next caller. Anjali is calling us. Anjali, very good afternoon to you. What's your query about?
Yeah, good afternoon, ma'am, and good afternoon, all of you. I'm having NDTV Medical Corporation of 1,000 shares at 550 average, madam.
Okay.
So, what is the long-term and short-term view on this, and shall I average or exit?
Okay. Got your question, Anjali. I see that you're sitting on a loss of around 1.4 lakh rupees. Jatin, any view on Indraprastha Medical Corporation, considering that she's sitting on a huge loss? Can she exit, continue to hold? What's the view like?
Yeah, see, the recent pullback was unable to surpass its previous swing high. So technically, it's a weak stock. I would suggest to move out of this stock as soon as possible, because on the downside, even 360 is possible in the short term. So I suggest to move out of Indraprastha Medical Corporation.
Okay, all right. The next one that we have is on NTPC. Ravi from Vijayawada is holding 400 odd shares at the levels of 405. Wants to know the 1 to 2 month target on this one. Jatin, your view on the charts?
Sorry, the stock name?
NTPC is the counter that we are talking about. He's sitting on a loss of around 4,000 rupees right now.
Yeah, so NTPC has been in a short-term uptrend. Now the next crucial resistance is placed at 433, which was its previous all-time high. So we can continue to hold onto NTPC with a stop loss placed at 391. So 390 should be the stop loss level and 433 should be the target area.
KPI Green is the other one that Suresh from Kerala wants to know about. Wants to know if he can go ahead and buy this at the current market price from a long-term perspective. Avinash, your view on this one?
Yeah, I think KPI Green is a very well-established player, in the power generation place, specifically from solar power, and has a very strong order book. I think numbers for quarter 4 are also expected to be pretty strong. So I think looking at the next 12 months, I think one can definitely, start buying here, but I think one should buy it in a staggered manner.
The next one that we have is on Atul Limited. Usha from Bengaluru is holding 50 shares at the levels of 7397. She says she bought it in July 25. From a 6 to 12 months perspective, can she continue to hold, Jatin?
Yes, definitely she can continue to hold because technically it has formed a higher low on the weekly chart. So that indicates the uptrend is still intact. On the upside, I believe 77, 82, even 7900 is possible over a period of 6 to 8 months. So continue to hold. On the downside, the support level is placed at 6300. So 6300 should be the level as a stop loss, and on the upside 7800 should be the target area.
Okay. The next one that we have is from Anil Singh, who's writing us and asking about Union Bank. He says whether current market price is the right price to make an entry from a long-term perspective. And Avinash, if you'd had the chance to look at the numbers, I think the street was expecting a better performance, and the numbers were on a disappointing front, and that's why we've seen that downtick coming in the counter once the numbers were announced. Overall, your view whether it makes sense to make an entry right now, considering the fundamentals?
No, I think it's better to little stay away because as of now, numbers have been quite disappointing compared to other PSU banks. So my sense is, I think today we have the conference call today, and I think some comments from the management on the growth commentary could be disclosed. So it's better to wait for some more time. I would say that the stock could correct further, and at that point of time, maybe some buying could be advisable. But I think it's better to take a fresh review once the conference call update is available.
All right, okay, so that's the view coming on Union Bank. But viewers, it's time for our rapid fire round. Avinash as well as Jatin, you both know the drill. Try to keep your answers as short as possible, and I'll try to throw as many questions as possible. The first one is on Suzlon. Prashant from Hyderabad has bought 22,000 shares at the levels of 53 rupees. Hold or sell from a short-term perspective. Jatin, your view?
Continue to hold for a target of 57 with a stop loss placed at 52.
Okay, E2E Networks from a long-term perspective, can I take a fresh entry? Any view on this one, Avinash?
Yeah, I think looking at the next 1 to 2 years, one could definitely start buying in an SIP mode.
Okay, long-term perspective on trend, considering today's dip, is this the right time to buy more, Avinash?
Yeah, again from a long-term perspective, I think one can accumulate.
Okay, the next one that we have is coming in on IRDA, whether it makes sense to make an entry into right now into this counter from a long-term perspective. Avinash, your view?
Yeah, I think definitely one can look at it from a long-term angle.
Okay, Aisha Motors bought 15 shares at the levels of 7247 last week. What is the short-term target and support and resistance that you're seeing on this, Jatin?
See, Aisha Motors, I believe that there is a possibility for the stock to move towards 7,500 if it holds on to 6980, that is 7,000. So yes, he can make an entry with a stop loss place at 7,000 for a target of 7,500.
CG Power 300 shares bought at the levels of 96. Whether to continue to hold for some more time, Jatin, your view on the charts?
Yes, continue to hold. The trend is well and truly positive. On the upside, we are expecting 900 or the stop loss should be placed at 810.
Okay, Bajaj Finance, from a short-term perspective, what is the target that you're seeing on the charts, Jatin?
Bajaj Finance 975 is the target area, and the support is placed at 896. So 890 should be placed as a stop loss, and 975 is the target area.
Okay, KRN Heat Exchanger, is this a good time to make an entry into this counter from a long-term perspective? Avinash, any view?
No, I think one can hold on. Fresh buying not advisable.
Praj Industries and Balrampur Chini, both of them buzzing on the back of news flow, of course, Avinash, but good time to make an entry into sugar stocks right now?
Yeah, I think sugar stocks could be purchased, but I think Praj, which is a large manufacturer of ethanol equipment, can also be accumulated.
Okay, BEL bought at the levels of 456. Continue to hold at this juncture or sell? Jatin, on the charts?
Continue to hold. We believe that there is a scope for the stock to move towards 500, 510. Stop loss should be placed at 420.
Gaudium IVF, is this the right time to make a purchase and entry into this counter? A lot of investor interest coming in this one. Avinash, your view?
No, I think it's a hold from our side. I think fresh buying advisable only on lower levels.
Okay, Tata Steel 150 shares bought at an average price of 138. Can I buy more at the current level from a slightly short-term perspective? Jatin, your view on the charts?
A suggestion would be to buy on dip towards 205, that is the support area, and on the upside 220, 222 is the target area. So buy on dip towards 205.
Okay, GE Shipping, is this a good time to make an entry from a 3-year time horizon? Avinash, your view?
I think it's a hold, not to buy fresh.
Raymond Limited, I'm holding 110 shares at the price of 380. Raghavendra from Meerut wants to know from a long-term perspective, can you continue to hold? Avinash?
Yeah, definitely one should hold on, maybe buy on dips.
Bank of Maharashtra, right time to enter and what is the potential upside in the short-term perspective is what our viewer is asking. Jatin, your view on the charts?
Maharashtra Bank has run up quite a lot in the recent past. I would suggest to wait for a dip towards 75 where we have the support. So 75, buy on dip at 75, on the upside 82 to 85 is the target area.
Okay, all right. So that's the perspective coming in, but completely out of time on this, rapid fire round. Jatin as well as Avinash, thank you so much for taking out the time and helping us answer all those stock related queries. In fact, viewers, combining the morning show and the afternoon show, we were able to answer 101 queries today. So thank you so much for asking all those queries to us. With that, completely out of time on this edition of Ask Profit, but India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome, you're watching India Market Close. Markets unable to really lift above that 200-point downtick on the Nifty, pretty much where we started in the morning. A little bit of range-bound trade, but really unable to lift. 24,200 and sustaining above it is also clearly a problem, and the intraday chart will tell you the story. Even the advanced decline has sort of narrowed towards the negative, but it is more of a Nifty problem perhaps than the broader markets. In this middling range, Alex, and bit geopolitical, bit profit booking, and maybe partly also because results that have come out between today and yesterday are not all that exciting, apart from a few exceptions.
Yeah, absolutely. You hit the nail on the head. Actually, if we have the Nifty next 50 intraday chart, then pull that up, but also pull up the broader markets, right? So that is actually showcasing that we're not too far from the low point of the day. The next 50 is down 1.2%. And this is actually something that outperformed yesterday. So even more so that profit taking coming into the play here. Pull up the mid cap and the small cap index. We're not too far away from the low point of the day, down about 0.4% here. And for the small cap index, about 0.4% here. So pull up the advanced decline ratio, because that would have worsened. There you go. So there was a wide pocket here, and we're widening to perhaps the high point of the day at the end now in the last hour.
Yeah, just the sectoral heat map will tell you that the story is all about defensives. A huge defensive play in the market today. Look at pharma, healthcare, and there's no real trigger for the pharma stocks to rally the way they are, including a Dr. Reddy's, which is showing a sharp uptick, simply with the hope of favorable policies on GLP-1 coming in. That's what you're seeing. Defense is doing okay, energy doing okay, PSU banks are sulking, auto stocks are sulking, consumer durables, everything that can be hit by a deepening geopolitical crisis. That entire story is playing out, and the biggest example is in the Nifty reality. Let's pull up the Nifty heat map as well, and just show you where that story sort of concentrates when it comes to the top 50 stocks. Look at Mahindra and Mahindra. Trend actually was pretty decent numbers, but profit booking coming in there, and we've been talking about this since the morning, that the kind of growth we've seen is priced in already as per valuations, and valuations are not that are not really that attractive right now, perhaps for trend. SBI Life also was a decent set of numbers and profit booking there, but it's all about pharma, isn't it? Look at DRL, 10.5%, Cipla, 5.5% over there.
Yeah, absolutely. The point that you were making on public sector banks and the fact that they're underperforming, Union Bank was where the crack came. So pull up the intraday chart for Union Bank. I'm sure we'll talk about this in some more detail, but the fact is that the core income for this bank has actually decelerated by 1% in the quarter gone by, and what we were anticipating to play out for public sector banks, the treasury hit that they've taken, the double whammy, both on the currency side as well as the fact that yields in the month of March went up very sharply. And remember, these guys have a pretty large quantum of government bonds on their books. So they would have had to take that impact. So that's again hit the bottom line. So the entire pack would be doing badly, but 8% for Union Bank is the big culprit here. Pull up the constituents of the PSU banking pact just so that we can complete that picture. There you go. So Can Bank losing about 3%. Bank of Maharashtra, which was popping earlier on, is losing a bit of ground. So some elements of profit taking, as you pointed out, and some elements of underperformance on earnings.
You know, very strong reactions either way, positive or negative on earnings. And just to sum up what's been happening in the markets, Nifty has declined for a second consecutive session, but holding on to crucial support levels is key at 24,200, so around that range. Private banks, HDFC and ICICI are contributing nearly half of the losses in trade. Pharma is the top sectoral gainer and has been an underperformer for the month. So the gains are showing in that context. Dr. Reddy has jumped more than 11%, biggest move since September 2020 on expectations of a semaglutide approval in Canada. Nifty support levels at 24,200, 24,100. The zone between 24,100 and 24,200 is the demand zone. If the index slips here, it may attract fresh buyers. Resistance is at 24,300, 24,400. Nifty bank is, when we talk about the Nifty bank, a break below the 50 DMA has already taken place. Support seen around 56,000, resistance seen around 56,800 to 57,000. But the important thing to also track is crude, right? Let's take a look at what's happening at crude, 103.7. This is what is worrying. All things considered, you might have fantastic results, but 103.7 is just too rich for our blood from the Indian equity perspective or the Indian economy perspective, and that's becoming a continuous bugbear. Just want to put into perspective what HSBC has also said today, the Asia Equity Strategy by Harold van der Linde. They've downgraded India to underweight from neutral and say a potential inflation and demand pressure will likely impact earnings growth. They're concerned about the durability of the ongoing earnings recovery. They expect consensus forecast to be revised down in the coming months from current expectations of 16% year-on-year for 2026. They say valuations have corrected materially from their peak and they will appear elevated as earnings downgrades feed through India. So that's why, to them, India looks less attractive than its Northeast Asian peers in the current macro environment. So that perspective is also important. Akshay P. Bhagwat with us this afternoon. He's Senior VP GM Financial. Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities with us. Very good afternoon to both of you. Akshay, I'm going to come to you first on the charts. Akshay, can you hear me?
Yeah.
All right. Let's get the Nifty outlook first.
Good afternoon, Tamanna. See, for Nifty, there's a slight weakness in intraday, and today is the expiry for the Sensex weekly expiry. So there is some bit of selling pressure since opening trades. There can be a slight knee-jerk reaction. The selling pressure can continue till Friday, where we can possibly see the support of 24,000 coming into play for Nifty. So it's just a temporary jerk. The broader trend still remains strong. It's a buy on dips market. 24,000 is a good support where you can consider reinitiating your long bets.
So therefore, let me follow that through and ask you about individual strategies, because as we've been highlighting, there are pockets of strength and there are pockets of concerted weakness, if you can call it that.
Yes. So if you look at the broader market, that has held on pretty strong, and clearly there is sectoral shift. We have seen FMCG and the pharma space coming back with a bang after a very long time in the markets in the last 1 or 2 weeks. Especially the pharma pack has come out very strongly today. And if you're looking at opportunities in the pharma space, then you can look at Glenmark Pharma, where there is a potential breakout. It is almost at its all-time high levels. The breakout has been seen today. The levels of 2250. Volumes are pretty significant on this breakout, and this breakout promises you a target of 2400 plus from a positional perspective, with a stop loss below 2250. Also, there are a lot of other names in pharma. Divi's Lab is also a good setup on technical charts, which does give you a target of around 6700 if held from a positional perspective, with a stop loss below 6250. So right now, if you are looking at buying opportunities, pharma is the space to be in. For short short-term selling opportunities, one can look at banking, but again, you have to be very selective. Probably private bankings can take a temporary hit in the next coming trading session.
Not just private banking, the way that public sector banks are getting battered today, particularly Union Bank of India. Sunny, I understand that you can't comment on one specific public sector bank, but I'm going to ask you about another one. Union Bank of India, 8.2% down, and core income has not grown. This seems to be a problem, and not just that, the hit on treasury as well.
Good noon, Alex. As you rightly pointed out, core income has not grown. In fact, the deposit growth is hardly 2.5%. And on the top of that, we have seen slippages has increased slightly in this quarter. So that's a cause of worry for a Union Bank. I think in a current scenario where there is other banks are reporting 13 to 15% kind of credit growth, on that reporting a kind of flat or no growth on core income side and a deterioration on slippages. So I think that's a cause of worry. So would like to go into more details. Couldn't attend the con call today. Maybe once we are through the minute details, we will get to know what's ahead for Union Bank in FY27. But as of now, it seems a disappointment on quarterly number fronts.
Extrapolate this to the rest of the banking system though, and particularly the public sector banks. Is it likely that they're going to have a tough time in Q4?
Don't think so, because on other hand, we have seen a very strong set of numbers from Bank of Maharashtra also. So that's not the case. I think we should not paint the entire sector just because the Union Bank has reported a bad set of numbers. So would like to wait for other banks to declare the numbers and then take a call on maybe stock specific approach is the right way within a PSU banking space.
Okay, just taking a look at some of the winners today, and Sunny, I want to come to you on pharma. Is there any fundamental case right now for the kind of push that we're seeing on pharma, or is it a sector rotation that you're seeing playing out?
I think more of a sector rotation. I think as we have seen during the last 2-3 week, markets have recovered, and specifically I think GLP-1 is something which is under radar. So we have seen yesterday one source has tied up with one US based formulation player for supply of GLP-1 drug, and that is something that has led to an excitement again in the pharma space, and hence we have seen even Dr. Reddy moving up, or for that matter Shelly, which is likely to be one of the key pen supplier for this GLP drug, that is under focus since last 2-3 days. So I think few deals or few positive news flow in one or two company has led to the momentum in the pharma space as we speak.
Okay, all right. Let's talk about the stock of the day at this point. And, one which is in focus is definitely GE Vernova. Let me go across to Parth for more on that, talking about why it is the stock of the day. Parth, what are you gathering?
Thanks a lot, Tamanna. So GE Vernova, as you rightly said, is the stock of the day today, and there's one interesting thing that they have a parent company called GE Vernova, the same name, which is listed in the New York Stock Exchange. Now, after GE Vernova, the parent company, posted its quarterly earnings yesterday in the New York Stock Exchange, the stock surged by 13%. Now, let's have a look at what the company said. The management revised their full-year margin guidance in the range of 12 to 14%. They also saw strength in their segments of gas turbine as well as power transmission. Also, their global order backlog stands at around $163 billion, and they are very strong in the ongoing power demand globally. So the global outlook for the parent company is really strong. Now let's have a look at what is the outlook going on in the Indian market. As we all know that the Indian renewables are driving the transmission grid capex in the country. We have seen like in 2025, India added 38 gigawatts worth of solar power and 6.3 gigawatts worth of wind power in just the 2025 year. Also, the National Electricity Policy, which was recently drafted by the Government of India, they are expecting a peak power demand of 446 gigawatts by the year 2030. Now, all of this peak power demand will be needed to transmit it across the entire country, and this is where the long distance HVDC transmission comes in, which is is the core speciality of GE Vernova, and that is the segment in which the company is seeing its demand in. Now let's have a look at the Q3 financial performance of the company. Their order intake hit around 3,000 crores, growing at 41% year on year. And not just order intake, their revenues were up by 58% year on year, reaching 1,700 crores. Their EBITDA margins were at 26.7% versus just 17% in the same quarter previous year, and their PAT also saw a growth of 50% year on year. Also, moving on to their orders and capacity outlook, in the same India entity, their order backlog stands at 14,400 crores. Also, the management is expecting the FY26 margins to be in the higher end of the mid-20s going forward. The Adani HVDC order which the company secured recently, the commercial milestone of that order is pending currently, but the order has been secured. Also, the order backlog is very nicely de-risked, with the state utility exposure being below 2%. So they are not dependent on the state utility orders. Also, the management has reaffirmed their capex guidance of 1,000 crores, which they have extended up till FY28 as well. There is also one interesting thing about their exports as well. So exports currently are around 24 to 27% of their total order backlog. The management has said that the export volumes give them superior pricing and margins. Also, a large related party export order is what the company is expecting in the second half of FY27. So we have three things that are going really well for GE Vernova. The first one is the parent company has been performing really well. The second one is that the Indian industry has been growing really fast, and the third one is that the export orders which the management is expecting, that will drive the growth going forward. So this is why this GE Vernova is in focus today.
Got it. All right, Parth, thanks so much for that comprehensive view. Let me go across to our experts on this. And Sunny, my colleague Parth has pretty much summed it up at this stage, but I'm still going to ask you, in this power transformation story that we're seeing, and it's a pretty powerful theme that is being played into. Your power equipment manufacturers have a strong role to play. The only question is on valuations. How does this one stack up?
Yeah, definitely. I think Parth has very well covered all the key fundamental growth aspect for GE Vernova. And in fact, I was about to come to that point of valuation. So we have seen a very strong up move in GE Vernova. I think in Jan, the stock was trading closer to 2,500, and now we have added closer to almost, the stock has doubled in the span of 3-4 months. And now the stock is trading north of 100 times price to earning multiple. So I think a word of caution, maybe buy on dip is a right strategy to ride on this transmission side. What we feel is that relatively on valuation front, Polycab wires and cables is the one segment which is relatively well placed, at least in terms of valuation, and where there is a decent growth visibility also. So I would maybe at this point of time, I think I would like to bet my money on wires and cables if I have to ride this power transmission or power ancillary as a segment.
Quickly on the charts then, Akshay, I want to ask about this particular counter, GVTND. It's already cooled off from the peak of the day. If you're holding, what levels do you watch on the downside? If you've not bought, should you buy?
So I believe, although it would look overbought in the charts, the momentum is extremely strong. The volumes are good. And I believe 4,800 somewhere is on the charts from short-term perspective, where you can consider taking some profits off the table. So I think some more momentum is left. The immediate support one can look forward to is 4,300. You can buy around 4,400 for possible targets of 4,800.
Okay, just going across to Mahima for another important story. India's rice exports fell 7.5% in 2025-26, hit by disruptions from the West Asia conflict. Shipments to key Middle East markets led by Iran slowed due to payment delays and shipping issues. What are the details? Let me go across to Mahima before we speak with Rajiv Setia of Chamanlal Setia Exports. Mahima, what are we learning?
Right, Tamanna. So as you rightly mentioned, we've seen a dip of around 7.5% in terms of rice exports in 25-26 so far, and overall exports have, seen this dip on account of contraction in shipments to major destinations. This is as per the Ministry of Commerce data that we've gotten. The exports in March itself have seen a decline of around 15.3%, and shipments to Middle East regions, including Iran, UAE, Saudi Arabia, and Oman, have been impacted. Iran is one of the biggest rice basmati rice export destination for India. I think the more concerning part is that overall shipments are witnessing growing stress in terms of order flow. Payment cycles is something that is getting impacted, and ship schedules due to prevailing instability are also getting hampered. Plus, on top of that, importers are now saying and have kind of conveyed their inability to honor existing commitments and remit payments to India. So it's not just about your overall exports going down, but payments are also getting stuck to a major extent. Now, this as compared to how things have fared in 2024 and 2025, overall 2024 and 2025 we had exported around 20.1 million tons of rice and produced around 150 million tons of rice, and overall average yields are also improved to 2.72 tons per hectare since the cycle began, and this is from 2014-15 to almost 3.2 tons per hectare in 2024 and 25. So overall, I think yields is also going to get impacted, plus exports being impacted will overall see a dampening and impact in a lot of these rice exporter names. So that's the overall perspective of what's happening in the rice space.
No, it's bound to have had an impact. The question is to what extent, and are there alternative routes or export destinations now identified? Rajiv Setia, Joint Managing Director and CFO, Chamanlal Setia Exports, joining us now on the phone line. Mr. Setia, very good afternoon to you. Can you just give us some picture of what is the kind of hit on exports you may have faced in the last few weeks because of the ongoing crisis in the Strait of Hormuz essentially being blocked?
Admittedly, the hit happened for everyone from the Middle East side, but now the situation is relatively improving. The rise through Red Sea is no problem for Egypt, for Lebanon, for Jordan. It's smoothly going. And as far as GCC countries are concerned, necessity is the mother of invention. The rice is going via Jeddah. From Jeddah, it is or going directly to Khor Futan or Fujairah port. From there, it is going to Abu Dhabi. From Abu Dhabi, it is being shipped through vessels to other part of GCC like Bahrain or Kuwait or other countries, even Saudi. Saudi have direct entry through Jeddah, and Oman is no problem. Oman shipment is being made. As regard Iran is concerned, prior to this current blockage by USA, 5-6 ships had gone. Now it is almost blocked. I've heard maybe they are trying to send one ship, but
Mr. Setia, so that's interesting. And you said necessity is the mother of all invention, and so alternative routes are being found. The question is, are these routes taking significantly longer? So if you can describe the supply chain before or the time taken for transport before the conflict, and what is it doing right now, and has it changed the way that you operate?
You see, we can't compare it with the regular position which was happening prior to war. That kind of situation is far away now. But it's
that,
time.
Mr. Setia, I realize that. Let me clarify, sir. Mr. Setia, let me clarify. Let me clarify. I understand that you cannot compare the two scenarios, but your investors will now understand how different this scenario is from that if you describe how much time it was taking for you to ship your product from here to the final markets and how much time you're taking right now.
Earlier, it was just 3 days to Jabal Ali and other ports also maximum a week time. Now it is 15, 20, 25, it matters. It's long time.
Is demand also getting hit, Mr. Setia? And I'm wondering
Demand is there. There is right now I'm sitting in this exhibition, Food and Hospitality in Singapore. I am over there. And from Afghanistan, so many people have come to me for rice. But Afghanistan is totally blocked because the rice has to go to Bandar Abbas first in Iran. From there it can move. So demand wise, because the people are going after essentials, not luxuries. This happens always in wartime. So demand is demand is there. Even the high ocean freight prices are being absorbed.
So two things, if you can help us understand, Mr. Setia, your additional costs of rerouting the rice, are you able to pass it on to your customers?
Yeah, we are able to pass on. In some places we are sharing, and thank God the hand holding is by relief to ECGC.
Sorry, hand holding by?
Relief set up through ECGC.
Okay, so you're getting some governmental relief as well.
Yeah.
Second,
Yes.
are you looking at alternative destinations right now? Because frankly, we don't know how long this is going to last. Initially, it seemed like it would be for a shorter period of time. We're now entering actually the second month.
That's why I'm here in Singapore. I'm looking to Far East countries also. Thereafter, we are planning to go to Africa. We are trying because and as well as domestic market, I'm trying to enter into.
Sir, Mr. Setia, as things stand, so I'm just trying to identify what the implications for financials are. And I understand completely if you're not able to exactly hit the nail on the head and tell us exact details, but just directionally, the sense that we're getting is that demand is intact, but the time taken to ship your product and get your deals concluded is taking longer. So would it mean, therefore, that the first quarter will see an impact in terms of booking of revenue, and that might get pushed over into the second quarter? Is that the right way to read this?
It is a little premature stage to comment anything. Let's see the way now at least cargo is going. Delay is there. 15-20 days delay is there, but continuity is being maintained.
But what is the implication, sir, Mr. Setia, on your financials on account of those delays, is what I'm trying to understand.
My company is cash rich. I have no problem at all.
Okay, I understand.
I have not borrowed.
I understand. All right.
Personally, as a company, no problem.
I understand. And okay, one can only hope that this is resolved quickly, and wish you all the best, sir. Mr. Setia, thank you so much for joining us and for...
We all should wish the war to end.
I absolutely accept and agree with that sentiment. Thank you so much for joining us and for taking the time.
Okay. So I think that's the part of it which I really liked is that, when Mr. Setia first of all took our call, spoke about what he's doing.
Yeah.
He's saying that's why I'm sitting in Singapore.
Yeah.
I'm trying to look for other destinations for Indian basmati rice.
But the inference is absolutely there. He didn't say it out up front, but my understanding is obviously, he says that he's a cash-rich company and he can absorb it. But there is going to be an implication. If there is a booking of revenue that was taking place and a delivery of product that was taking place in 2 and 3 days, and that is now taking 15 days to take place, and if there is a higher cost that is partially being shared by the company and partially being shared...
Yeah, but there is an export credit guarantee scheme as well. So then that cushion is coming.
Some leeway is there.
All right, so Amit Sarkar joining in for What's Heard on the Street, that segment which you should not miss every afternoon on NDTV Profit. Samit, go ahead.
Multiple stocks that dealers have highlighted. Firstly, it's Walchand Nagar Industries. Now, there are buy flows on the large HNI desk is what dealers have indicated, and they are expecting some positive news flow regarding a fundraise that could come into the company. So, keep an eye out for this counter. For Sudarshan Chemical, there are buy flows on PMS and HNI desk from long-term perspective, specifically is what dealers have highlighted. For Mankind Pharma, the buzz on the street is that the Q4 numbers are expected to be quite strong, specifically on the margin front. Now, there is a overall buying interest that we are seeing in the pharma names, but for Mankind Pharma, this is what dealers have said. For Axis Bank and AU Small Finance Bank, there are buy flows on institutional desk. Delivery volumes are expected to be on the higher side. And IFL Finance, that stock has collapsed nearly 10% in trade. Now the buzz on the street is there could be some penalty that could be imposed on the company, and that is one of the concern, and hence the stock is down nearly 10%. And Geo Finance was one stock that we did indicate yesterday, where we did say that there are buy flows on HNI desk and dealers are considering it as a value buy. The stock is up nearly 4.5% in trade today.
Got it. Okay. All right. So quite a bit to talk about. Akshay, a couple of stocks stand out. IFL Finance is one of them, and there is a possibly a fundamental reason for why the stock is getting impacted. But purely on the charts, considering that there has been a bit of a capitulation, would you book out right now? You're on mute, Akshay.
If you look at the price charts on the weekly price front, 415 is a very important support, especially if you're looking for the next till next week. If this support defends, you can expect some kind of a relief in the stock. So the suggestion is, if you're holding the stock, stop losses below 415 are a must. And considering the fall of around 9-10% today, I would not advise to go and buy the stock near support. Let it settle down, let it show some bounce back intent around the support zone, then we will review whether to buy or not.
All right, that's IFL Finance for you, but so much buzzing this afternoon. I actually want to come to you, Sunny, on Trent. And the way Trent sort of cooled off was a decent set of numbers. What did you make of the numbers, first of all, and do you think that there is a value buying opportunity in Trent right now?
I think numbers were pretty much in line with expectation. I think some cost saving initiative by the company led to a better margin this quarter. And one has to keep in mind that on Zudio, they have rapidly scaled up their operations in the Q4, so close to 109 stores they have added. But if I look at next 2 years number, maybe I think the sales and PAT growth trajectory should cool down to maybe 18 to 20% CAGR. And that is the reason on the top of that, when the stock is trading at 70 times price to earning multiple, we have seen that reaction in the market. So I think stock is trading closer to fair value as we speak. Maybe 4,400, 4,300 is a fair value band. If you look at the valuation and kind of 20% growth, which company is likely to deliver over next 2 years. So would like to remain neutral. I mean, if you want to ride on retail story, I think value retail is the one pack which is growing at a faster clip. So that segment I feel should report a better set of numbers this quarter.
Okay. All right. Let me go across now to what is the sector of the day. The pharma pack saw a volatile April, no doubt, initially underperforming the broader markets before staging a sharp comeback. But today, it is extremely exciting. 2.5% up for the pharma pack. And it's not just the entire index. Look at individual stocks. So Dr. Reddy is completely zooming. Varsha joining in to tell us why. Varsha, what is the sudden excitement? Is this more a defensive play? What's going on in the pharma sector that's got investors excited?
So yeah, Tamanna, so we are seeing a good buying today. This is after the underperformance that overall sector has given in April. So just for the benefit of viewers, if I want to talk about Nifty 50 has given almost 7% returns in April. But if you see Nifty Pharma has given only 4% returns versus Nifty Auto at 7%. Look at Nifty Bank, 10% of returns to investors. So overall, we have seen the underperformance that Nifty Pharma has given in April. But I mean, what were the laggers? Why pharma lagged in April? One of the reasons was there was no positive surprise as such. Even US pricing pressure narrative was resurfaced, and April, if I were to talk about, saw profit booking at higher valuation because 2025 was I would say a very strong year for pharma. So we saw that profit booking in April. Also this money rotated into banks, PSUs, infra and capital goods, and the pharma stayed out of flavor during this rotation phase. But what changed today? Now, one is of course the short covering after recent weakness that we are seeing, and the money is rotating into pharma as defensive hedge during market volatility. Just for if you see Piramal Pharma, Cipla, whole host of pharma pack is actually buzzing. Now, talking about the individual stocks, starting with Dr. Reddy's, if you see, is up 6 to 7% among the top contributors to Nifty Pharma. Analysts are pegging that maybe the semaglutide approval in Canada is expected in May, and Dr. Reddy will get the first mover advantage, and hence why you're seeing that Dr. Reddy said almost 7%. Talking about, Aurobindo Pharma, the 800 crore buyback, if you see, is, it has opened today, and one of the reasons why Aurobindo is in focus. Talking about Cipla, again, Cipla has got an approval for albuterol sulfate inhalation aerosol, which has a good opportunity when it comes to US. This treats a bronchospasm, this drug, and it has a market cap of, or rather market is valued at around 1.5 billion US dollar. Also, the spillover is also expected in other stocks. If you see, Lupin Piramal Pharma has been gaining because buying is reflecting, or rather optimism, I would say. So whole host of pharma is actually buzzing. We are seeing the, people buying into this defensive sector.
Got it. Okay. All right. Thanks so much for that, Varsha, and a pretty comprehensive take there on the pharmaceutical space. We've got Vishal Manchanda, Senior Vice President, Institutional Research at Systematic Shares and Stocks, to talk about the sector. Vishal, thanks so much for taking the time. And interesting, today, of course, the strength that you're seeing in the pack as a whole is being viewed as more of a defensive bent that the market seems to be taking. But what did you make of some of the other fundamental factors that Varsha highlighted?
Yeah, so I think the best performer today has been Dr. Reddy's. I think one trigger that Varsha pointed out there is we have an approval pending, a large approval pending next month. So they have a target action date for semaglutide approval in Canada. I think ahead of that, people seem to be optimistic around a successful approval. But I would like to caution, like, these approvals largely remain unpredictable. They might come through and they might not come through, and it can get, timelines can get stretched even beyond the anticipated timelines.
So Vishal, let's look at both scenarios, right? The might come through and the might not come through scenario. The might come through scenario, I think we're seeing on the screen. It's getting priced in. What happens in the might not come through scenario, and is that a possibility?
Yeah, so I think if it doesn't come through, the stock might trade at subdued levels. It might retrace the older levels, and then people will wait for the next trigger in the stock. Maybe the approval can get delayed another 6 months, and then they also have other important approvals coming through. So they have one probable approval coming in December that could also be large for Dr. Reddy's. So I think, but these are large.
Apart from the stock retracement, and definitely yes, that will happen. I mean, in terms of how crucial, how make or break is this for Dr. Reddy's, or how crucial is this for Dr. Reddy's, and which companies getting this approval becomes very, very crucial for them?
So I think this product is imminently very important for Dr. Reddy's because they are losing a very large product in the US, and they need to kind of replace part of it to ensure that their earnings correction is not very steep from where it is today. So if semaglutide comes through, we'll still see an earning correction, but then it will be like a less steeper, and probably there will be optimism because once semaglutide is through, then people will have their eyes on the other large approval that's expected in December. So probably sentimentally, it's important for the approval to come through right away.
And that explains the near 10% rise in Dr. Reddy's, Vishal. But trying to gauge and understand why a Piramal Pharma would be rising 7%, why a Cipla might be rising 6%. Cipla, I guess, to a certain extent, some might argue that it was beaten down and it's trying to recover a little bit of ground because sentiment might be improving. Glenmark is up close to 4%. Loris is up 3%. Is this purely sentiment driven?
So I don't think it's sentiment driven, but probably there could be some sector rotation that would be happening, and probably pharma being perceived as defensive. There is higher money that's flowing into the sector. From a Cipla standpoint, it probably was the cheapest among the large cap names, and then there's a positive news flow on that name. They have an approval in the US, which can be pretty decent for them. Maybe $50 to $100 million on top line and a high value of approval. So that has lifted Cipla. On Glenmark, probably there's the earning momentum is going to get better there over time. So probably relatively, probably Glenmark might do better than others in the next 4 quarters.
The one stock we haven't spoken about is Sun Pharmaceuticals, and the reaction was pretty stark when that news about Organon came through. In your opinion, would this be a positive deal if it materialized?
So two aspects about the deal. So one that the street doesn't like about the deal is it's going to kind of significantly enhance the leverage. So probably the leverage in Sun Pharma balance sheet would go to 2.5x of the current. So 2.5x EBITDA would be the leverage post deal. Second, the growth would get diluted for Sun Pharma. So if the street was anticipating 10 to 15% growth, post the deal, the growth would probably be around 7-8%. So this would translate into lower valuation multiple. But I think the current stock price largely factors most of these things. What it doesn't factor is the scale that Sun Pharma would achieve with Organon acquisition. Their innovative portfolio business would grow multifold post the deal.
Well, sometimes you need to bite off more than the street thinks you can chew. Maybe that's what is happening right now. Vishal, thank you so much for speaking with us. All right, going to the big story at this hour. Sources are telling NDTV Profit that banks are flagging fresh cybersecurity concerns linked to Anthropic's new AI model Mythos. Piyush joining in with more details. Piyush, what exactly are the concerns vis-a-vis Mythos? What could Mythos do that has stopped banks concerned and actually talking to the RBI about it?
Tamanna, that's right. Bankers and the RBI are equally spooked by the capabilities that Anthropic's new AI model Mythos has in terms of exploring the vulnerability in lenders' cybersecurity framework. Bankers say the new model may access internal tech processes, their internal bank data, internal operational processes can be breached because this model is trained to find out vulnerabilities across different global operating softwares. In fact, we understand the RBI is also speaking with global regulators, Bank of England, and a few other global regulators who are aware about this development, and Bank of Japan is also likely to hold a meeting over the risk that this particular model poses to their bankers' cybersecurity framework. RBI is also assessing risks that this framework could pose to our financial markets. Mythos is essentially developed by Anthropic AI, and it has been able to identify vulnerabilities in almost every major operating system, the oldest of which is a bug that reportedly existed for 27 years. So that is what is catching the attention of all the bankers, global regulators, and the fraternity, and there is likely a representation that will be made also to the government in this regard, Tamanna.
That important story to be tracking. Piyush, thanks so much for getting us those latest developments. Now, of course, this is going to be a moving story, and we'll get you updates. I'm sure Piyush will join us as soon as he has more on that. We have to slip into a very quick break. We'll get you the top trading strategies heading into the end of trade today, and possibly things that you can buy and sell tomorrow. So stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching India Market Close, and Indian markets still seeming pretty patchy. I mean, it's going to be maybe in some parts you have a Sensex expiry happening as well today, but apart from pharma and a smattering of stocks, nothing really is working. So that pain point continues. It's just a pharma story all through and through. Rajesh Palvia joining us this afternoon. He's SVP Technical and Derivatives Research at Axis Securities. Neeraj Diwan also with us. He's an independent market expert. Welcome to both of you. Rajesh, I'm going to come to you first. Are there opportunities that the Nifty is providing right now, you think? Or would you just stay a little bit on the sidelines till things clear up?
Yeah, hi, good afternoon. So, looking at the volatility in market and the broader market behavior, we believe there, yes, this volatility is giving you the opportunity to buy again in the decline, as Nifty has already run up around 8% in last couple of weeks. And some cool off action, some consolidation is likely to be there in this range only. Looking at the data setup, 24,100, 24,000 are having major put-based concentration at this juncture. So I think if we able to defend this level in this volatility, I think again we could see, pullback from those level. And once we able to take out about 24,400 zone, I think some short covering action can take Nifty further higher. But broad-based market is showing a good buying interest. Stock specific action is clearly there. Lot many stocks where we have already witnessed a breakout on the near term, short term charts. So where one can deploy trade till Nifty not manage to give breakout of the major supply zone of 24,400, 500 zone. So stock specific action is one can focus on at this juncture.
Got it. Okay, Neeraj, just a quick question to you, and good afternoon to you. The way that the pharmaceutical pack as a whole is moving, the suggestion is of obviously the defensive nature, but sector rotation taking place as well. Would you say that you should participate in this? Is there a stock that you like in the space?
Yeah, good afternoon. Yes, I think saw Glenmark numbers also came out today, so I think that also their numbers were better than what the street was expecting. So, there's definitely some buying. I think it's mostly because of value buying, because some of the stocks had corrected and were available at decent valuation. Cipla, for that matter, is one of the stocks I like, and I'm positive on DV's lab for the last 2-3 years, and that stock has been doing pretty well. So, I think that these are opportunities for a long-term investor. So if you are getting some stocks at a better price, especially in this pharma space, something to do with, companies like Cipla, DV Lab, I think I would say that one can participate.
A pocket of strength today is also the aerospace ancillary companies. And seemingly their up move today is driven by strong government push as well as rising global sourcing and renewed institutional interest. A lot of buy flows coming through seemingly. But there are challenges that remain. Let's go across to Sharad so that he can line things up for you and give you a sense of the pros and cons at this juncture.
Well, it's a very new and a unique sector. Most of the companies which have come for this IPO, it's just been last 2 to 3 odd years, but the market seems to giving a lot of premium to this segment, and this may be India's aerospace movement. But what are the key reasons for most of these stocks running across? Of course, the positive corporate developments have been coming in, a strong volume-based buying, and this is something which we have been seeing for the last 1 week for these stocks. A strong government push, which we already know, and HNI and institutional interest is remaining strong as well as in counter. Also, the segments which you should focus on is the defense, MRO and the precision manufacturing segment. This is where the strong interest is coming, and most of these companies which are in the listed space are actually in this segment. Now, two important announcements. Unimec Aerospace, they have acquired Hubel Bellows for 450 crore rupees. Largely, the deal has aided a lot of interest, especially in the acquisitions front. Another important announcement is coming in is Dynamit Tech has signed an MOU with Aerodata AG as well. So now that means we are having global partnerships also.
Also, let's look at what are the key industry numbers. The Boeing, they have sourced over $1 billion annually from over 325 Indian suppliers, and that's a very big market, and it's growing. Right now we have barely scratched the surface. Airbus also, almost $1 billion worth euros worth of procurement has happened last year, and also they are building C-295 military transport aircraft in India as well. That means the global players are showing trust in the Indian name. Now the government push, Defence Ministry is aiming almost 1.7 lakh crore turnover by 2025, and the export target is at around 35,000 crore rupees, and this has been largely achieved. Also, the aerospace parts manufacturing industry, that's expanding, and the target is to reach a $21.5 billion market by 2030. So these are important targets. And the stock, the run-up which we have seen from 26 lows, Dynamic Tech is up 45%. Let's look at the second stock which would be in focus apart from this, Unimec, that's up 41%. All these stocks are gaining in trade, and the other names also, Equus, that's stock is up 64%, and two other smaller names are there. This includes Azad Engineering as well as Sansera Engineering. All of these stocks giving returns of 43 to 49%. But there are some concerns also. Valuations have become sky high in this sector. A greater gestation period is there. That's what the management also spoke to us. And the receivables may be impacted going ahead, and more regulatory checks come in as we have global partners, and because of that there might be delays in global orders and JVs also. So if you're thinking of taking fresh positions, this might be an important point to ponder upon. But yes, the long-term story is really strong.
Interesting. Thank you for that, Sharad. And some of those companies, and actually aerospace mechanic is something that we talked about in the morning as well. Rajesh Palya, Neeraj Diwan with us. Neeraj, Unimec Aero, sorry. The fact is that new ideas is what is being hunted for. Are you seeing anything really cogent coming up in this ancillary aerospace sector, or some of the plays that are available over there?
Yeah, actually, this has been already in the talks for quite some time now, last few months. And the stocks have run up also. Valuation-wise, they're not that attractive. And, if they're old companies which are already into aerospace, whether you see the defense companies or you see companies like Axis Kit, which are into technology for aerospace, so these are companies which one can invest for a long term. In the shorter term, I don't see that if you invest today, if you're just investing for 9 months, 10 months, 1 year, you will not make that kind of a return. But if you're a long-term investor, 2 to 3 years, you should look at aerospace, defense, shipbuilding, these sectors where the long gestation period, projects, the order books are there, order books are huge, but it takes a long time for execution. But over 2 to 3 years, I think definitely there is money to be made there. But one has to be patient investor for these companies.
Okay. In the banking pack, there's one public sector bank that has taken it on the chin, and this is on the back of its numbers in the fourth quarter. It seems more than anything else that the core business has been the reason for the decline in the stock. Let's go across to Shivam. There's also an increase in provision, which seems to be a one-off. Shivam, what are the details to focus on here?
Well, yes, Union Bank has posted a weak set of numbers for quarter 4 FY26. Let's start with the net interest income, which has seen a decline of 1% on YOY basis to stand at 9,400 odd crores, and this has resulted in a decline in net interest margin by 12 basis points this quarter. If we take a look at the total provisions, that has also gone up by 3 times to 1,055 crores, and provision for NPAs has seen a surge of 80% to 423 crores. Now the CEO of the bank has said that they have made a proactive provision for 700 crores one-time provision in quarter 4, and credit cost has also seen an increase of 7 basis points this quarter, with other income which has aided in the profit. But this other income includes the income from the investments and treasuries, which are non-core operating activities income. The return on asset has seen a marginal uptick, while the asset quality has improved, though the slippages have gone up on quarter-on-quarter basis. Now on the guidance side, the company expects that the NIM will improve in FY27, and they are expecting to grow the loans and deposit over and above the industry average in FY27.
Union Bank was a bit of a dud there. And Neeraj, what did you make of the Union Bank numbers?
Yeah, there's definitely some disappointment in the numbers, but I would rather take this as an opportunity. Though the provisions have gone up, they've taken some proactive measures, providing, the one concern definitely is there that the net interest income has not really gone up. I think this may be a short-term phenomena according to my understanding, and the bank has been doing very well if you see last 5-6 quarters. So I think if there's a correction because of this particular result, I think that can be an opportunity for long-term investors.
You're saying that between private sector bank, which arguments have been made, they're at multi-year lows in terms of valuation multiples, and a public sector bank which has shown a deceleration in core income of about 1%. You're saying you still prefer the public sector bank?
I'm not saying I prefer the public sector bank, but I'm saying I'm positive on the public sector banks also. There are two reasons for that. One, they're sitting on a clean balance sheet. So if credit growth is going to pick up, they have the ability to come and lend with this kind of a clean balance sheet that they've not seen for so many years. And second is there's so much talk about increase in FDI and public sector banks. So that's something which is brewing in that front also, which can be positive for these banks. So if the stock's correct because of this particular bad result or some other news in the shorter term, I think one can accumulate over the next 15, 20 days, 1 month. You just get better prices.
Okay, Rajesh, I think it's a good time to get some BTST ideas as we're getting into a second down on closing, second consecutive trading session when you're going to close with losses. Where are you seeing the opportunities to buy? Anything that you'd recommend on a BTST?
Yeah, definitely. Stock specific action is there. So once there are two stocks where we are focusing for BTST. First one is AU Small Finance Bank. AU Bank managed to give breakout of previous swing high, and looking at the sustained buying action on a weekly chart, this third consecutive week where stock is making higher high low formation. Stock is almost trading at all-time high trajectory. So we believe that this stock has potential to extend gain, projecting target of 1080, 1090 in the continuation of this up move. On the downside, 1035 needs to keep as a stop loss. And the second stock where we are focusing is from the pharma space, that is Lupin. Stock is now negotiating with its multiple supply zone. Stock is comfortably holding above its 20-day moving average, and looking at the data, we believe that stock has potential to extend gain. We are projecting target of 2400 to 2420. On the downside, 2305 needs to keep as a stop loss.
Interestingly, there's a group of stocks that is bade aaram se beating the frontline companies because ye aaram ka mamla hai. I'm talking about hosiery stocks, and they're all buzzing in trade today on the back of summer demand. Let's go across to Mahima to find out what stocks we're talking about and what the context is. Mahima?
Alex, I really love the way you introduced that, but you're right. All of these hosiery stocks are buzzing away in trade today, and this has been the case since the past 1 month, interestingly, because Lux Industries, which is locked in upper circuit today, in the 1 month has given a return of around 88%, where we're seeing pressure in the markets. Some of these names are doing really well. Something like Rupa has also given a return of 38% in the past 1 month, and Dollar Industries has also gained around 30% in the past 1 month. Now, what's causing this rally? Probably on account of summer sales. The expectations would be that the summer sales will go up for all of these counters, and that is why we're seeing pre-buying coming in. Expectations of a good volume growth is also there, and that's why we're seeing overall buying in this counters. And plus, recent price hikes did take place in southern India for all of these innerwear products. Around 7% price hikes were taken, and the expectations are that this will follow through for other states and other areas as well, and that could probably lead to a top line growth coming in for all of these names. So these are the reasons as to why these stocks could be buzzing. Now, just to give viewers a perspective as to how sales growth, profit growth and valuations have been for these counters, sales growth for 3 years, CAGR for Lux Industries has been around 4%, but it's been a negative growth of 6% for Rupa and Company, and Dollar Industries it's been around 8%. But profit growth for Lux Industries has been around 4%, but negative for both Rupa and Company as well as Dollar Industries. A negative 24% for Rupa and for Dollar are a negative 16%. But valuations, are not at all bade aaram se, Alex, because PE for Lux Industries is as high as 47%. For Rupa, it's around 19 times, and for Dollar Industries, around 17 times. Considering the growth at which they've been growing, these valuations are most certainly not justified. So this is the overall view of how, of course, first why these stocks could be buzzing, and as to how things have fared fundamentally for them.
Mahima, I did not realize there's a seasonal push for hosiery stocks.
Yeah, so the expectations are that because of summer rising, a rise of demand for these products generally goes up. We've seen this earlier in last year as well, when a push came in for these counters. So that could be one of the reasons as to why they buzz.
Okay, interesting. Something I have not really realized. I think this is all season weather or season utility that you would have.
It's not optional, really. So.
I don't know. Neeraj, is this space something that you would look at?
Actually, Lux has almost doubled in the last few days. So it was attractive when you're getting it close to 1,900 just few days back. But now after it's run up so much, getting into these stocks at this price without a real, valuation comfort is a little difficult. They've run up. So you can, between the three, you can see maybe the Lux is expensive, other two are cheaper. But then we have to see actual results coming in. So either you buy these stocks at desperate valuations when they were lying low and no one was looking at them. But after it's run up so much, I think it's become a little difficult to get into them right now.
Fair enough. All right, Infosys, all eyes on Infosys. Numbers will come out shortly, but after markets close, Jasmeet, what's being penciled in?
Well, you're looking at an overall muted quarter for the company. If you look at revenue growth, we expect a flatter revenue growth. In terms of the CC growth, we're expecting a negative 0.2 to negative 1% of CC growth. But mind you all, this has, in this particular year, Infosys has not processed any negative CC so far. So this quarter will be something to watch out for. Apart from that, the brokerages have penciling in overall guidance in 2 to 4%, which is a key watch, something to watch out for. Given HCL Tech had already lowered their guidance, so Infosys is all the eyes on to check how the overall IT will perform going ahead. So guidance something to watch out for. When apart from the deal wins expected to be 2 to 2.5 billion. All in all, we do expect muted numbers, but the margin and the guidance remains a key thing to watch out for.
Yeah, Infosys taking a bit of a knock before those numbers actually pull up Infosys. And it's more of peer pressure. What IT faces is always peer pressure. Infosys intraday chart, please. Before we get into the closing, 2.5% down as we go in to the closing session and before the numbers come in. But the market's also over 200 points down. We've not held up on 24,200. That will be a bit of a disappointment.
And the breadth has worsened.
The breadth has also widened, no doubt about that. Let's pull up the Nifty heat map and see where that pain point has come in. Because we know pharma was doing okay, but on the losing side, and that's really where the story is. Trend deepening, about 5% down right now. Shriram Finance about 3.5% down. Tech Mahindra, Tata Motors PV, all your heavyweights actually doing pretty badly, as is SBI Life. So it's all round pain, I would say, with a few exceptions that are doing okay, Alex.
Yeah, I completely. And there are reasons why this is taking place. Even Trent, though the numbers were stellar, it's a stock that has gained 33% as of yesterday in the month of April, or 34% or thereabouts. So some money being taken off the table, as they say, sell the news. This is exactly what is panning out. For Tata Motors PV, for Mahindra and Mahindra, which by the way is off the low point of the day, we've been talking about this. The fact that steel prices have been going up, flat rolled steel, and this is going to be passed on eventually. If it doesn't get passed on, if there's a demand hit, then they're going to see margin pressure going forward as well. And the entire IT pack has been under tremendous pressure ever since HCL Tech came out. And there is uncertainty about the guidance for Infosys. So it's all par for the course. This, of course, is sector rotation taking place.
Yep, Geo Financials doing well. After that tie-up with Alliance, Adani Enterprises doing well, Adani Ports, Nestle. So you have a few of the heavyweights doing well, but not the ones that really have a huge index play. Let's pull up the sectoral heat map. We're just a couple of minutes, I think a minute or so away from closing. And apart from pharma, healthcare, it's all pretty bleak. Auto taking a real knock. Here's where things have worsened. Apart from maybe an M&M, etc. PSU banks also 2% down. Consumer durables, realty, across the board there's pain. And advanced decline ratio, as Alex was mentioning, has widened and worsened in the last 15-20 minutes or so, definitely, as we've gone into the closing session. There you have it. Let's look at the top gainers and losers on the broader markets before we close off for the day. I mean, Delta Corp, the numbers optically looked very bad, but there was a base effect hidden in there, and that stock about 20% up. DRL is on a hope and a prayer right now, or maybe the market knows something that we don't. Welspun Corp, data patterns are the other gainers.
Oracle did well as well.
Yes, IIFL Finance on Heard on the Street. If you're wondering what's happened to IIFL Finance, go back and listen to what Sumit Sarkar told you. Union Bank is disappointing numbers, likewise for Havells and as well. Good numbers, but higher expectations. And that's pretty much how we're closing up, far away from the 24,200 mark. Let's pull up where the Nifty has closed for the day. And that's going to be a bit of a pain point. And this is what we said today, between 24,100 and 24,200 is where you would expect some buying to come in. So we'll have to wait and watch what happens tomorrow as we close off the week.
I'm not terribly disappointed with this, and I know that you will see 2 days of cuts. But I think if this had not happened, I'd have been palpitating at the end of the week, because you need some money being taken off the table for there to be a healthy up move. And that buy on dip, I'd be curious to find out tomorrow morning whether that's still intact. And I think that's really the question to ask. I think to a certain extent, the mood is going to be set by what happens with Infi, and that's just a few minutes away, possibly, if not half an hour away. And you'll find all of that action right here on NDTV Profit.
Just want to add, if you still have Brent at above 100 tomorrow, that's going to spoil the party no matter what happens. I mean, that's a pain point that we will see. But watch out for Infosys and a lot more. The action continues on NDTV Profit, but that's all the time we have on India Market Closing. Thank you for watching. Market Express up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth. And
hello and welcome. You're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have really fared today. So viewers, the Lal Street ended a choppy session deep in the red as selling pressure dominated through the day. The Sensex has slipped over 800 points while the Nifty has closed below the 24,200 mark. Weak global cues and profit taking keep the investors cautious. And talking about the market red, so that has stayed weak today with most of the sectors ending in the red. Auto and PSU banks have led the decline amid selling pressure, while pockets of strength were seen in pharma and energy stocks, which helped the limit broader losses. And viewers, let's look at some key counters that were buzzing away in trade. First up, we have Union Bank of India. It has posted a 7% rise in fourth quarter profit, but the street wasn't impressed. Now, shares have slipped nearly 7% after core performance has disappointed. Now, net interest income has declined 1% year on year, while margins have narrowed sequentially. Higher provisions and rising credit costs have also weighed on the sentiment. While asset quality has improved and headline profit was aided by other income, and concerns around core earnings momentum continue to cloud the outlook. And let's look at some key brokerage notes. So brokerages are split on Havells after the latest quarter as growth visibility remains uneven. Citi has cut its target, flagging revenue misses across the segments and also rising competitive intensity in the cables and wires hurting the margins. Jefferies has stayed cautious, noting that cable traction and higher other income has masked the weakness in consumer products, while Lloyd has continued to post operating losses. And Macquarie has struck a more optimistic tone, pointing to margin surprises and strong brand positioning and even a diversified product mix, though near-term growth risks remain amid macro uncertainty. In fact, keeping with the brokerages, so they remain divided on trend after strong fourth quarter execution. Morgan Stanley has maintained its overweight stance, backing trend strategy of expanding the revenues through proximate markets. Citi stayed cautious, keeping a sell rating despite raising its target, flagging risk to margin sustainability after benefits from one-offs. Jefferies has acknowledged robust growth driven by store expansion and even operating leverage, but has warned that near-term demand and cost could really face pressure amid geopolitical uncertainty. So the focus remains on market, densification and even expansion into the smaller cities. And viewers, brokerages are staying cautious on Tech Mahindra despite largely in line, fourth quarter performance. Citi has maintained a sell rating, noting that while execution has been reasonable in a tough environment, current valuations already factor in the positives. And Jefferies has also reiterated an underperformed view, highlighting a profit miss due to forex losses, while strong deal wins and even an improving outlook for the communications vertical offer support. Premium valuations versus peers like Infosys limit the near-term upside. And the government clears the use of cleaner alternative fuels in aviation by allowing blending of synthetic hydrocarbons in jet fuel. Now, in simple terms, this opens the door for sustainable aviation fuel, or also called SAF, so to be officially used alongside conventional ATF. Now, SAF is made from waste oils and also farm residue that helps cut the aviation emissions, but also comes at a higher cost. So this move also creates fresh opportunities for sugar and ethanol linked players such as TruAlt Bioenergy and even Praj Industries as India moves towards greener aviation. Next counter in focus is G Vernova that has rallied sharply after posting strong results with shares jumping in global trade. The company has also raised its margin guidance, signaling improved operating performance. Management says that global demand remains strong and this is driven by continued investments in the power and energy transition. Let's look at some key brokerage notes again. Motilal Oswal has initiated coverage on Fujiyama Power Systems with a buy call betting on India's fast-growing rooftop solar market. And the brokerage is seeing Fujiyama as a strong integrated B2C play backed by wide distribution and even in-house manufacturing. Now, backward integration supports margins, while the shift towards lithium-ion products adds a key growth lever. So Motilal Oswal believes that this integrated platform helps drive wallet share and long-term profitability. Keeping with the brokerage notes, we have Morgan Stanley that is maintaining an overweight on SBI Life but trims its target price to around 2,340 rupees, also citing a miss in the new business value despite a beat on the operating profit. So the brokerage is seeing, group protection that has seen some pressure, but long-term growth guidance is staying intact. And Macquarie, meanwhile, maintains an outperform with a target of about 2,360 rupees, also highlighting steady performance and resilient core fundamentals. And it says that SBI Life's growth continues to outpace larger peers despite a mixed quarter. And here's next counter in focus is Oracle Financial Services that has posted a steady fourth quarter with a sharp improvement in margins lifting the bottom line. Now, revenue sees a mid-single-digit rise, and this is held by largely, by favorable currency movement. So the company has also reported a sequential rise in remaining performance obligations, pointing to improved revenue visibility ahead. Overall, margins and deal momentum stand out as key positives this quarter. And shares of Bharat Coking Coal has slid over 5% in today's session after the company has reported a sharp earnings decline for the March quarter. Quarter 4 net profit has plunged nearly 60% year-on-year to just 27 crore rupees and hurt by weak operating performance. So revenue has also fallen 15% to 3,282 crores rupees. So this sharp miss has raised concerns around volumes, cost pressures and also near-term operational recovery at the Coal India subsidiary. Next counter in focus is Camlin Fine Sciences. It has flagged improving momentum with vanillin volumes ramping up and also a stronger outlook lined up for the next financial year. So the company says that blends remain the core growth driver, also delivering double-digit growth despite temporary operational disruption. Management also guides for steady revenue growth and margin improvement, and this is supported by better utilization and also integration of recent acquisitions. So overall, visibility on volumes, margins and demand remains healthy. And here's hosiery stocks buzz in trade today with sharp gains seen across names like Lux, Rupa and even Dollar Industries. So the rally is driven by strong summer demand expectations and also hopes of better volume growth ahead. Recent price hikes in innerwear, especially in southern markets, are also expected to roll out across other regions. And that said, longer term growth and valuations remain mixed across the space, keeping stock specific action firmly in focus. And because the government has rejected reports suggesting an imminent hike in petrol and diesel prices. So this clarification comes after media reports citing a brokerage note flagged rising losses at oil marketing companies amid high crude prices. However, the Petroleum Ministry has said that there is no proposal under consideration to revise the fuel prices and even termed such reports misleading and panic creating. So this comes even as global crude prices are surging. And Tata Group owned Air India is reportedly evaluating a significant scale back in operations after posting losses of nearly 20,000 crore rupees in FY26. According to industry sources, the airline is assessing a 15 to 20% cut in its flight schedule with a smaller reduction likely at the group level. And if implemented, this could impact over 100 daily flights. So industry executives warn the move may tighten capacity and even push up the fares during the upcoming peak travel season. And Singapore Airlines is deepening its involvement in Air India amid the carrier's record losses. Now Sia, which holds a 25% stake in Air India, is expected to play a larger role in the turnaround strategy, including operational improvements, network planning, and also cost management. Now, this move comes as Air India reported significant losses in the December quarter, and this has been driven by high fuel cost and also integration challenges. And Singapore Airlines is leveraging its expertise to support Air India's transformation under the Tata Group. And because the government has notified the rules for the Online Gaming Act, with implementation set to begin from May 1st. And this new framework aims to regulate online real money gaming platforms, also ensure player protection and curb illegal betting activities. Key provisions include mandatory registration of platforms, age verification, and also responsible gaming measures. The rules also introduce a self-regulatory mechanism for the industry. Officials said that the move will bring transparency and also accountability to the fast-growing online gaming sector, while also safeguarding users from addiction and financial risks. And in a tragic news, Bikaji Foods International founder and chairman Shiv Ratan Agarwal has passed away at the age of 75. The veteran entrepreneur built the popular namkeen and sweets brand from a small shop in Bikaner, Rajasthan into a national player. Under his leadership, Bikaji grew into one of India's largest organized snack food companies with a strong presence across the country. The company has expressed deep sorrow and said that his vision and values will continue to guide the organization. And Amazon India has announced plans to invest over 2,800 crore rupees to enhance associate well-being and also strengthen its operations and network across the country. So the investment will focus on improving the working conditions, safety measures, and also training programs for its employees and delivery partners. And it will also support the expansion of its last mile delivery infrastructure and also technology upgrades. And viewers, India's manufacturing momentum has strengthened in April, with the HSBC PMI rising to 55.9 from 55.1 in March, and the reading indicates robust expansion in the sector, and this has been supported by higher new orders, increased production, and even improved business confidence. Now, input cost pressures have eased slightly, but output prices continue to rise, and the services PMI has also remained in expansion territory, pointing to broad-based economic activity. And economists noted that the data reflects resilience despite global headwinds, with domestic demand acting as the key driver. And HSBC has downgraded India to underweight from neutral, citing rising risks from the elevated oil prices and even geopolitical tensions in the Middle East. So the brokerage has said that the ongoing conflict could widen India's current account deficit and even push the inflation higher, putting pressure on the rupee and also monetary policy. So while India's strong domestic demand and structural reforms remain supportive, HSBC believes that the near-term outlook is clouded by external shocks. And India's rice exports has declined 7.5% to $11.53 billion in the financial year 2025-26, according to Commerce Ministry data. So this drop was mainly due to reduced shipments to major destinations, particularly in the Middle East. So exports in March alone has fallen 15.36% to $997.53 million. Shipments to key markets including Iran, UAE, Saudi Arabia and Oman were significantly impacted by the ongoing conflict. And Iran remains India's largest basmati rice export destination, and also disruptions in the region have affected the overall export performance. Because Tesla has significantly increased its capital expenditure plan to $25 billion, with a major focus on artificial intelligence and robotics. So the company aims to accelerate development of its Optimus humanoid robot and also enhance AI capabilities across its autonomous driving and manufacturing operations. Now, CEO Elon Musk has said that additional spending will support the long-term growth in these high-potential areas, and this move reflects Tesla's strategic shift towards becoming an AI and robotics powerhouse beyond its core electric vehicle business. Now let's look at some national news now, viewers. Millions of voters are casting their ballots today in two politically crucial states, West Bengal and Tamil Nadu. in elections being closely watched for early signals ahead of the national race. And in West Bengal, where the contest is at its most intense, polling is underway in over half, the assembly seats in the first phase, with turnout crossing 62% by early afternoon. And the BJP is mounting a strong challenge against Chief Minister Mamata Banerjee, who is seeking a rare fourth straight term. Meanwhile, Tamil Nadu is also voting in a single phase across all constituencies with more than 57 million voters eligible. And these polls form part of a wider electoral test for Prime Minister Narendra Modi's party. And US India's emerging artisanal cheese industry is beginning to make a mark on the global stage with a strong debut at the Mundial do Queijo do Brazil 2026. Now, Indian cheesemakers won 4 medals at the prestigious event, including a Super Gold, signaling growing international recognition. And this win comes as India's cheese market expands steadily, driven by urban consumption, premiumization, and even demand for value-added dairy products. While processed cheese still dominates the volumes, artisanal varieties are carving out a fast-growing niche, opening up export potential as global cheese consumption continues to rise. And a court in Nashik has denied interim relief to a TCS employee arrested in connection with the sexual harassment and misconduct case at the company's Nashik facility. So the court has cited that the accused criminal, while rejecting the plea for anticipatory bail or even stay on the arrest, and the employee was one of several staffers named in the complaint. So the court's order means that the accused will remain in custody as the investigation continues, and TCS has maintained that it is cooperating fully with the authorities and also has initiated an internal probe. Viewers, the IMD has forecast a heat wave in parts of North India over the next few days. Now, temperatures are expected to rise significantly in Delhi, Punjab, Haryana, Rajasthan, and even Western Uttar Pradesh. And at the same time, heavy rainfall is likely in the northeast, including Assam, Meghalaya, and Arunachal Pradesh. West Bengal and Odisha may see mixed weather with thunderstorms and rain in some areas. The IMD has advised people in the northern plains to take precautions against the rising heat, while also issuing alerts for possible floodings in the northeast. And as the US-India trade talks, come to an end today, US Trade Representative Jamieson Greer has described India as a tough nut to crack, highlighting significant hurdles in the agriculture sector. So Greer has pointed out that India maintains high tariffs and restrictive policies on several agricultural products, making market access challenging for US exporters. And he has noted that while progress has been made in other areas, agriculture remains a major sticking point. And Greer has emphasized that the US is seeking a more balanced and reciprocal trade relationship with India. And viewers, Iran has announced it is halting peace talks with United States and has listed several reasons for the decision. Now, Tehran has accused President Donald Trump of hypocrisy, citing continued US support for Israeli strikes on Iranian targets and even failure to honor ceasefire commitments. And Iranian officials have said that the US demands were one-sided and did not address core issues such as sanctions relief and security guarantees. The move comes after weeks of indirect negotiations mediated by third parties, and the halt in talks has raised concerns about further escalation in the region and also potential renewed disruptions to the global oil supplies through the Strait of Hormuz. And the US military has intercepted 2 Iranian tankers near the coast of India and Malaysia amid the ongoing blockade of the Strait of Hormuz. Reports indicate that the tankers were carrying Iranian crude oil and were stopped by US naval forces as part of efforts to enforce sanctions and also maintain pressure on Iran. Now, Indian and Malaysian authorities are monitoring the situation closely. The blockade of the Strait of Hormuz has already caused significant disruptions to the global oil supplies, and even, these interceptions could further escalate tensions in the region. And here's Lebanese journalist Amal Khalil was killed in an Israeli airstrike in southern Lebanon, while covering the developments, and another journalist photographer, Zainab Faraj, was injured in the same incident after the two reportedly took shelter inside a nearby house that was later struck. Now, rescue efforts were also delayed, with Lebanese authorities alleging obstruction during the operation. The incident has drawn sharp criticism from Lebanon's government, which has termed the attack a possible war crime. And the US Navy's top civilian official secretary, John Fallon, has stepped down with immediate effect amid escalating tensions in the Iran conflict and also the ongoing Strait of Hormuz blockade. Now, the Pentagon has said that Navy Under Secretary Hung Kao will also take over as acting chief. Now, the leadership change comes at a critical time with the US Navy overseeing one of its largest maritime operations in decades as it enforces the blockade on Iranian-linked shipping. And debate around the H-1B visa program has intensified after a new immigration bill was introduced in the U.S. House of Representatives. Now, the proposal tabled by Congressman Ellie Crane and backed by a group of Republicans calls for a 3-year halt on issuing new H-1B visas. Now, named the End H-1B Visa Abuse Act of 2026, the bill also proposes cutting the annual visa cap from 65,000 to 25,000 and even removing the existing exemptions. So for now, the proposal has only been introduced and even faces a long legislative process before it can really become a law. And US President Donald Trump has drawn criticism after resharing a social media post that used derogatory language against immigrants from India and China. Now, the post has surfaced as the US Supreme Court indicated it is likely to strike down his executive order aimed at ending automatic birthright citizenship. Now, the reshared message, originally written by a US radio host, attacked immigrants in strong terms while also arguing against current citizenship rules. And this episode adds to tensions around the immigration rhetoric as the court weighs the constitutional challenge. And viewers, a geopolitical twist has entered football's biggest tournament with the senior US envoy suggesting that Italy replace Iran at the 2026 FIFA World Cup. So Paolo, aligned with US President Donald Trump, confirmed the Financial Times that he has raised the idea with both Trump and FIFA president, and the proposal is being seen less as a sporting decision and more of a diplomatic move. And this is aimed at repairing the strained ties between Trump and Italian Prime Minister Giorgia Meloni amid the recent political frictions. And US Delhi Capitals are set to receive a major boost with Michelle Stark cleared by Cricket Australia to return for IPL 2026, and the left arm pacer has completed his rehabilitation after shoulder and elbow issues and is also expected to link up with the DC squad shortly. So Stark is targeting a return in Delhi's clash against Rajasthan Royals on May 1st, with Delhi currently placed 5th and struggling for power play breakthroughs. Stark's return could also add much needed sharpness to their bowling attack. And viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.